Good morning, everyone. Good morning. Welcome back to the second day of the Innovation Summit. My name's Henry Holden, and I'll be telling you what's going on today. So the setup is just like yesterday. We are being live streamed and recorded, and the recording will be available on the BIS website and on YouTube. So also, as for yesterday, the agenda is very, very packed. And so we won't be taking audience questions, but if you're here in Basel, outside, you can talk to the speakers, you can talk to the panelists, you can ask them questions. And there will be breaks, and there will be coffee, and there will be food outside, and you'll need the breaks because it is a long day. We go until nearly 6 p.m. today. And so we start with more AI, and then this afternoon we move on to collaboration and cross-border. So, let's get started. Please allow me to introduce Pablo Hernandez de Cos, General Manager of the BIS, formerly Governor of the Bank of Spain, member of the ECB Governing Council, and Chair of the Basel Committee on Banking Supervision. That's just a snapshot of the CV, but you'll agree it's quite a lot. So anyway, for the first keynote of the day, Pablo, please, the floor is yours.
Good morning, everybody, and welcome back to this second day of our Innovation Summit. I hope that after a very interesting day, we have already convinced you, if you were not already, that this is a unique platform for the central bankers to share experiences about how technology is evolving, but perhaps even more important, how this technology is affecting us and how we have to adapt to this new environment. Of course, we all know among the different technological developments that are out there, AI is probably one of the most potentially transformative. And this is why we have included as well a key topic in the agenda of the summit, this conversation on artificial intelligence. And it will be, as you perfectly know, the focus of this first morning, and then later, of course, probably the conversation will continue. So what I will try to do is to have some introductory remarks, brief introductory remarks to basically set the scene. My objective is basically to underline what are the opportunities, also the challenges. So basically what I will be saying is the obvious, and then I will let Hyun and the other speakers to be perhaps more provocative on their remarks. The starting point, I think, is obvious. Recent breakthroughs in large language models and generative AI, along, of course, very important, their adoption by different industries, is poised to have a profound effect on the financial system, on the economy, and of course also on the central banking community. And you can even claim that these new developments on which we are seeing that the use of AI agents to manage computer systems could make this even more transformative. So what should the central banking community, how we should react to these developments is, of course, that we cannot afford to stand still and we have to adapt. And this is precisely the objective of the Innovation Hub, and more generally of the BIS, is to basically help the central banking community to do this transformative journey. So let me start where we see the opportunities, and then I will move to the challenges. On the opportunities, the Hub, and again, more generally, the institution, the BIS, have identified 4 key areas on which AI has the potential to enhance the work of central banks, and I will go through them briefly. So the first one is information collection. Central banks, you know perfectly, collect data, and they collect data from a large variety of sources to both internal use, but also we are providers to the external world. For example, there are many central banks who are responsible for the provision to the outside world of financial data, no? And financial accounts more in general. And we also know that securing high quality data for economic analysis and statistical compilation remains a very significant challenge. And there are many challenges here that include cleaning the data, identifying outliers, erroneous entries, ensuring representativeness, and of course also even linking new observations to establish series. And we also know that the AI offers already a transformative solution enabling central banks to process vast amounts of data more efficiently and uncover patterns or anomalies that might otherwise got unnoticed. So we have several projects at the Hub that are helping the central banks community on this endeavor of incorporating AI into information collection in the statistical function of central banks. But let me mention only one of them, which is Project Gaia, which is basically showing how AI can enhance information collection by analyzing publicly available corporate reports through large language models that in the end generate indicators that can be monitored to identify compliance with a very different type of risk. And this is only one example. Second, of course, very important for the central banking community is macroeconomic analysis and also financial analysis. And here we can also say that AI is revolutionizing how central banks analyze economic data and inform policy decisions. And again, let me just take one example, which is nowcasting, which we know is an important part of the analysis that it is done in all central banks to basically discover how the economy is doing in real time. Okay? So traditional nowcasting models rely on a limited set of indicators. And we also know, again, that the AI can enhance these models by processing vast amounts of high-frequency data from diverse sources, such as, for example, social media, satellite imagery, and online retail platforms. And these tools empower central banks to track, for example, inflation dynamics, monitor economic trends, and forecast impacts with unprecedented accuracy. And again, let me put some example of projects at the Hub that are focused on this particular topic. So projects, for example, NEO and Spectrum, that again illustrate the potential of AI. They use alternative data sources such as road traffic, cargo transport, and air pollution, and advanced, of course, machine learning techniques to help central banks construct timely economic indicators, providing insights that, well, to a great extent, were previously out of reach. Third field on which AI is also being very transformative for the central banks is payment systems, and in particular the oversight of the payment systems. Again, it's obvious in this room that well-functioning payment systems underpin the stability of the financial system, yet the sheer volume of transaction data, often highly skewed, we know, makes it hard to separate anomalous payments from routine flows. So, and again, tools are being deployed, AI tools, to monitor these systems for anomalies and risk. And again, let me mention two projects of the Innovation Hub that precisely are helping the central banking community on this endeavor, Project Aurora and Hertha, which are experimenting with tools that support pattern recognition and pattern detection and cross-border learning on illicit activities such as money laundering, all while very important, I will come back to this issue later, preserving data privacy. And then finally is supervision. Supervision, again, face I would say, the daunting task of analyzing vast amounts of numerical but also textual data to identify risk and vulnerabilities in financial institutions. And of course, we know that manually mining this trove of data for actionable insights is labor-intensive, and as volumes grow, it verges also almost impossible, no, in some cases. So how AI could be invaluable, and let me use again the example of some of the projects of the Hub, and in particular this time Ellipse and AISE, which showcase how AI can enhance supervisory processes. In the case of Ellipse, it uses machine learning to match entities in news reports with supervisory watch list, providing real-time alerts on emerging risk. And in the case of AISE, it explores the use of AI agents to support supervisors in their tasks, enabling them to identify vulnerabilities more efficiently and supervise a broader range of entities. So the opportunities presented by AI are very exciting, but of course, and here as central bankers, we have to focus as well on the challenges. And I would say that even our main role should be precisely to emphasize that there are many challenges in order not only on the potential impact of AI on the economy, but also on the use of AI by supervisors and central banks. So let me mention at least 4 key areas that we have already identified on which these challenges are very evident. The first one, very important for central banks, is explainability, or the lack of explainability of these models. We know that many AI models function as black boxes, make it challenging to understand how decisions are made. And it's not only that, we also know that, in particular, generative AI models, they are further compounded by the risk of hallucinations, where a model presents factually incorrect answers with apparent confidence. Let me emphasize that this is a key problem for the central banking community, because in the end, this lack of transparency on the one hand, but errors on the other, can undermine not only the trust that we may have on the tools, but of course on the decisions that are taken through the use of these tools. And again, I think it's a serious concern for central banks because, as we all know, trust is a foundational element of the central banking community. Again, let me also mention that we are trying also to help the central banking community on trying to overcome the problems related to explainability. And here I should mention a Project NOR, which is experimenting precisely with tools to evaluate AI models' transparency and explainability. Second challenge is related to data quality and privacy. AI models are only as good as the data they are trained on, making it critical to address biases in data and, of course, also ensure they are representative and high quality. And, of course, we also know that central banks must adopt robust privacy-preserving technologies to manage personal, of course, but also more in general sensitive data. And protecting data privacy is essential for maintaining, again, the trust on which the central banks are founded. And more broadly here, of course, what we need is strong governance frameworks that are able to manage the data and also the algorithms that are behind the use of the data. Third challenge is related to operational issues. One which is, of course, not only an issue for central banks, but more in general for the users, is basically that AI revives concerns about dependence on a handful of external providers. Heavy reliance on a small set of vendors increases vulnerability in general, but in particular it also increases vulnerability related to cyber attacks. AI not only amplifies existing cyber risks, but also introduces new ones. We know that it has the potential to enhance the hackers' capabilities. And of course, we know how damaging this could be in terms of impairing central banks' operations and by extension their ability to fulfill their mandates. And then finally, let me also mention some more pure internal challenges for central banks, which are those related to organizational readiness. Effectively using AI requires rethinking how central banks operate, and this includes attracting new talent. We know how difficult this is, upskilling current employees, and developing more agile internal processes. And again, at the same time, these new processes, must be complemented by appropriate control structures to mitigate risks effectively. So I'm not going to enter into how we can face these challenges. This will be the task of Hyun and the rest of the speakers. But at least let me allow me to mention one key aspect that we think is absolutely critical for the central banking community to deal with these challenges. It was emphasized yesterday several times, no single institution can tackle these challenges alone. Dealing with these challenges requires the pooling, and here the important word is pooling of resources and experience to leverage synergies. In other words, cooperation is absolutely critical. Cooperation can help alleviate resource constraints that we know is an important matter in all central banks. It can also support staff training. It can also enhance the efficiency and accessibility of AI applications. In other words, coming together to form a community of practice to share knowledge, data, best practices, and AI tools seems to be the best way forward. And of course, this is music to our ears, to the BIS, because precisely the BIS is here to help you in this endeavor, to try to force you, if you allow me, to cooperate, and be sure that we will be doing this this will be absolutely our main objective for the following years. And of course, a good example is this Innovation Summit, on which we've tried to bring together central bankers, regulators, academics, and technology and financial leaders in order to support the central bank to identify the opportunities, but also to deal with the challenges. So with this, I'm done. Some high expectations for the next panel. So let me again welcome you to the second day of the summit. Let me also thank you for being here in Basel with us. And of course, let me also wish you a very productive and inspiring day. Thanks a lot.
Thank you so much, Pablo. And I feel like I don't really need to introduce the next panel now. But I will nonetheless. So please let me introduce Rashad Kassim, Deputy Governor of the South African Reserve Bank, Peter Gallagher, the Reserve Bank of Australia's Chief Representative in London, Lewis Leo, Chief AI Officer, Co-founder and CEO of Twin One AI, Hatis Karahan, Deputy Governor of the Central Bank of the Republic of Turkey, and moderating the panel is Hyun Song Shin. Hyun Song Shin is the economic advisor and head of the Monetary and Economic Department at the BIS. He's a former professor at Princeton, Oxford, and the LSE. And useful context for this event, at least, he's played a key role, and that's understating it, in shaping the BIS agenda on digital innovation, and he co-led the launch of the BIS Innovation Hub in 2019, serving as its interim head. So, Hyun, the floor is yours.
Thank you very much, Henry. And thanks for the rather forbidding introduction. It's very kind. I'm Hyun Song Shin. I lead the economics work here at the BIS, and AI is very much part of our economics portfolio. And I'll say a little bit more about the BIS shortly. But we've got a terrific panel to follow up on Pablo's, I think, very good overview of both the use cases and the challenges that face central banks as they look to using AI. We dealt with this in our annual economic report a couple of years ago. Actually, it was last year. But things are so moving so fast. It seems longer ago than that. And maybe I can come back to this. But let me introduce the panel. I think this is a very, very well qualified panel to follow Pablo's remarks. Peter Gallagher, he's the chief representative for the Reserve Bank of Australia. He's based in London, but we see him during the bi-monthly meetings. He's an economist by training, but he's been in financial markets, and he spent a long time in the payments area. So he's very familiar with both the technology and all the policy issues, especially around data governance and the inference problems. And Rashad Kassim, very old friend of the BIS. He's been through all the key areas in the South African Reserve Bank. He's the deputy governor, among other things, in charge of the international area. And in that context, he is leading the G20 presidency from the central banking side. as the president of holding the presidency of the G20 this year. And needless to say, AI is occupying a very key role in the agenda of the G20. And Luis Liu, very welcome to this event. He's the odd one out because he's not a central banker, but has tremendous insights from the private sector. You'll see that many of the issues that he's going to be raising are of first order importance. And last but not least, Hatice Karahan, Deputy Governor of the Central Bank of Turkey. We see her, of course, at the bi-monthlies. Again, she has a very, very broad background in terms of the economics, but in particular in this area on data and AI. Now, in the annual economic report chapter that we published last year, what we noted was actually if you lift the bonnet and just and look into these models, how they work is essentially matrix algebra. So they're very good at imposing structure on unstructured data. And the transform architecture, which is the basis of the large language models, it's basically trying to impose some structure on words. And depending on where the word appears, in which context, it's actually a different vector in the mathematical space. So the word bond could be close to fixed income security in some uses, or it could be family ties in other contexts, or it could be martini if it's James Bond. So it's a very, very different way of actually imposing structure. And just as guessing the next word in a sentence is a task that is performed very well by these models, forecasting actually and nowcasting also turns out to be an extremely good field for the application. So just like guessing the next word in a given context is very amenable to LLMs, guessing the next realization of a statistical series within the context of what else is going on in the economy also turns out to be something that's very amenable. And that's saying pattern recognition is very important in the case of anti-money laundering and the know your customer type of safeguards as well. But having said all of this, of course, there are big challenges. And in particular, how much can we really ensure privacy of data? And as Pablo mentioned, how can we really ensure explainability? Do we really know how these things work? To some extent, you don't care, but that's a very different approach from the way that economists normally approach a problem. So when it's a problem of forecasting, we do want to conduct some inference as well as simply trying to guess correctly the next realization. And inference really is about the structure of the model. And I guess with privacy in particular and cyber risk, I think there is a very, very big set of questions on how much can we really rely on the privacy preserving techniques that are out there. Because we know that there are ways of getting around some of these cryptographic techniques. And cyber criminals are very adept at jailbreaks and other tools. So there may be some additional layers of safeguards that we may have to impose. So let me start with a question for the panel, which is about the use cases, and in particular, how AI is used in their central bank. And in the case of Luis, I will ask you a slightly related question. And the RBA is, of course, not only is it a very far-sighted and leading central bank in this area. You may have seen that Michelle Bullock was appointed as the chair of the Irving Fisher Committee, and that happened over the weekend. And in that context, she'll be really leading a lot of the cooperative activities in this area. And needless to say, Peter's going to be a key support for those activities as well. So let me turn to you first, Peter, and ask you what kind of use cases that is already happening at the RBA. What do you envisage, and what is your vision in this area?
Thanks, Ewan. We've seen AI become pervasive throughout the financial sector over the past few years. We wrote about this in our financial stability review about a year ago, and since then we've just continued to see rollout and more broad usage. And the use of AI is really quite pervasive and becoming quite fundamental to the way that the financial sector operates these days. It's really important in order to make sure that operational efficiency is kept up to speed. Risk management practices now are starting to rely on it. We know that banks rely on reg tech technologies to help them with their regulation and supervision requirements. And for customers, we can always see that personalised services are becoming more AI generated. We're seeing faster transactions, more accurate transactions, and of course the fraud controls that we're seeing run out are very important as well. And the more common applications that we see are in things like credit applications and loan applications. We see trade execution increasingly rely on real-time data coming in, put against historical patterns. We're also seeing AML, as you've mentioned, become standard practice to do pattern recognition and try to identify where there are frauds coming. In the RBA, most of our focus has been on improving our internal operational efficiency. And what we've done in particular is tried to look at carefully how we can use our own internal data and apply some of these techniques to what we do internally. So we've developed a range of targeted internal chatbots. And one of the chatbots we have is our analytical chatbot. We use it so that analysts can ask policy-relevant questions of our full history of internal analytical work that we have published internally but not published externally. So they can use that to understand how others before them have addressed various analytical questions that they have to tackle and make sure they're not reinventing the wheel. We've got a corporate policy chatbot so that people, particularly as you get new staff come into the institution, there are a whole range of rules and regulations that they have to follow, and this assists them in being able to navigate their way through the rules of the institution. We've also got a communications chatbot, and the staff use that to help them with drafting things like emails, to use letter templates and other sort of templates that we have developed so that we get a standardised corporate feel to the way that we produce our documents. And we also have a project management tool. For those of you who've had to do a project, there are endless forms and processes you have to go through. So the chatbot helps people with rolling that out as well. As well as that, we've got a business liaison tool, which we've published a paper about it only a couple of weeks ago. Like many central banks, we go out and we speak to individual firms, and we've got a build-up of information notes, 23 years worth of information, where we've captured the interview information. This tool enables us to really start to draw out for the first time some of the tone in the conversations, some of the uncertainties that we've seen in the conversation, and some of the trends that build up over time. And so it's been really helpful to give us a much fuller sense of that qualitative data that we've captured over the years. As well as that, of course, like many of you, we use AI for coding support. We have IT developers, but we also have a big team of business coders, and they use languages like R to interrogate the data, to draw their graphs and do their statistical analysis. So this is used to help them write the code, help them debug the code, help them test the code and make sure that's all strong. And finally, we also have a tool which uses machine learning to ingest the vast amounts of archive information that we have in the bank. We've got We're a relatively young institution compared to many here. We've got 200 years worth of information which sits on shelves, and in fact there's nearly 5 kilometres worth of hard copy sitting on shelves, and the machines ingest this, and they can even read most of the handwriting, although I'm sure some of the handwriting is quite challenging, but they ingest it, and we can now start to interrogate it, and we're publishing it on our website, so that's very good. Obviously, all of our analysts are also using AI in their analytical work, and they're looking very carefully, trying to draw inferences from the information that's out in the public domain. We're a little bit cautious on how we're actually applying that and putting that into production. We've got very carefully protected areas where analysts can go and do their experiments. But we're very conscious that when it comes to sensitive areas such as policy and financial oversight, we have to be careful. Developing those models is very resource intensive, and there's quite a shortage of well-maintained, broad, reliable data sets that we can actually use to train the models. So we're treading carefully in that area, and most of our focus in production is on the efficiency side.
Very good. Thank you, Peter. Rasha, can I turn to you and ask you the same question?
Yeah. So I'm going to twist your question a bit, because I don't think I can match Peter in use cases. We have some interesting use cases, like, for example, imagery of construction trucks to kind of assess GDP growth and so on. I guess I do want to kind of ask a more basic question, and that is that what is the dilemma of a central bank who's sitting there thinking about strategy and has to confront the issue of AI? And I think that, in the SARB, like everything else, it is totally wrong to compare AI to fintech and CBDC. It's a different level, scale, and so on. But one of the big things we're worried about is the cost of inaction, right? What is the price you pay for inaction? And in so doing, I think that cost for inaction was greater when you worry about what it means to the macro financial system than what you worry about how you can use it in your operations as an organization. And I think that has been our dilemma in terms of how we're framing the AI issue. Now, I guess another facet to a central bank is that at one level you're a normal, complex corporate institution. You have staff, whether you are sitting in IT, whether you're sitting in HR. There's an NBR study from 2 Stanford professors who argues that, there's some staff in a central bank who would find AI an augmentation to their work. Others would be threatened by it. So at one level, there's, your challenges are no different to a usual corporation. But at another level, you are a public institution. You're a public good institution, and there you have the big challenge of regulation, of defending the financial system. Now, I think that's where. So in our case, there are 2 sides. So one is that we have use cases, and the use cases, if you read a lot of reports, are pretty similar. They're in the area of nowcasting, they're in the area of communication, in the area of payments, and so on. I think that the question that we as central banks have to focus on is how good are our financial stability vehicles of financial stability committees in really taking on board the challenge of AI. And I kind of like, I like the paradigm. Some of you may disagree with of John Danielson, the LSE professor's work a lot. Basically says the dilemma at the macro level that central banks face is that is the defender's dilemma. The attackers, only need to find a single vulnerability, whereas the defenders the central bank in some respects and the financial regulation have to monitor, the entire system. So I'm throwing out the problem rather than giving you an eloquent set of use cases. But in their end, we are in determining the use cases. There are other issues, budgets, competing budgets. Because you don't see the immediate benefits of AI, there's resistance to it. So how do you kind of do this? In the SARB, the first thing we did is the first building block to AI is establish an AI policy framework, which I think many central banks have done some quick chat GTP search while we were listening to the general manager's very interesting speech. And one of the things that is clear to me is that once you set the framework, the ethics, the budget must be of determined value, you then get into a series of interesting use cases. But let me leave it there. Thank you.
Thank you very much, Rashad. I think you've laid out the issues very well. So, Luis, I'm going to skip you and go to the central bankers first, actually, if I may, but we'll come back to you shortly. So I think it's really the same question to you. I think, CBRT is really analytically very, very strong. And I know that there are lots of use cases there. So give us a sense of what's going on.
Sure, thank you, Hyun. So central banking is a complex system, much like the human body. And to keep the system resilient, supporting the vital functions highly matters. So what are those? I have a simple framework based on 3 pillars, which has a memory-friendly setup. So in this framework, the first one is mind. And I use the mind metaphor for macroeconomic insights and data. In other words, deriving deep economic understanding with enriched data. The second pillar of the framework is Pulse, and Pulse is all about payments, unusual leaks, and security, because it's very important to monitor the heartbeat of payment systems. And the third pillar is CORE, and CORE stands for coordination and efficiency, the operational backbone for a central bank for ensuring smooth, reliable, and efficient internal operations. And at the CBRT, we take advantage of various fields of artificial intelligence to strengthen these pillars. And let me give some specific examples now. As Rashad mentioned, most use cases sound similar, but I guess it's still good to share them because we inspire each other when we hear about them. So to start with the mind pillar, we are really excited about integrating the complex algorithms of artificial intelligence into our analyses. And one related work here is for the measurement of firms' credit risks. By using an extensive data sets, our researchers have applied sophisticated machine learning algorithms to predict which loans might default. And they obtained better results, better outcomes, predictions compared to those produced by traditional models. We also make use of AI in selecting the best models that will deliver the optimal choice among a very diverse set of competing models, right? And one good example is the models for nowcasting GDP that our research department has developed over the years. And one example for data, we have an exciting initiative that will build upon another exciting initiative. So first, let me tell you the underlying one. On a daily basis, we collect for 30,000 European article numbers, EANs, from like 20,000 grocery stores nationwide. And this is quite big data. But how to use it effectively, right? We took this big data and processed it through machine learning and to match each EAN with a COICOP code. And voila, we generated a food price index that lets us track food inflation day by day based on this specific index. Now let me continue with the second pillar after mind, pulse. We need to monitor the pulse to ensure a steady, stable flow in the system, and therefore integrating AI into the oversight of payments is a great opportunity to achieve real-time monitoring. And one key project we have in this area focuses on potential anomalies within our instant payment system, FAST, which currently processes roughly 50 million messages per day. And here we are developing advanced tools to detect unusual transactions and transaction patterns that conventional monitoring systems may not capture. And lastly, the third pillar, core. Institutional coordination and efficiency can now be, those needs can now be successfully addressed by AI, as mentioned before. And we have various projects in this area, but for the sake of time, I'm going to mention only one. The project called Central Assistant, which is a generative AI-powered assistant designed with data privacy protection. It offers our staff a range of capabilities, including text processing and document summarization, along with some customized tasks. And with the core initiatives, we aim to receive two big benefits: saving resources and raising the quality of our outputs. By the way, these three pillars are not mutually exclusive. All of them are crucial for driving innovation and efficiency together. Thank you.
Thank you very much, Atis. I think this way of classifying and organizing the work, I think, is really quite inspiring. And I guess with core, this is something that applies to institutions more generally. But I think you're first to on data use and on the oversight of the payment system. This is very much a public policy task, very much in the domain of central banks. So Luis, you're the co-founder and CEO of Twin AI,
Yeah.
Twin One AI, and also the CEO of Eigen Technologies, very much in the financial sphere. Why don't you start with some introduction of what what you're doing, and then I think we can put the discussion into a broader context.
Of course, thank you. Yeah, so I think I want to talk a little bit about Eigen, which I was acquired last year, but it really was, we talk a lot about one of the fundamental uses of AI around sort of data collection for central banks. We were at one of the very first players in the private sector. So Eigen was a little bit early. We were very early in the AI space. It was founded almost 10 years ago. We were extracting data and transforming financial documents, so these are loan documents, derivatives contracts, into structured usable data. Now, if you think about it, a credit agreement or an ISDA or whatever, a CLO, at the end of the day, these are human languages that oftentimes need to be mapped onto some kind of data structure to perform some kind of operation. So the first client Eigen ever had was Goldman Sachs. Actually, it was pretty amazing to have as a first client. And we helped Goldman comply with Dodd-Frank. So following the financial crisis, Dodd-Frank came about. And one of the specific parts of Dodd-Frank is QFC, Qualified Financial Contracts. It required every major American bank to basically report on a 24-hour basis, first the back book of all these financial contracts, and then on an ongoing basis, on a 24-hour basis, certain legal sort of positions in the contracts, right? So things like cross default, things like credit support providers, eligible collateral. These information allowed the Federal Reserve and FDIC to predict what happens if there's something wrong with a bank, like a default here. How does it impact the rest of the system? So this was the core of a part of Dodd-Frank. And during this time, this was back in 2016, 2017, most of the banks would hire an army of lawyers, spend $200, $300 million to collect this piece of information. Goldman Sachs decided, AI has arrived, probably 10 years earlier than it did. And we were basically the first AI vendor to ever receive regulatory approval to basically process these contracts on a straight through processing basis. So at the end, once we were in production, 92% of all the answers we answered for Goldman, which the data got sent directly to the Federal Reserve and the FDIC, required no human intervention whatsoever. So but we were a little bit early. I think Goldman was very advanced in his thinking at the time in helping them comply with Dodd-Frank. I think a couple years later, LIBOR came about. LIBOR, as many of you remember, was a very painful process, $400 trillion worth of exposures. And what was really interesting about LIBOR is I think that was a crucial moment where some of the banks went from, we're not going to trust AI to review our contracts, to there's such a huge volume of contracts that need to be reviewed, we're going to try AI. I think LIBOR was almost a coming out moment for natural language processing, which is now generative AI, but back then it was called NLP, to really come to the forefront on how banks used AI to help comply with sort of regulatory change. I think in today's environment, obviously, things have shifted. We now go from traditional NLP, supervised NLP, to now generative AI. I think in there, you can process way more documents than just these financial contracts. You have a way wider range of documents that you can process: emails, market surveillance, et cetera. And I think the three things I think from a central banker perspective to be aware of as we're thinking about the banks that you regulate. Number one is, you're going to get a tremendous, much higher degree of transparency coming out of these banks because you can, right? AI has that ability to be everywhere. The second point is liquidity. So one thing we realized is that banks that used NLP to digitize documents and be able to package data in sort of, for example, say the secondary loan market, saw slightly higher prices because they were able to provide this data for due diligence purposes. And finally, cost. The cost of regulation for banks. I mean, a lot of banks complain. I was talking to the CIO of a GSIB just a couple days ago. He's saying how, they used to complain so much about regulatory burden of more and more regulation. Suddenly with AI, you can actually comply with regulation in a much cheaper fashion. And the final sort of point I'll say is this, right? I think there's a huge amount of thinking around sort of tokenization or smart contracts in financial assets. One really counterintuitive point is that now that AI can process human natural language in a more general way, I wonder, is there a sort of a tension between smart contracts and tokenization versus the fact that AI can just read human language? I think there's an interesting balance there. So that is to say, I think, some of these banks, you were using AI way before you may have thought. One cool fact I like to mention is that, of course, of IGAN, we from beginning to when I sold it last year, we processed over $100 trillion worth of financial contracts and exposure. A lot of that are derivatives, but I thought it was a pretty cool statement. But that's sort of hopefully some of the thinking, just going a little bit deeper into data collection for sort of regulatory compliance for banks.
Well, thank you very much, Louis. I think this really, epitomizes the fact that private financial institutions were using machine learning, artificial intelligence well before, many other use cases. So in a way, we are, going over some very familiar ground. But as you point out, if you combine this with tokenization, this actually, really opens up new possibilities as well. So I'm going to go to the second round, and maybe we can be a little bit quicker on this round. Want to discuss the role of governance and governance frameworks and how do we implement some of the safeguards that we've already mentioned. And I'm going to start with you again, Peter.
Thanks. Well, as a few speakers have already mentioned, the stakes are uniquely high for central banks at the moment. We've got these disruptive technologies that we're trying to apply while we're safeguarding the public interest, financial stability, operating critical infrastructure. And so the governance frameworks that we put in place need to be incredibly robust because we do need to get the balance right between innovating and between caution and public accountability. So for us, the first thing we've put in place is a series of guardrails, basic guardrails. As Hyun mentioned, we know that these models are probabilistic, they're not factual, so there are risks of hallucination, of ethical questions, and of course of cyber risks as well. And so we've been very careful to put in place boundaries for all of our staff to tell them where the AI can be used, what it can do, and how they need to go about validating the outputs from those AI tools, because especially in those sensitive areas like policy and financial oversight. We also follow the Australian government's ethical AI guidelines, and we make sure that we have safe places for experimentation to take place, so that if we do start getting some rogue results, they're not going to do any harm. We can fail safely. Second thing you need to do, of course, is just get some structures in place. So for us, we've chosen to put in place two key committees. We have an AI committee that's made up of senior staff, and they're responsible really for the strategic oversight of all of our AI initiatives. they think about whether those initiatives are aligned with our corporate goals, with our strategic goals. They look at whether they fit within our risk appetite, and make sure that they also fit in with our resourcing structures, because that's a problem obviously with all central banks. The second group we have is an AI advisory and assurance group. It's made up of experts that are drawn from all areas of the bank, and they really assess the various AI initiatives that come up and think about whether they are technically feasible to do, whether they meet our whether they're sound and secure, and whether they meet our ethical requirements and comply with our other regulations. But structures are one thing. Probably the more important area is people. So you have to invest heavily in making sure that your AI literacy is high throughout the institution. And we've been putting in place a lot of training programs for all of our staff. We have a major initiative called Prompting for Productivity, where we train everybody to get good prompts and the pitfalls of prompting AI tools and improving the output. But we also are acutely aware that the leaders need to be understanding of how AI works. Otherwise, how can they govern the rest of us? So there've been a lot of training inputs there. We've had a lot of thought leaders come from academia and from other areas who've talked to the leaders and explained to them the opportunities and the pitfalls, really to get a good sense of how all that works. And the final area I think that you need to have in place within your governance framework revolves around the data itself. These tools are only as good as the data that goes into them, and so you've got to make sure that you've got trusted, well-governed data. We spend a lot of time and effort valuing our data and making sure that we've built systems of knowledge management that we can put in place. And that, I think, puts us in a very good stead going forward. So I'll leave it there.
Very good, very good. Thank you, Peter. I think this is, all 3 points are really important. I think, as central banks, we have a especially important responsibility in this. And as you say, it's easy to fall into magical thinking with AI. You think that, this will just do its work, whatever, but the data is absolutely key. And I think the importance of the leadership, I think, is also very important. It's not something that just happens in your IT department. This is very much something that has to flow through the organization. Hatice, can I turn to you? I read with great interest your annual report, which really the details of the governance framework. And given your first intervention, I'm sure that this is something that you've also given a lot of thought to.
Yes, thank you. So to be mindful of our time, I'm going to just mention the risks and challenges we face here. So risk number 1 is about transparency and accountability. As Pablo wonderfully mentioned in his insightful speech, advanced AI models often operate as black boxes. Yes, there are some efforts for making AI more explainable, but it is still difficult to communicate how specific outputs are generated. And this lack of transparency raises accountability concerns. For example, who to blame if AI misfires? The coder, the model, or the central banker? What I mean is that delegating judgment to AI risks undermining human accountability, which is central to monetary authority. And risk number 2 for us is a critical one, as everyone recognizes, over-reliance on automation. As everyone knows, there is this hallucination problem, but if hallucination is not a bug, rather a feature of AI. And also there is this bias risk and the so-called over-alignment risk, meaning AI's tendency to please people. It can be sometimes quite manipulative indeed. So that's why, as policymakers, we maintain our skepticism toward fully automated processes powered by AI agents. Also, studies show that AI is particularly good at narrowly defined tasks. And this is another limitation considering the multidimensional needs of central banking. And thirdly, ethical and privacy considerations, as mentioned before, because central banks increasingly rely on sensitive data sets. And that's why protecting data is fundamental to sustain trust. So AI is not fully trustworthy yet, especially in an area like central banking, which bears huge responsibilities. That's why we have to take specific actions, measures, and ironically, human capital is needed to play a key role here. So in AI projects, for AI projects in central banks should be accompanied by human oversight, judgment, and output verification. And this means that the first and the most important thing to do for central banks is investing in human capital, aligning human capital with AI's benefits and risks. And in this framework, I believe a measured adoption seems to be the ideal approach for AI transition. And all this actually brings us to the governance issue, not only within our own central banks, but globally. We do need a framework to protect the integrity of AI use in money and regulation. Maybe just as Basel sought to protect the integrity of the financial system, we need a Basel-like framework for AI use in financial systems. I guess it's always inspiring to be in Basel. Yeah.
Excellent.
And as central bankers, we must lead by example in setting responsible AI standards and collaborate to ensure that AI systems serve the public interest. So if one asks me whether AI is becoming a fait accompli in central banking, I would say no. Yes, AI is a wonderful tool for informed decision making, but it cannot sideline the essential role of human judgment, which is central, or which truly matters in central banking.
Absolutely. Thank you very much, Atif.
Thank you.
Rashad, speaking of global governance, how are you envisaging the G20 task force?
Yeah, I guess G20 coming out of my ear, so I run the risk of talking more about G20 and AI. I guess, when we were preparing for the G20, there were two kind of narratives around AI. The one is, which is core to the G20, and that is the global growth discussion. What are the consequences of the unintended consequences of one country growing at the expense of the other, and so on. So one of the things we try to elevate at the G20 is, how does AI square up with the global growth challenges that we face? And I guess when we were preparing for the agenda, many of our colleagues in the African continent, the central banks we talked to, were very worried about the lag in productivity, the inability to use AI as easily as their counterparts in the developed countries. So that was, one angle. Now, to the extent that what the G20 does with this kind of thing, is a larger debate about what the function and purpose of the G20 is. The second part, obviously, is the work of the FSB, the Financial Stability Board, which is a product of the G20. And I suppose what we were asking ourselves is, what the G20 does is a few things. It can do, one of the outcomes which happened during the financial crisis or COVID is it transfers resources from rich to poor countries. That's the G20 at its best, but very difficult to achieve. I think that there are other more heroic, under the radar gains that the G20 could make, and that is setting of standards, elevating something to the agenda, global agenda, in the way that it harmonization of regulation. So I guess that's the area where we think the G20 has done work as an outcome of all the other areas in the financial, in the financial sector. Now, the G20 issues have been flagged since 2019 in various countries. What we hope to get out of our presidency is really sharing of information. Really, it sounds very trite, but I think that, for example, the FSB is releasing a document very soon on how do countries adopt AI. Ultimately, what happens is, how do you as a national capital take what you gain from the G20 debate and apply it to your country? Whether we're not being ambitious enough or whether our successes next year, no names mentioned, will be more ambitious in terms of taking further the AI agenda by way of common standards rules is something to be seen. I realize we're running out of time, so let me end there. Yeah.
Thank you very much, Rashad. And if I can just advertise the BIS report that's going to be submitted.
Of course, the BIS and the World Bank report. Sorry about
that.
And
we have a report on the public policy use cases for AI, and it's building on the report from last year, and it's going to be out in October. So I would very much like to sort of, wave that as well. Thank you very much, Rashad. So Lewis, having heard all of this, what advice do you have for central banks in particular, but more generally for policymakers?
So it's interesting, right? So pre-generative AI, I think most of the banks have had a framework already for machine learning, which is called model risk management, right? And one of the biggest concerns I've had, and I spoke to about half the model risk management teams across the GSIBs, so half the GSIBs I've spoken with, and they're very concerned that generative AI fundamentally breaks their traditional model risk management framework, right? What is a traditional model MRM framework, right? We know exactly the inputs that goes into a machine learning model, and then we can validate the outputs and in some forms be able to process this in a completely automated fashion without humans. Now, this is very useful for things like you can exclude things like race data or gender data to make certain credit decisions or mortgage decisions, et cetera. But in the world of generative AI, this falls apart completely because, as we're saying, it's a black box. For example, a recent study that came out that generative AI models, 40% of its information comes from Reddit. 40% comes from Reddit. I mean, like, you're going to trust that to make credit decisions? You're going to trust that for consumers to interact with their banks? So I think when I think about this, it is pretty scary. It is a pretty scary moment in time where this is such a powerful technology that you have to use because it is the future. But on the other hand, the input of this is a complete black box, right? And the output of this is, to your point, hallucinations is a feature, not a bug. It is, LLMs are basically a massive compression algorithm of the internet. Mostly 40% of Reddit. and so I sort of have been thinking about this problem a lot and have talked to a lot of MRM officers. And I think there's sort of three things I would say. Number one is be extremely diligent and tight on provenance, where that information came from. And there are many different techniques now, like there's RAG plus, sort of agent retrieval mechanisms to get the provenance of your answers, and you'd be able to get that watertight. That's number one. Number two is that I think the traditional cross-fold validation for traditional machine learning models need to be updated to some kind of like AI agent valuation models. This is a very open piece of open research that I think a lot of people are thinking about, especially because agentic output can be subjective, not just sort of objective in nature. And then finally, the mathematics and explainability behind how these LLMs work, that's a rapidly evolving area. I think we are at the cusp of being able to probe certain things. I think understanding that will help explainability as well. So those are some of the three key areas I'm much looking forward to in terms of how we can, evolve our MRM frameworks as sort of finance practitioners, sort of to the next era in AI.
Thank you very much, Lewis. I'm taking a few lessons from this. First of all, these are powerful models, but we should not be falling into magical thinking. You cannot sort of extract more than there is in the data. I think for central banks, we have to think about the public policy use cases, in particular for nowcasting, for the oversight of payment systems, AML, et cetera, as well as central banks as institutions, as any corporate CEO would actually be using. And I think, Lewis, we are, central banks are actually just following in the footsteps of what private sector institutions have already been doing. But I think the use cases are much broader. And some of you are going to stay for the Agora committee meeting, and we'll have a lot more to discuss at those sessions as well. So let me thank the panelists. I think we're out of time, but Henry, you're going to make up for that time, aren't you? Go ahead.
No, thank you very much, Yoon, and thank you very much, everybody on the panel. And thank you very much for the segue as well, because after the break, we will come back and talk about human capital. So it's now time for a break. Hello, and welcome back, everyone. Welcome back. So, we now have a panel discussion, and this panel discussion has special relevance for humans. I think I see one or two in the audience. Sorry, Carmela. So here to talk about human capital, future skills for central banking are Joseph B. Fuller, Professor of Management Practice in General Management and Entrepreneurship at Harvard Business School, and Tim Hermans, Member of the Executive Board and Director at the National Bank of Belgium. Moderating the panel will be Carmela Holtgreave, Head of Operations and Deputy Head of the Innovation Hub. So Carmela began her career in financial journalism before moving into public affairs and later into strategy and innovation. Before the BIS, she was Director General for Strategy and Innovation at the Bundesbank. Carmela, all yours.
Good morning, good day, good afternoon, depending on where you are, here in the room or somewhere else streaming our session. I'm very happy to have two very distinguished speakers with me on this fireside chat, exploring discussions on impact of technology on organizations in two folds. One is, what is the impact for the workforce, the skills we need to fulfill our mandates as central banks and supervisors? What do we need to know to be able to work with the market, to work with market participants, to anticipate, as we heard yesterday, and not be reactive but proactive? How to influence our policy decisions in the best possible way. And the other part, and that was reflected upon earlier today in many ways, is the practical approach we as organizations need to take in terms of how do we organize ourselves, how do we skill ourselves, how do we obtain organizational efficiency. Both aspects are important. Both aspects were already mentioned many times today. And I'm very happy now that we can share this kind of focus on human capital from two perspectives. A profound academic perspective, and I'm very happy to have Joseph B. Fuller with us, who's a professor for management practice in Harvard Business School, and I found that work of Joseph particularly interesting, set up and founded the Harvard program on the future of work. And the future of work in many kinds of aspects, your research aims from the skill gap. How do we, on the one side, have many institutions and organizations looking for labor force, and on the other hand, we have many unemployed workforce out there. And also kind of what will the impact of AI be on human capital and the economy at scale. And then I'm very happy to have a practitioner, a policymaker, a very experienced central banker with me, Tim. Tim Hermans is member of the executive board at the Belgium National Bank. In this capacity, he's responsible for the IT work of the NBB, but also for the work on the digital euro and the surveillance of financial market infrastructure. So a lot of topics we tackled on today already. I'm very happy to start now and dive into the topic with a question to Joseph. Joseph, from your research, we understand how technology, and particularly AI, is set to reshape ecosystems, raising critical questions about will it serve us as a catalyst, or how can it serve us as a catalyst, surging productivity, supporting us in taking even better decisions? Or will it lead to widespread and job displacement? How do we handle fear among our co-workers and colleagues? How is this, from your perspective, your research, but also your work with the industry? What would your perspectives be on this?
Well, I think it's actually going to do both. And so the short answer to your question is yes. Most of the research being done on AI has focused on the impact of AI on specific roles and jobs. And we're now doing some research we'll publish later this year to take an analysis of the productivity enhancement potential of AI in individual positions and map that analysis on top of organization structures of big commercial enterprises. We've created maps of 6 major industries, how they actually look today, which is a strange thing. It's not easily available. That was 800 million observations and counting. And when you map AI's potential to automate or augment the work in those structures, you regularly see a couple of phenomena. The first is, in many industries, the roles that have been defined over time, most of these industries are quite mature. So the positions that they're built on have evolved over time, get dramatically reshaped when you apply AI. Our model for the 900 so-called ONET codes in the United States, the 900 jobs the US government tracks, is a 41% improvement in productivity over time. You map that into specific industries, and the shapes of the industries start contorting. For example, for many of the sorts of jobs that we would aspire for our children, cognitive work requiring significant academic accomplishments in elite institutions, a significant pinching of the bottom of the talent pipeline, with much greater rewards to people with 8, 10, 15 years of experience who have developed the heuristics to be able to develop a good dialogue with AI, to write good prompts, to spot hallucinations. But you can't have someone with 15 years of experience 14 years from now if you didn't hire a new worker. So if you have companies gravitating toward efficiency, it's going to distort the geometry, if you will, of organizations and begin to put a crimp in the experience base, the maturation of talent required to get the most out of AI.
Thank you. And Tim, which I think is a great way to bring in your perspective. The NBB is very recognized for its kind of strong technical capabilities. But when you hear what Joseph has to say on how is it shaping the skill sets we need to have today, but also how do we prepare for a kind of unsecure or future that we do not know to tackle 100%? How do we prepare our workforce to be ready to have the right skills that we can and stay ahead of the curve? What's your approach at the NBB?
Well, maybe let me start by saying that central banks are under real pressure to modernize because we all see these new technologies and they are reshaping the financial sector. So we have to follow, we have to adapt. But it's very difficult, it's very hard to introduce those new technologies, specifically for central banks, because for ages we have been guardians of stability and so forth. So we need another mindset. And what Joseph said, I see this in the bank. We talked about the risks today, yesterday. AI, for instance, doesn't remove risks. It amplifies risks. We talked today about model risks. AI sometimes is a black box. We talked about data privacy risks, especially in the EU. We have this very strict regulation, GDPR, so that's very difficult to use AI when you have this kind of strict regulation. We have like operational resilience risk. It's very easy, and someone talked about that, to make a malware with AI. So we have these risks that we have to mitigate, and we have to reskill our labor force for that. Because as Joseph said, it's very easy for instance, young people to come into an institution and they can, by using AI, do the work in one day that 10 years ago they could do in 10 days. You get all these kinds of reports, you get these supervisory reports, you put them into AI, and AI gives you back some analysis with an indication of risks. But you need the expertise, you need to know, you need to be able to check from your expertise whether or not these results are valid. And for that, I mean, yeah, you have to be a subject matter expert. And how can you become a subject matter expert if AI is all about productivity and efficiency gains? For me, and I'm a bit in a discussion with my governor on this, we are doing our annual budget exercise, so and we have the promise of, well, with AI, we can reduce our budgets with like 10, 20% because AI is doing the work. And that are real efficiency gains. So you do the same with less of a budget. For me, that's not the right kind of efficiency in a public institution. I mean, obviously, you can reduce budget by a little bit, but what for me is a good efficiency gain is that you do better with the same budget, that we try to have better analysis, that we really shape cross-functional teams that learn from each other, that have this like cross-fertilization, to have deeper analysis, to have better results within the same budget or a bit decreased budget. So these are really the things that we're talking about also in our bank. How can we use AI to be better, and not only to have good sounding text with a lot of difficult words that don't mean anything, because when you're using AI and everyone is asking the same questions at the same models, you will get the same answers. And if you don't have the expertise and the capabilities of distinguishing between a real answer and just text, we all getting like these briefings and we're all saying the same thing on conferences like this, and then you get into a feedback loop and you create echo chambers, and at the end of the day we believe maybe it's something that's not true. So that's a real risk, and we have to change the organization to deal with that.
If I may follow up on this and then come to you and your broader perspective on this, Joseph. When I listen to you, and it's reflected in the panels beforehand, we do not only talk about technical capabilities and skill sets, we talk about critical thinking, about creativity in workforce, about how to ensure that we are capable of asking the right questions. How do we tackle inconsistencies, or as a colleague from my always says, how do we distinguish snake oil from real substance? You know, how do we make that? And when you look at this kind of challenges ahead, and on the other hand, first time in decades, central banks face budget restraints, how do you combine that?
Well, we have to change the way how we make teams. We used to value like really big experts that worked in isolation in their own silos, and that was the best staff we had. So we could send someone to a conference, made a really big speech, and that we valued really, really a lot. That we have to change. We need to build these cross-functional teams. We need to put young people and not so young people together, people with less experience, with a lot of experience. We need to put engineers and economists together, policy analysts and maybe supervisors. And what we are trying to do at the bank is design thinking. So we put these teams together and we ask them to solve real problems by analyzing what is the problem, by low coding things using tools like Power Platform and stuff, to really build low-code solutions. And with that, you create the curiosity within the teams and you build from the bottom up. So it's not top-down, you build from the bottom up and you create real ownership with those teams. And with that, you have like these experienced teams that can tackle and really assess the answers from AI. That's what we're trying to do. But it's very hard because everyone is now asking for AI talent, data scientists, IT talent. Demand for those profiles is exploding. And at the same time, we see that for a lot of people at the organization, it's very difficult to have them in training programs, specifically older people. And those are challenges that we have to tackle.
Thank you, Tim. And Joseph, quite a lot of your research also emphasizes the importance of an adaptable approach to talent in the digital era. And you refer to many industries that also failed in setting the right strategies on how to shape the right composition of human capital against the background of, let's say, have more diverse teams or diverse perspectives. What would be learnings from your research that you could share with the central banking community on how to better tackle the challenges ahead?
Well, the first is something that was referred to yesterday, Carmela, that this is a conservative industry that has a long history and is reluctant to make sudden changes because of the potential impact on its effectiveness. And what AI does is cause people to have to rethink the fundamental process by which they accomplish some purpose. A lot of institutions, including some of the references here in banks, is how we're using the technology to improve an existing process. That's a legitimate application, obviously, but that's treating it like it's just the next software as a service platform. The power of this technology will only be engaged when we re-engineer the process to maximize the exploitation of what the technology is actually good at. And what it's good at is relational, routine, rules-based decision-making, where there's lots of longitudinal data. Another thing I just take a quick sidebar comment on is that the evolution of the architecture now is arcing more toward LLMs riding above multiple smaller language models, which are deeply trained. A lot of hallucination comes from the fact that I'm in this large model. So there is James Bond, bonds, familial bonds, and I can get confused as the LLM with all of those references to Bond. In a small language model, which can be very, very tightly controlled, going back to what we were saying about MRMs in the last session, and where you can regression test the model with lots of synthetic data to find biases, you can control to a degree the threat of hallucination. So also when there are problems in technologies like this, it's a beacon for entrepreneurial activity. If we know that there are problems with explainability, someone sees that an opportunity to become a billionaire, and they start working on it. So we're going to get some solution to these problems. But in terms of what organizations need to do, first of all, with this technology, we have to put much greater attention on retention. Turnover of experienced middle management, upper management will be much more expensive than it has been traditionally. We're going to have to redefine entry-level roles, because many of those analytical, entry-level, financial analyst, credit analyst, consulting analyst jobs that we aspired maybe for our children, or maybe many of you had as your initial job, they're going to be significantly contained now and reduced by AI. So if we just said, well, we don't need any more of those, well, how are we going to replenish our organizations? We have to redefine the role to be more accommodating of AI and include tasks that AI isn't good at yet. We have to change our recruiting guidelines. So the type of ability to work in design thinking type settings and team type settings like you were describing becomes more important. That should be a criterion related to social skills, communication skills, problem solving skills should become more heavily weighted in our selection criteria than merely technical skills. Our research shows that about 29% of jobs in the United States will be either significantly reduced in the short term by the presence of AI or have a much larger applicant pool because of the technical tasks that required very specific credentials and deep experience are now being done by AI. So I don't have to constrain my pool of people I'm considering, seeking people only that have that exotic credential. So the opportunity we really have to reform the way we think about talent management, talent sourcing, and talent development. And as mentioned earlier by almost all of our last panel members, we have to get, as big institutions, better at reskilling people. If you just look at software writing, Claude Code, which is the Anthropic core engine for software writing, after it was launched, it was downloaded 2.5 million times at 8 months. Cursor, which is one of the big applications that it rides on Claude Code, reached $100 million in revenue in 7.5 months. That's happening again and again and again. So what we're beginning to see in these types of cognitive tasks you do is that the innovation cycle is faster than the mean time to learn how to master the innovation. We've never had a situation like that in technological history. So you're not going to be able to play the spot market for labor and hire some highly skilled person because you finally figured out that you actually need some cyber people. Too late. Too late. So now we have to start hiring for and creating policies and practices that overcome the nervousness and fear people feel when they're told they have to master something new to them. So we're really going to have to revisit the way we think about talent broadly and not shy away from that challenge, because to delay too long here is going to not only frustrate your funders, but also leave you with some much bigger problems as malefactors are using this technology in ways that could threaten the regimes that you support and supervise.
Tim, when you hear that and reflect upon your senior management at NBB, do you feel prepared in terms of tech savviness and tech and digital literacy on decision-making levels? Because if you reflect on this, on how to be able to adapt in a very flexible manner your workforce over and over and over again, because the development is just so fast, you need to feel comfortable with these developments yourself, at least at some level, right?
Well, the short answer is no. I mean...
Honest answer, too.
Well, let's be honest, for many years, IT has been just a cost. It was not an investment. And it was difficult, it was not sexy, it was for geeks and nerds, it was not for top management. Now with the new technologies, everyone understands that it has become important and we need to talk about it. But I have to say that when I look at top management in my institution and also at board level, we are honest about that. We ourselves say, well, we don't have the skills, we don't have the knowledge to discuss with our staff really new technologies, what are the consequences, what is the impact on the organization. And luckily, we know that we don't know. So what we have done at the bank is, just a few weeks ago, we have asked our staff to put together a training program for the board to understand all these new things. Because when we have these kinds of discussions, also discussions on another level, at the ECB level, often we have the observation, well, we have discussed or my governance says so, we have discussed a very technical topic, I'm not sure that everyone understood. But we are the ones that have to make decisions, and we have the ones that have to steer the organization and give guidance to our staff. So that is a real problem. It's not only about staff and junior staff and maybe more senior staff. It's also, and maybe in the first place, a problem from top management.
I think this is universal in industry. Our data in our research project shows that the people who feel they have the best grasp of generative AI are senior executives in large companies. Many of them are graduates from school. I know many of them. They don't know what they're talking about. And I think this is also a supervisory issue, because you're going to have decision-making processes in institutionally important banks, which are not necessarily governed, I don't mean in a rules-based governance, but have a management system and a board structure that is equipped to understand the consequences of some of their choices, up to and including overly harvesting efficiency gain opportunities early in the cycle to maximize period profitability and start driving expertise out of these systemically important institutions before they really understand how this technology is going to play out. Just a quick story. When electric generators, dynamos, were first introduced in the late 1800s, companies installed them directly next to their steam engines. And then gradually companies started to understand that electricity had different properties than steam power. Mills were multi-story because steam likes to go up. But it created all sorts of internal logistics and materials handling problems, moving things up and down a factory. So some companies who were observing how the technology actually worked finally figured out that electricity doesn't care, it just goes with a wire. So suddenly we could start building single-story, larger flat factories with much better quality control, much better materials flow. So both in your banks, but for those companies you supervise, don't let them go down that path of installing the AI just next to the SaaS system or next to the ERP system and just assuming it's all code, so it's all the same. This is the most important commercial technology since controllable power, in my view. And it's got a great potential to unlock big productivity increases in your economies, which are strictly necessary given the problematic demographics of a lot of countries. We urgently need higher levels of productivity to overcome the dependency ratio problem. But that's not going to happen if it's treated like steam engines and dynamos.
This can sound a bit nervous, at least it could make someone nervous, but it can also come with opportunities, I think, for creating a more sustainable, a more forward-thinking approach to core missions of central banks. Tim, I mean, we heard about it yesterday in the panel with Andrea and Eddie and Martin, where both said at least 2 times it's about establishing a forward learning culture as a core mission for all of us to ensure we are up to the tasks. Would you kind of echo that in context of this kind of really big challenges of skill pursuing and creating on all levels?
Well, absolutely. It is a cultural shift on different levels. So we need really to go from this control and compliance environment to adaptability, to learning on the go. We need to go from working in isolation, having great experts but that don't cooperate with other ones, to building these cross-functional ecosystems that can solve problems. So that's really important. We also have to go from absolute certainty to getting comfortable with some kind of uncertainty, not a lot of uncertainty, but some kind of uncertainty, and that's really important. Another thing is, to quote maybe Francois yesterday, I am a European central banker. If confronted with a problem, we regulate it. So that can help as well when we are talking about what Joseph said. Don't let banks have models they don't understand. Well, we have a piece of legislation, the AI Act, that sets rules for explainability, transparency, for really important models. So that's important as well. So it's a combination of different things, but it is a big cultural shift, that's for sure.
I just had a point. This afternoon, we're going to talk about collaboration. We're going to have to redefine breadth of collaboration and the topics we collaborate on. Now, BIS plays an essential role in giving virtual scale to lots of banks and tackling common problems. Is to be commended for that. But just as we need a different way to think about work processes within the enterprise, we're going to have to think about collaboration across enterprises and regulators and the regulated in order to get the type of teams and insight and network effects that you're talking about, I think. And as we talk about collaboration this afternoon, I'm hoping to hear more about how that can be achieved, because you supervise and regulate and provide guidance, and they do, and there's a dialogue about that. It's not going to be enough going forward.
I learned so much in this conversation. Let me try to bring in my 3 major learnings, and maybe you can share your learnings as well. One is the importance of knowing what you don't know. Yeah? Being aware that there's a lot you don't know. And from that, you can move on. The necessity of creating even more capacity for adaptability and moving comfortable in an environment that is uncertain. And the third thing is the continuous need for real subject matter expertise. That would be kind of my takeaways. I would love to hear, before we close this session, your.
Well, I can agree with you. And maybe one last thing. For me, it's really important that you define the right risk appetite. It's also important to signal to your staff that experimentation is a good thing, that you create safe fail spaces where you can experiment without risk to the credibility of your institutions. So that's important as well, I believe.
I would just say quickly that any form of revolution, a scientific revolution, a political revolution, arise and break old paradigms. So if you claimed your own paradigm in a revolutionary period, bad things happen.
Thank you. Thank you very much for this very thought-provoking discussion. And if you have further questions, both speakers are still here later on in the break. Thank you so much.
Thank you so much, Carmela, and Joseph, and Tim. So we now stay on AI. So talking about ethical AI and public trust are Miguel Diaz and Professor Dawn Song. So I'll introduce Miguel and allow him the honor of introducing Professor Song. So Miguel Diaz is Head of Strategy and Deputy Head of the BIS Innovation Hub. And before he joined us in Basel, he was Head of the Toronto Centre. And before that, he was Head of the Payment Systems and Financial Market Infrastructures at the Bank of Mexico. And before that, still at the Bank of Mexico, he directed strategic planning and managed macro-financial analysis. So Miguel.
Thank you so much, Henry. And thanks everyone for being with us. And right now we have a big treat for you. We're honored to have Professor Dawn Song. She is a professor at the University of California, Berkeley, probably one of the most laureated professors in her field. She's a MacArthur Fellow. She usually wins every other year the Best Paper Award in several dimensions. And she created an amazing institution, which is the Center for Responsible Decentralized Intelligence, which merges many of the technologies that we are actually in very deep need to implement in the central banking community. And she is a globally recognized expert in the context of privacy, security, and AI. So it's a perfect fit for what we're talking about right now. And we wanted to bring you someone that is actually in the frontier from an academic perspective and pushing things into places that we don't know where this will take us. But she does it very safely. So thank you very much for being here, Dawn, with us.
Thank you so much. Thank you so much for having me here. It's my great honor and pleasure to be here.
So let me just set the stage for this. So everyone knows here about AI. Everyone has read about agentic. Everyone has seen how the foundational models have been evolving much faster than what we would have expected. And apparently this trend is just something that will continue to go on. Under this context, we have a distinction. So with all this power, we need the trust element to make sure that this power is used properly and to make sure that this power serves our purposes as societies. So first, to establish the room, Dawn, so we all have heard about it. We all think that we know what are the things that are happening in the frontier. But I would like you to share with us what you're seeing in terms of foundational models, in terms of agents. What do you think will happen realistically in the next 12 to 18 months, probably not more than that because it's too difficult? And what are the main things that you think that are being underappreciated out there?
Okay, great. Great question. To one sense, to summarize the development in models, foundation models, and agentic AI area is really moving faster than what we have expected or have imagined. So of course, the foundation model has been making a lot of progress, but what's really happening now is the fast advancement in agentic AI. So some of you may have heard, so I have been teaching this MOOC, Massive Open Online course, on agentic AI. So when I started the first edition of the MOOC, it was last fall. Back then, actually, there wasn't much talk about agents. People were not really talking about agents. Agent wasn't quite a thing. But however, I could foresee that agent is really the next frontier. So that's why I started the agent MOOC. As I said, I could foresee that agent is the next frontier, but still, even I didn't expect that then suddenly this year is it's called the year of agents, and everybody's talking about agents now. So for our MOOC now, we have close to around 30,000 enrolled globally. And then recently at Berkeley, our center that you just mentioned, the Berkeley Center for Responsible Decentralized Intelligence, RDI, we hosted actually the largest agentic AI summit. We had over 2,000 in-person attendees, and online we had over 40,000 that joined online. So for people who want to learn about agents, both the Agent MOOC is a great resource, and also this Agentic AI Summit gives a fairly comprehensive overview of what's happening in agentic AI across all the different layers of the stack. Started from infrastructure, the agent development framework, and then foundations of agents and applications, horizontal and vertical applications, and so on. So with that said, yes, you're welcome to check out these videos and so on to learn more. So with that said, really looking at what's happening in agentic AI space, I would say essentially across the board, all different capabilities and also in all different domains, we are seeing amazing advancements. So let me give you some examples. So first, so actually my group has been among the earliest and developed some of the most popular benchmark evaluation out there used for LLMs, for agents, and so on. So for example, people may have heard about MMLU, which is the most popular, so far has been the most popular evaluation benchmark for LLMs and so on. So essentially every model, when they come out, this is one of the key benchmarks. And you can see the fast advancement in terms of the performance of all these models on the benchmark. And also we developed some of the most popular benchmark called math also, which measures the mathematical reasoning capabilities of these models as well. And on all these benchmarks, the model's capability performance have been increasing drastically. And you may have heard recently, for example, for the Olympiad math competition called IMO, and also for informatics Olympiad these competitions. So Google and OpenAI, Google officially has won the IMO Gold just very recently, and OpenAI has won the unofficially the IMO Gold also, because they didn't officially join the competition, and they have won the informatics Olympiad Gold as well. So these are just some examples showing that now the model capabilities and also essentially agent capabilities has been increasing drastically. And as I mentioned, it's really across the board for mathematical reasoning, just in general reasoning, and of course for coding capabilities, and for computer use, web agents. So many of these actually, for example, web agents last year didn't even exist. And this year already web agent capabilities are actually fairly good. I mean, it's still not quite that practical yet, but you can actually already use it in various domains. And also AI for science and AI R&D. So now recent work has shown that AI agents now can actually do normal research, can propose new research ideas, and then can run experiments on its own, and then can write the whole paper by itself. So in fact, now there's a new conference where, so actually it's very interesting. So last year, we wrote a paper and largely using LLMs, so actually have LLMs to debate with each other. And there's a big question about whether we should use, whether frontier AI models should be open source, should be open or closed. There's a huge debate. So we had the idea of how about we have LLM debate and tell us what LLM thinks. So we wrote a paper and based on the debate results from the LLM, and then we submitted the paper. The conference reviewer said, "Oh, the paper looks really interesting. It's a fantastic finding. But however, given that we declared that most of the findings are from LLM debate, then the reviewer, the conference basically said, we had to reject the paper because we only accept papers written by humans." But however, fast forward, I'm just showing this as an example of how fast AI is moving. So this year now, there's a new conference where they only accept papers that's written by AI. They do not accept papers written by humans. So this is a big contrast, how you see how fast AI is moving. So you're asking me, to talk about the advancement essentially across the board in all different aspects, in all different domains. AI is moving really fast.
Super. So this is quite frightening. Now, what you're saying is we have
Yes.
we have lots of geniuses in every aspect of the world, coding, mathematics, everything, and we gave these geniuses computers to operate through these computers with the agentic element. And the problem is that we don't really understand how these geniuses are processing this information, or what are the potential issues that we might see in the reasoning processes behind these things. So jumping from the power of these things to the potential caveats or risks or unknowns, how should we understand this black box that we all talk about? So we all say, yeah, this is a black box, we cannot understand it. Can you give us a little bit of how to understand? How is it possible even to understand? What are the efforts that the community has been putting into understanding how this reasoning works?
That's a very good question. That's a very important question. I would say, actually, in human history, I think this I would call it, it's the first time that we really develop such a powerful technology that we do not understand how it works at all. Yeah. So I call it the alien technology. Even though as humans, we build it. So to contrast how traditionally we have been building systems software and systems that we use, we have human programmers and sit there and write the code line by line. And in that, through that development, we design what the system is supposed to do, then we decompose it, then we write parts of the system, and then in the end we put it together. So in that process, we actually understand what the goals are, what the system is supposed to do, and we understand how we actually build the system. But however, in contrast, for these LMs, for these now foundation models and so on. So this is the first time so first of all, we are building the system in a completely different way. We don't write it line by line. Yes, we write the basic code to train the model, but then largely, as we know that now, training these foundation models costs a huge amount of money, like billions of dollars, tens of billions of dollars, and we just have, we can understand, we know how the training code is written, but then we basically run this training process. We give it huge amount of data, huge amount of compute, and then this model, right, of course, it learns the weights in the model and so on. But then now we create this thing that we call it a black box because we actually really don't know what it has really learned and how it actually behaves. So yes, you can give it inputs as a prompt, and then it turns, does inference, and give you the output. But it learns such a complex function, we have no idea actually what the function really does. This is very much in contrast to the traditional way of building software, where you can inspect line by line what the code does, and then even though it's complex, but still through line by line, we kind of know what the system does. But for this one, it's learning a really complex function. What the model is, it's learning a huge, really complex function with, and it's a function, what this does is a function approximator, but it's approximating also essentially, our knowledge, like all the input data that has been, input that has been trained on, and so on. And as a consequence, we don't understand how it works, and we don't even know what kind of behaviors it has learned. And oftentimes, it has these emergent behaviors and emergent capabilities that it has learned. This is also in contrast to the traditional system software that we have built. Because the traditional software, it does what you programmed it to do. But with this new type of models, this new type of AI systems, we actually don't know all the capabilities that it can do. That's why also how it helps us, it often surprises us. Oh, it actually can do this. We didn't know that it actually can do this. On one hand, it helps us, but on the other hand, it also causes huge challenges. And there has been a lot of methods, approaches that we have been trying to develop, including, for example, interpretability, different types of interpretability, to try to understand what kind of circuits the model has learned. Also, we have done work on, we call it top-down, interpretability and so on. They're trying to understand through looking at the model's activations, actually trying to learn what the model, how the model is behaving and so on. So some of our work actually showed that by looking at the model's activation, we can actually train some kind of train simple models or learn certain directions, how the model is behaving. And then we can actually, during inference time, we can actually modify these activations, for example, amplifying it along certain dimensions, and so on, can then actually make the model behave more honest or dishonest, or even change its political leaning as well. So these are all very interesting methods that we can use to help us to understand and also control the model behaviors better, but still, it's right now we are just scratching the surface. Given the complexity, it's very, very difficult to actually understand how the model works.
It brings several questions in terms of whether you have something more intelligent than yourself and you want to control it. Could you do it? So let's not get into that one probably too much. But one other very interesting element in the context of power and trust is this can be used by individuals with a good intent, but it can also be used by individuals with bad intent. So we just saw a couple of weeks ago, Anthropic came out saying that one of their models, Claude, have been used for a generalized attack in terms of cybersecurity and in terms of bringing credentials of individuals in a systematic way. And Anthropic is a very particular case because they are trying to look at what the models are doing, but some others are not. So we really don't know how deep the cyber criminals are actually using these elements. And actually, I would like to ask you, Don, because I know that your team has done something on the positive side of this coin, and your teams have identified actual flaws in open source code. But can you share with us a little bit what your team did and how can we face this big challenge that is coming on people with ill intent using these powerful tools?
Great, yeah. Thanks for the question. This is an area that I'm particularly, personally, very concerned. So on one hand, of course, we are all enjoying the great advancements of AI. It helps us to do, increase productivity, do great things. But on the other hand, unfortunately, AI can be misused by attackers. And I would say that, and hence this can lead to huge risks. And in particular, I would say that in cybersecurity, I would say this is one of the biggest risk areas for the concern. Because AI is a dual-use technology. It can help both attacker side and defender side. And with our recent work, again, as I mentioned, AI capabilities has been increasing really, really fast, and it's much faster than, in general, what we have expected. And in particular, in cybersecurity, some of our recent work has shown the really fast increase in AI capabilities, particularly in cybersecurity. So here, let me give you two examples. So we did two pieces of work recently. One is called the Bounty Bench, where we took real-world bounty tasks for web applications. So these are web developers in the real world. They set up these bounties, basically give monetary reward to white hat hackers to help them to find vulnerabilities in their code and patch vulnerabilities to get monetary reward. So what we have shown is that we have built AI agents taking these real-world bounty tasks. We show that today's AI agents can actually solve some of these real-world bounty tasks and can win in the equivalent of tens of thousands of dollars of bounties. So basically, AI agents today can make money by claiming these bounties. So that's one example. Another example is we built a new benchmark using close to 200 real-world, large-scale, widely distributed security-critical open-source software. So this open-source software has previously discovered over 1,500 vulnerabilities. So we built AI agents and tasked it to do two things. One is to see for these AI agents how much of these previously known vulnerabilities it can find. And also, two, whether these AI agents can actually find what's called 0 days, previously unknown vulnerabilities. So what we have shown is that these AI agents, first, they can now find close to 20% of previously known vulnerabilities. And then two, furthermore, it now actually can find 0 days. So our agents found 15 0 days, and a number of CVEs have been issued for these 0 days as well. So for 15 0 days in these large-scale, widely distributed, real-world open source software. And also keep in mind that these open source software, they have been fast tested over a long period of time because they are security critical. And even with this, still our AI agents were able to find 0 days in these large-scale, widely distributed real-world software. So this indicates that AI agents' capabilities are increasing really, really fast in this case, particularly in cybersecurity. So this poses further challenges. On one hand, yes, AI can help defenders, but on the other hand, it can also help attackers. So in our recent work, we also did some data analysis, exactly trying to analyze the question, given AI as a dual-use technology that can help both the attacker side and defender side, who will AI help more? And our analysis unfortunately showed that in the near term, due to certain natural asymmetry, for example, attackers only need to win once, but defenders have to defend against all bugs, attacks, and so on. So unfortunately, in the near term, AI is going to help attackers more. So this, of course, poses huge challenges, given that, as we know today, already, for example, a lot of financial systems have been attacked, and so on. Attackers are getting, a lot of money and so on. Now with the AI, things can be a lot worse. With AI, it can significantly reduce attack costs and increase scale of attacks. So with that, also we recently just launched what we call Frontier AI Cybersecurity Observatory as an open platform to actually collect all these AI in security benchmarks, to have the community come together to do continuous monitoring of AI capabilities in cybersecurity to help the community to build also better defenses and increase resilience.
Yeah, it's very sad that we don't have 2 more hours to discuss many more topics, but so I'm going to stop you from scaring us. And now I want you, Don, to help us see the light at the end of the tunnel. And so what kind of technical governance aspects do you think that can help us get into have the most promising perspective today? And what are the ways in which, concrete ways in which we can build actually safely and accountable systems without stopping them from bringing all the power?
Okay. Yeah, this is a great question. Yes, I think it's helpful to end the fireside chat on a more positive note. So there are a few concrete things I like to mention. I think can help the audience. So first, in terms of governance, so recently we had a proposal with a number of leading AI scholars that has just been published from Science, the leading journal, called the Pact for Science and Evidence-Based AI Policy, is that especially when we deal with these risks and so on, it's very important to take a science and evidence-based approach. For example, even for AI in finance, what you should do with the regulation, what kind of governance you should use, it's very important to ground these kind of discussions in science and evidence. And related to that, more concretely, what can people do? So one important aspect is evaluation. So as I mentioned, my group has been among the earliest to build this benchmark evaluation. But now with agentic AI, evaluation is even more important. And now we are actually building a new open framework for evaluation, in particular for reproducible, standardized, and transparent evaluation. And in particular, this actually can help various companies, institutions to really, because as you deploy agentic AI systems, number one important thing is for evaluation, both on reliability, on capability, and also on trustworthiness. That's the number one you need to do. And I think this new framework, I'd love to actually collaborate with the audience here, can really help, I think, companies and institutions to really up their game, is to do really standardized, reproducible, transparent evaluation. So that's on the evaluation side, and the other side is, of course, when you build agentic AI systems, these systems are much more complex than ever before because now they are much more dynamic than the typical traditional systems that are actually fairly static. And you need even more importance for trustworthiness and for security, risk assessment, and for defenses and so on. So for that, we are also building a secure agent framework to help with defense in depth and also for safe by design, secure by design. I just taught a 2-hour lecture in my last MOOC on how to build safe and secure agentic AI. We don't have that much time, so only just to add the pointer. This is a very important topic for every company, every institution that's deploying agentic AI. Security and trustworthiness is number one, and risk assessment and mitigation. And we really also need completely new solutions. I hope that the secure agent framework can also help.
Yeah, thank you so much for that, Dawn. I just want to close with those words that you mentioned about trustworthiness. The central bank community is about trust. And if we aim to jump into this next wave of powerful technologies, we need to figure out a way in which we can bring this trustworthiness to our systemically important tasks so that we are not left behind by the world. So very happy to collaborate with you and with all the academia in this topic in the future. Thank you so much for joining us, and please an applause.
Thank you very much to you both. Wait for people to move around. So now we turn to some trustworthy people to help connect some dots. Sorry, they've got to be very low key. But this time the dots that are being connected are AI and big data in central banking. So please welcome 3 center heads from the Innovation Hub. We have Raphael Auer. There he is, head of the Eurosystem Center, Morten Beck, head of the Swiss Center, and Benedict Nolens, who's head of the Hong Kong Center. So colleagues, over to you.
Thank you very much. Thank you very much.
Oops, I do have the clicker.
Okay. Thank you very much, Henry. I do realize, let me just start with 2 observations. First, that I do realize that we are standing between you and lunch. And also, we're in Switzerland, and in Switzerland, there's this saying, if you're on time, you're already late. So what I will do is actually, I will skip my 15-minute, very eloquent introduction on the importance on AI. I think we can build on the previous panels. And so what we're really focusing on today is kind of like the projects that we're doing in the Innovation Hub to try and looking into AI. And I think if you look at it, you can kind of think our projects fall into the 3 areas. One is economic forecasting, the other one is regulation and supervision, and then finally financial stability. And today we're really going to focus on the economic forecasting part, and we will discuss 3 of our projects. First, we'll talk about, and I will talk about Project NEO, which is really around exploring novel data sources for forecasting or nowcasting. And then Raphael will talk about Spectrum, which is really about how you convert big data into high-quality signals for inflation forecasting. And then finally, Benedict will talk about Project Insight, which looks at how you can monitor global value chains by applying big data tools to measure economic activities. So let's turn first to Project NEO. I should mention that Benedict has the honorable task at the end, trying to put everything together and lessons learned and how the different things that we do complement each other, okay? So, all right, so Project NEO is really around gaining new economic insights with AI and novel data sources. Ben Bernanke, who I, for many moons ago, had the pleasure of working for, once compared monetary policy to driving a car, but a very particular car which had a very unreliable speedometer and a very foggy windshield, and very unreliable brake and accelerator, and everything happened with a delay. And so as central banks try to steer the economy, they are faced with an old problem that reality and the official data that they rely on together are with a gap, okay? So the data releases come with a delay. And one example was during COVID, where it was very hard to figure out what was happening with consumption and inflation. So Project NEO kind of focuses on two things. One is to make the speedometer more reliable and maybe the windshield less foggy. And so it's really around what can you do in terms of this when you have to assess where the economy is. And what we do in NEO is that we take a different approach. It's not a new approach. Economists have tried to fill this gap for a long time using survey and new sentiment analysis and so on and so forth. But what we try to do is a very direct approach where we go directly to companies and ask them for data, and we also try and incorporate some of the new novel data sets that a lot of public institutions are making available. And the hope is that we can have more timely information, more granular information, and actually also more frequent information. So that is the hope. And we can then do it for different sectors. So this is an overview of kind of the types of data that we are currently collected. So we've gone to a lot of companies, and actually they have been very helpful in sharing some of their data. And some of the data we inject from are railroads, airports, health insurance, and real estate companies. And then from new public sources, we're looking at road traffic, trade, financial markets, weather, and also, for example, electricity. And what I think is very encouraging is that actually by using these data, we can get it in near real time, we can get it very frequent, and we can also get it very granular. And when we look at kind of the parts of the economy or GDP, consumption, and so forth that we can cover, in terms of gross value added, we're currently covering about 42%. In terms of consumer prices, we're covering like 53%. And in terms of consumption, we're actually covering over 90%. So what we built in Project NEO was a technology pipeline. And it really consists of 3 Ds, if you will: the data, which we just discussed, the data science platform, and then a dashboard. And the data science platform consists of 2 things. One is kind of like an engine that generates, based on the data, new indicators and features, and then a prediction model, which mostly today actually relies on machine learning, but is actually showing to be quite promising. And then the dashboard allows central banks economists to do 2 things. One is to like monitor more or less the economy in real time, but also do a lot of nowcasting. So this is kind of like the technology pipeline. So let me very quickly just show you one example. In most countries, rents are actually quite a sizable part of the consumer price index. In Switzerland, I think it's like 20%. And so this is data that we get from an online real estate platform. And we compare it here with the official statistic. The official statistic is quarterly. It's based on a survey, a very comprehensive survey. So we're not trying to really replace the official statistic. We're just trying to complement it. But our data, which we get from this online platform, is weekly. And I hope I convince you that there's a high level of correlation between the two. Actually, the correlation, when you look at year-on-year growth rate, is north of 0.95. And so that is really useful. And what is particularly useful is that we get this information 3 to 5 months ahead. And when we stick this measure into our forecasting model, we can actually reduce the forecasting errors by 40%. So this is Project NEO. I'll turn it over to Raphael.
Thank you. As a quick segue, I was actually once sampled by the Swiss Statistical Office for the rental index. I can tell you it's a paper-based process. And it's really great to connect the dots with Project Spectrum, which really connects the dots very closely to Project NEO, because what we've seen is a new approach to harvest more data from novel sources. And that's certainly a general trend that we're seeing around the world. Digitization, rise of online commerce brings a wealth of new data. And we can use that data to forecast inflation or other macroeconomic variables. But this new data also comes with new challenges because it comes in new formats. And if you think about, for example, we just saw the CPMI sub-index for wages. This is a highly structured data source. It comes from a statistical agency. We know exactly how it was constructed, and we have a very long time history. In contrast, when you start to web scrape, you will produce something that's called highly unstructured data. In other words, it's quite messy. And that's where Spectrum connects the dots. We're not focused on actually collecting new data. We're focused on making unstructured data more useful. Project Spectrum is a joint project with the Deutsche Bundesbank and the ECB. And what we're focusing on data that is already available, the daily price data set that the ECB and the Eurosystem are connecting already. That is a highly helpful tool that web scrapes, so they have relations with a number of online stores and permission to collect the data. And they've collected 4.6, or actually I think it's 4.7 billion data points by now. And that's obviously a wealth of data that you can use for forecasting across a number of countries of the Eurosystem. But despite having so much information, it's actually pretty hard to make use of it, because if you think about this sort of the structure of this information, think about like you buy a TV online. Typically, what you would do is, what a store would do is they would have a certain TV model on sale for 3 months, and then they switch to a different model, or they put in a temporary rebate, and then until they sell their stock, and then they go to the next producer and sell a different model. So what you have is, instead of what you want is a 20-year sectoral inflation sub-index, you have short-lived, very large number of chunky price chunks. And you need to connect that, and you need to make it comparable, both within a country and across countries. And that's what we try to do with Project Spectrum. And how do we do it? We harness the information contained in the project descriptions and other metadata. Where is the data collected from? What is the structure of the web page? And we map individual products to classifications, expenditure categories, such as the United Nations COICOP classification. This turns billions of web scrape prices into hundreds of sectoral price indices. And there is one sort of key technological solution that we built this approach on, and that is called embeddings. Embeddings turn long text into simple numbers that capture much of the meaning. This is actually something that's very intuitive, and we have two examples here on the left-hand side. If we think about Rome and Italy, the connection between those two words is very similar to that between Paris and France, capital and country. Or if we think about the relation between king and queen, it's very similar to that between man and woman, right? The logical connection is easily summarized in this little delta. And embeddings are just formal representation of this easy concept. And what we do is we take gigabytes of raw text, all the product descriptions that you find online, and instead of working with these raw product descriptions, we compress them into vectors that sort of capture much of the meaning. So you can see here on the right-hand side a simple two-dimensional representation of this, and you see that you have groupings such as furnitures or food delivery that arise. It's not that simple. Maybe the true embeddings are like a 1,000 dimensional representation. But importantly, instead of having gigabytes of raw data, you work with 1,000 numbers per product. And that is much, much less information. And if you think about LLMs, you need to think about cloud costs, and reducing that information really makes a difference. Let me give you a short preview of our results here. So on the left-hand panel, you can see the performance of embeddings and actually the alternative of just putting a lot of sort of just all this information into an LLM directly. And performance here means how well goods are classified into the relevant COICOP category. We show the performance for various digits. So for example, a 3-digit level would be a coarse category such as food, and a 5-digit level would be something like pasta, a subclass. And we see that the performance of both just taking the entire information, putting it into an LLM, and this bypassing via embeddings, first compressing it and then sort of clustering it, is very comparable. And we also see that it's at the 3-digit level sort of very comparable, and at the 5-digit level a bit worse than human labeling. But it's not too different, right? And human labeling is a very costly task, and it's also a process that takes a lot of time. And when we think about what we want to achieve, we want to do real-time forecasting, is actually not a feasible way, right? So this is just to show you how good the methodology is. So we get good accuracy, and we could do it in various ways. We could just take all the information, put it into an LLM, or we can do the route via the embeddings. The difference is in the cost per product, which is on the right-hand side. It's about 13 to 14 cents to categorize a product with a GPT-5 or similar LLM engine. And it's less than 1/100th of this via the embeddings. You don't actually even see the bar. And that's a real difference if you think about a production system, where I started by saying we're using the DPD data, which has 4.6 billion data points. And because there's a lot of product churning, we could potentially add several thousands of new goods a day. And then if you think about the cost of a production system, instead of consuming maybe €1,000 a day, you can do this reclassification, this product churn, and bringing everything back to the sectoral price indices for maybe €20 a day, which is a feasible order of magnitude. So I want to conclude here, right? With Spectrum, Spectrum is a very well-defined tool where we're looking into situations where we start with unstructured data, and we need highly structured data at the end. The obvious application is web scrape prices and sectoral inflation indices. And we build a technology that sort of has good performance and realistic costs to make that happen. This will allow to provide timely inflation measurement and improve in inflation forecasting. Let me now pass over to Benedict to speak about another project examining the evolution of global value chains. And maybe there is an application for things like Spectrum in that too.
Thank you so much. So that's very interesting. I think at the moment you will notice that Project Insight is actually closer to NEO in terms of its methodology indeed than to Spectrum. So you're right, maybe there is an extension to be made by using the Spectrum approach. So in some, Project Insight is focused on global value chains, or GVCs, which, as you know, are the lifeblood of global trade, and which, as shown in the COVID pandemic, can spread shocks and, of course, have economic implications. The issue here is that central banks actually lack granular data to monitor these evolutions and shifts. So to take an example here, you have a firm from economy A and you have a firm from economy B. So they're in economy A and economy B. Behind them actually are these complex value chains, which are upstream suppliers and downstream customers. And these can be across different jurisdictions and economies. So while as economists you might get this movement of A to B, what you do not see is the whole movement behind it. Now there are data sources that you can tap on to try and understand this movement a little bit better. So zooming out at the global level, you can see this image here, which comes from a bulletin from Yunsong Shin, Han Chu, and also Lian Zhang, that illustrates how complex these global supply chains are. And it is indeed this research that served as an inspiration to start Project Insight. So in terms of the approach, it is actually quite similar to what was explained by Morten for Project NEO. So in some, it goes through the normal approaches, you could say, of data ingestion, then the very important stage of data pre-processing and cleaning. And in this case, because of the size of the data, generative AI was actually also employed here. And then it moves on to analytics, which can use traditional statistical tools as well as network analytics. And all of this is then visualized on a dashboard. The key, therefore, as with any applications to do with AI, is actually the data and where to get the data. And I think that is a distinction here between the different projects. So you got public data from web scraping, whereas these two projects actually, amongst others, got also proprietary data, okay? We can see that as a plus, we can see that as a minus. Let's face it, proprietary data do normally come at a certain cost, right? Whereas public data, they don't come at that cost. So for Insight, it actually is combining 15 billion. Yeah, I asked if that was a correct B, right? It is a B. Sometimes we say that wrong. No, it's 15 billion data points from 7 different data sets. And these include, as said, proprietary data and publicly available data from vendors, project stakeholders, and also open sourced data. Now, to illustrate that this project, like any other projects of the BISIH, I could say these are learning journeys. And to achieve an ideal learning journey, we work with others, right? Because otherwise you are just keeping the learnings very limited. So this project, as you can tell, has a lot of collaborators. These collaborators have gotten together and have developed a detailed user due diligence. That's what we call the user due diligence report. It will not be published, but that in turn is informing the exact analytics that will be showcased on the dashboard, which you can see listed here. To give you a feel for what this dashboard can show, here is an example that answers the question, how do marine trade flows and prices evolve over time? It shows monthly shipment numbers, value, cargo weights, and unit prices when specific product codes are selected. And as you can see, these maritime shipments can be volatile with noticeable movements around the COVID-19 pandemic. So this is just one example of what will be on these dashboards. The project is still ongoing. I think we're about 2/3 into the project, and obviously, we look forward to showcasing the final results. And if you have questions, remember there is our poster exhibition, and you can ask questions to the team members. So let me try and actually summarize this, right? Okay, that's my job. Okay, thank you. And thank you for the reminder. I made some notes. Okay, so I think what distinguishes our current abilities versus our past, and specifically if we use all forms of AI, machine learning, etc., is that we can use a lot more real-time data. So a lot more data, that's what we call granular. So you hear that word come up in every single AI project. Watch for it and you will see that's the word people use. De facto, it's real-time data as compared to lagged data. And I think that Morten showcased that very nicely, is to show how lagged data work versus real-time data, and he showed this very high correlation, actually. The second thing is that we are combining new data sources, and I think that's what your project is very well showing. I would say in Insight, it's also a mix of many new data sources. In terms of approach, as I explained, I do think that the approach of NEO and of Insight is quite similar in terms of the normal approach of collecting these data, then cleansing these data, then deciding what to visualize and move towards a dashboard with visualization, whereas your approach with embeddings is quite different. And then the last point I would note, going back to Professor Don's presentation and to my earlier comment, you could see proprietary data as a negative, but at the same time, LLMs are seemingly not yet benefiting from those proprietary data, right? These gated data, you could say. So there's still an edge, I think, in looking at data sets that are existent and have been collected over long periods of time. Shipping data is an example of this. Actually, shipping data is long collected in very high detail globally. So that's it, and I think we give you back 2 minutes, and enjoy lunch. Thank you.
Thank you. Okay. Welcome back, everyone. Welcome back. So, the post-lunch slot. It is traditionally the toughest, at least on the panelists, and for some in the audience. I can see you at the back. So to manage your lethargy, the program makers, they have prepared an excellent, is this a fireside chat or a panel? I think it's a panel. So 2 excellent speakers, a fantastic moderator, how central banks can make experimental initiatives real. So, joining us virtually is Fritzi Kohler-Geib, Executive Board Member of the Deutsche Bundesbank, and here in person is Dharani Seju, Assistant Governor of the Bank of Thailand. And moderating their discussion is Kenneth Gay. Kenneth heads the FinTech and Innovation Group at the Monetary Authority of Singapore. He previously led the MAS's Enterprise Knowledge Department, and he has overseen regulatory policy, Basel III implementation, and held roles in financial stability, international relations, reserves management, and enforcement. He is the central bank Swiss Army knife. So, Kenneth, over to you.
Hi, good afternoon, everyone. I hope all of you had a good lunch. So, since I have the pleasure of bringing you through the post-lunch slump, let me try to start on a more energetic note. Why does this session matter? The theme of our summit is future-proofing central banks. We've heard about the why of future-proofing, from fast-changing technology to the risk of inaction. We've also heard compelling perspectives on how AI can transform central banking. In this session, we turn to the how of future-proofing, what it takes to turn projects into action, to go from proof of concept to production, from pilots to real-world impact. To set the stage, the BIS Innovation Hub was set up as a collaborative engine for innovation, helping central banks co-create technology solutions for the public good. And we've had some early successes, which my speakers will share more about. For me, this is a topic close to my heart. I've had the privilege of being involved in the Innovation Hub's journey from day one. I've seen how small project teams of our peers, working across borders, can turn ideas into solutions that none of us could have done by ourselves. Solutions that deliver tangible benefits to central banks and other stakeholders. And that's why I'm excited to moderate this conversation and to learn alongside you from our speakers. The stakes for us here are clear. Whether it's harnessing AI or other priorities, innovation is no longer optional. For central banks, it's more than about technology. It's about stability, inclusion, and resilience in our financial system. Today's conversation will frame how we turn the innovation endeavors of central banks into lasting capabilities and outcomes. And this is where I turn to the expertise of our speakers. I'm delighted to have 2 distinguished central bankers joining me for this session. First, Dharani Seju, Assistant Governor of the Bank of Thailand, joining me here on stage. Dharani leads Payment Systems Policy, Financial Consumer Protection, and FinTech Innovation at the Bank of Thailand. She has been a driving force in payments innovation and FinTech in Thailand and beyond. Her insights today will be invaluable. Also, it's my pleasure to introduce virtually Dr. Fritzi Kohler-Geib, Executive Board Member of the Deutsche Bundesbank. Fritzi's portfolio at the Bundesbank covers areas like information technology, data and research, which makes her uniquely positioned to speak about innovation in central banking. She has been deeply involved in the Bundesbank's engagement with the BIS Innovation Hub and various cutting-edge projects. Welcome, Fritzi. So, Dharani, let me start with you. Project Nexus, which we heard about yesterday, connects domestic instant payment systems across borders, aiming to make cross-border payments faster, cheaper, and more accessible. Thailand has been a key player in Nexus's development. So what were the pivotal enablers that allowed Nexus to move from a pilot concept to real implementation? And how did you overcome challenges that arose? And lastly, what insights does Nexus offer for rolling out other innovation initiatives successfully?
Thank you, Ken, and good afternoon all. I also try to be energetic, keep everybody up. First of all, I'm very honored to have this opportunity to share our experience on taking Nexus to life. Right? I actually see familiar faces of some of us here that have been on this journey together. Ken, you yourself, the MAS, the BNM, the BSP, and RBI. So I think the pivotal strategic enabler that is first and foremost help bring this to life is the fact that we have common vision, shared purpose to bring cheaper, faster, more transparent, more inclusive cross-border payments to us all. And it is this shared purpose that give us determination to overcome any obstacle, any things that come our ways, because we know that Nexus would help us to achieve this goal together, right? So all the central bank, all the participating central bank, and the BIS Innovation Hub actually rally behind all this common vision together, and we see Nexus as a good solution to help achieve this in scale. And what do I think throughout this? I have to say, because I'm here at the BIS, that the BIS IH is very crucial in bringing this project to fruition. Because we've been working on this together, and this is what we call phase 4 of implementation. So there are phase 1, phase 2, phase 3. So it's been a long project. Andrew said yesterday it was like almost 6 years. But what is the role of the BIS? It's not just technical. It's actually act as a neutral facilitator for us, right? Their support, their steady hand help maintain momentum and build trust and turn these ambitions of ours into reality. What insight do I gain from working on this project? I think for innovation to work, for anything to work and achieve our objectives, it's not just the technology. 3 things have to come together: technologies, sound governance, and the economic incentive has to be there for it to be sustainable. And if I may say, technology is actually the easiest part. It's and particularly for Nexus, it's actually built on the current payment technology that we have. And it's just bringing together the hub and spoke model so that everybody can connect easily. The more complex, but also needed, otherwise we would not have a safe and efficient infrastructure, is the governance oversight, scheme rulebooks. We actually, in phase 3, most of phase 3 that we work on, we spend a lot of time designing the appropriate governance arrangement to ensure that this infrastructure is actually open, and transparent and help deliver the efficient infrastructure, public infrastructure that we need. And my third component, the last one that I think is needed for projects not sitting on the shelf and going into work, into reality, is that the economic of it has to work. We heard a lot that we are building, with central bank, BIS, we're building public infrastructure. There's public policy goal, but it may not align with the private incentive, particularly in this cross-border payment thing. The incumbents actually benefit from the inefficiency that is embedded in the system, right? The FX spread, the higher fee, all this, that come on. So they may not be the first one who wanted to adopt this nexus. And it's actually a very delicate issue to ensure that this thing, the aim for nexus is not to divide the fixed pie. We have to convince, we have to buy in that this would be a bigger pie, right? And that the industry can participate and adopt, and they can not only do well in it, they can also do good. So,
thanks a lot, Dharani. I think that's quite a lot of learnings, I would say, to unpack. And these learnings, I think, can only be brought about when the projects actually move, beyond the proof of concept to an implementation stage. So I think these are very valuable learnings. So now, Fritzi, let me turn to you. The Bundesbank is actively involved in a range of interesting innovation projects, both internally as well as together with the BIS. So what is the key motivation for your engagement with the BIS Innovation Hub? And what do you see as success factors of innovation in central banking?
Yeah, good afternoon from my end, and thank you so much for having me. It's a real pleasure to be with you. And thanks to technology, I can participate because unfortunately I broke my ankle and at this point cannot travel. Coming to your question, Ken, I think one key ingredient to push forward and make innovation successful is working together in teams with very diverse backgrounds. And this is in particular, now I've seen that working in the World Bank, at the IMF. I'm now seeing it in the Bundesbank, and I think, and this is what Bundesbank President Joachim Nagel said in his keynote at this summit, really a key factor of the Innovation Hub success, bringing together different central banks, and it's key for finding solutions together. And I think this is particularly true for the challenges that we face that are global now, ranging from the risks related to climate change, the fast technological advancements, as for example in artificial intelligence, or also crypto assets, as well as in cybersecurity. And I'd like to illustrate this with the example of the rapid technological transformation of the financial sector. Crypto assets and stablecoins are increasingly important, and this is why at Bundesbank we are also putting a larger focus on this topic in our research team. And in this context, I have high hopes that the Atlas project that was developed by the BIS Innovation Hub really facilitates our analysis in this area, because it basically allows the analysis of crypto markets and decentralized finance. And that then allows us to do entirely new types of analysis, otherwise impossible. And so asking about a key factor for innovation, I think it's the right balance between innovation in particular central banks and then leveraging the expertise and the collaboration across central banks in a place like the BIS Innovation Hub. For us, this is very central to really push forward with innovation.
Yeah, thanks a lot, Fritzi. I think when it comes to complex solutions, like crypto, as I shared earlier, this is where really bringing together, our collective expertise, really is helpful, as Atlas has demonstrated. So now, let me turn back to Dharani, for my next question. Thailand is integrating into Nexus, which is centered on current payments technologies. So how does this initiative align with your broader, national digital and economic strategies, such as driving digital trade and financial inclusion? And how do you consolidate, investing in current versus future payments technologies?
Okay, great. Actually, Nexus fits squarely within the Thailand digital financial ecosystem. We have an aim to create safe and inclusive digital finance. And domestically, we've seen that with our PromptPay, with our fast payment system, that it has helped bring millions into the digital financial ecosystem. Before PromptPay, most of the transaction within Thailand is actually 90+% cash. Now we have PromptPay for about 7 or 8 years now. That 90+% come down to 35%. And Thailand is actually one of the most, we have the highest usage per capita on mobile payments. And that helps in the sense that we've seen increase in efficiency, we've seen increase in productivity, we've seen increase in inclusion, and we want to extend this benefit cross-border. And Nexus is actually provides a scalable way to achieve that, right? To achieve the same accessibility internationally. And but what we see even more powerful than just digital payment that Nexus would help achieve faster digital payment and cheaper and more affordable, is actually the digital footprints that it leaves behind. Over the last day, we've talked a lot about data and AI and all that. And I think this digital footprint would help to make SMEs, household, those marginal groups that get access to finance even more, right? They could, the data that they leave behind, the footprint that they leave behind, can be leveraged to unlock credit, insurance, and to improve other financial services. And that's a lot in our region in particular, which SMEs make a big part of the economy. So, and they still have a lot of problem with financial access, right? So this would allow both informal or micro businesses to build cash flow record. Banks and fintechs can actually lower costs in assessing their credit quality and willing, can give out more credit. It's opening the door to alternative credit scoring, invoice financing, you name it. So we are hoping for that. So it's not only delivering payment connectivity, it is actually creating the foundation for financial empowerment. But you were asking how do we consolidate or balance between current and future payments. If I may, technology, like future payment technology, if I may alluded to Governor Francois yesterday that we, central bank, are not here to decide which innovation, that we leave that to private sector. But as a central bank, as a regulator, we need to be prepared for it, whatever technologies that would come out, or whatever infrastructure that the economy may need. And the way we do that is by actually experimenting, like every other central bank experimenting. We do have programmable payment sandbox. We actually experiment with retail CBDC, but for now we think with our PromptPay system being as efficient as it is, there's no need to issue retail CBDC. But we do have a capability if we need to do it. So those future payment technology is we explore and we learn by getting our hands dirty in it.
Thanks a lot, Dharani. So I think, again, we are hearing similar themes, I would say. Finding alignment with our national or respective national mandates through clarity, of the use case, clarity on the value proposition, and in terms of integration with between past and present, which I think we'll be exploring a bit more tomorrow. Idea is to be experimental, willing to try new value propositions in a controlled manner. Yep. So Fritzi, if I could turn back to you. The Bundesbank is engaged with the BIS Innovation Hub in a number of projects. How is your institution benefiting, and how do you expect to put these projects into action? Also, how can project partnerships support research and policy initiatives at the Bundesbank?
Yeah, thank you, Ken. I think the discussion and also what Dharani just said shows the wide spectrum of themes that the BIS Innovation Hub projects cover the outputs. And we see this wide range both in subject matters as well as also the maturity of the actual innovation. I already alluded to Project Atlas in the realm of crypto assets. If I turn to a different field of quantum safe cryptography, I'd like to mention Project Leap. And that was an early innovation. And basically, we did, together with the BIS Innovation Hub, basic research both on protocols for post-quantum cryptography and also crypto agility. So the ability to switch between the algorithms to protect and keep the financial system safe. And we conducted this basic research together, and now we can, in the later phases, build upon that. Third good example, I think, is Project Gaia, again in a very different field. And that basically is in the field of climate risk assessments and shows how the collaborative developments can be also leveraged by individual institutions to solve a common challenge. So the tool is basically a generative AI tool that helps to assess climate-related risks at a macro level by extracting structured data from large volumes of company reports, such as ESG disclosures. And that basically allows to go through enormous volumes of data. And Bundesbank is considering complementing our existing efforts in this field by incorporating this tool. And while the focus on Gaia so far is on climate risks, its applications are expected to be able to be extended into a broader range of areas. So to sum up, is really a large spectrum in terms of fields, but also in terms of the way in which we collaborate and at which stage of innovation we interact with other central banks and work together.
Yep, thanks a lot. I think the last point that you raised on the modalities, right, of the right modalities and pathways for collaboration are quite critical in helping to steer projects towards success. So talking about success, now let me turn back to Dharani. What metrics do you use, right, to measure success, as projects transition towards implementation? And how do you determine whether they are delivering the expected value?
Actually, for Nexus, we look at success in 2 dimensions. Within the Nexus itself, and how Nexus create positive externality for the whole industry, right? So within the Nexus itself, we expect to see the service coverage, the diversity of the service coverage, both in terms of the corridors, the diversity of the corridors that we connecting, and also in terms of use cases. Starting with remittances, but then it could be B2B, B2C. So those would things that we look for. And also in line with the G20 target, all the performance, efficiency in terms of, the speed within under 60 seconds for things to go through. And also another important aspect of Nexus is to drive down cost to below 3% for the remittances, right? So those are the things for Nexus. But we asked ourselves that whether Nexus making the whole industry better, making the whole industry deliver better service. The fact that Nexus come in, not necessarily as a competitor, we as a complementary, but we like to see that it contributes to make the financial services, the payment services better for the whole industry, even for those who don't join Nexus. So that things that we like to see.
Okay, that's great. Thanks a lot. I think success metrics are actually, especially important, I would say, as we transition from proof of concept towards implementation. And quite often also, these success metrics, alignment of success metrics with other external stakeholders is also a critical part of the process as well. So, Fritzi, if I could turn back to you. Just now you shared about how, Gaia and Spectrum, leverage, different technologies like AI to support policy analysis and also advanced data processing. So given these, the operational considerations of these technologies, do you see operational challenges within central banks relating to the implementation of these technologies? And what are the ways that we can address these challenges in order to ensure smooth handover of innovation results?
Yeah, I'll go back to the examples of the projects to illustrate my thoughts on that. One, I think there really needs to be, or we further need to strengthen a culture of trust, transparency, and close collaboration. And then second, there are also, and we've heard that in Dani's answers as well, there are also requirements for the technical setup. And talking about the trust and collaboration, the experimentation phase was very, very closely done together with Banque de France. No? And there was readiness to learn from one another regarding the technical issues related to post-quantum cryptography, but also related to project management in this early stage of innovation, and bringing together those pieces of expertise of different institutions really made a huge difference, actually, in providing that innovation. When we come to the technical setup, I think Gaia is a very good example because it requires technical capabilities, in particular also the application programming interface, to allow the systems to work together. But at Bundesbank, we're at a very good place to be able to do this. And it requires to work further on those technical abilities to really incorporate such outputs into then the applications at the Bundesbank in our example now. And this is true for all the other central banks as well. So I'd like to mention those two at this point, the collaboration, trust mindset, and then the technical setup.
Thanks a lot, Fritzi. I think this leads nicely to the last question that I hope to get a quick response from both of our speakers on, which is the notions of capacity building and knowledge transfer. So Fritzi spoke about the importance of technical capabilities and collaboration. All of these capabilities, right? How do you approach them, right, to ensure that innovations can be sustained beyond the initial project team? Darani.
Nexus itself is designed as a public infrastructure. And thanks to the BIS, actually, the details of how Nexus came to be is well documented and well reported by the BIS. And whether that is enough, we don't think so, right? So the Nexus itself is actually incorporated as a corporate setup. So in that setup itself, then there needs to be continuity in building sustainable knowledge. But as everything, what matters is investment in human capital, right? Everybody been talking that how you attract new talent, how do you keep them, how you upskill, and all these things need to be invested in. And what we found very good is if you get your hands dirty, we have teams that actually involve and not just reading it, but involved in experimenting. And that could help, but that we need to expand that team.
That's great to know. How about you, Fritzi? What's your takeaways?
Yeah, I think what is a particularly relevant point is basically the transition of a project into production. And for that, a well-planned handover is essential, where basically the project team supports the operational team during early production. And in the context of introducing outputs from BIS Innovation Hub, we've created internal communities of practice or working groups working on particular new technologies. A good example is the internal community of data science, where data scientists across the Bundesbank come together and share their experiences and knowledge. But also, the exchange of expertise across institutions is key, as we've already seen before. And in that sense, I think that the BIS initiatives for community building and shared source frameworks are really welcome to provide and co-develop code, as well as sharing best practices. And with this together, I think it allows us as a central bank community to stay at the cutting edge of technology development, which we need to maintain and to pursue our mandates in maintaining price stability at this point.
Yep. Thanks so much, Rizzi, for that. I think those are really, that's a great way really for us to wrap up. And let me just, give a quick set of, takeaways for everyone, given that, it's just past lunch and maybe, some of us may still be struggling, to stay awake. So let me wrap it up for you. So first, what did we take away from this? How do we future-proof ourselves, by turning our proofs of concepts into production? First, what's very important? Shared purpose and clear value propositions, right? Projects succeed when all parties agree clearly on what is the problem to solve, whether it's cheaper, faster, cross-border payments, financial inclusion, climate risk, or quantum. Second, alignment of incentives. Framing the collaboration clearly gives the project legitimacy and encourages participation beyond narrower institutional interests. We heard a lot also about the importance of commercial alignment, commercial incentives, and we also need to take into account positive externalities. Next, what is also needed? Strong cultural enablers inside central banks and with the private sector. We hear a lot about the importance of trust, transparency, and careful experimentation. And projects succeed when there is mutual trust, clear governance, and aligned incentives. Finally, projects need clear integration and adoption pathways. Beyond proof of concept, institutions must plan for how products will be measured and adopted. We need to think about transitions, integrations with existing operations, regulatory frameworks, and policies. So with that, please join me once again in thanking our speakers for their insights, and I wish you the best for the rest of the day ahead. Thank you.
Thank you so much, Kenneth, and Fritzi and Dharani too. So I'm looking, I don't see anybody asleep, so thank you especially. And we have the second keynote of the day today now. So joining us virtually to talk about horizon scanning is Professor Claudia Buch, chair of the Supervisory Board of the ECB. So Professor Buch was the vice president of the Bundesbank, president of the Halle Institute for Economic Research, professor of economics at the universities of Magdeburg and Tübingen, and a member of the German Council of Economic Experts. Professor Buch, the floor is yours.
Thank you very much, Henry, and good afternoon to the whole audience. I really need to apologize that I can't be in Basel today, but I had a visit to the Central Bank of Ireland scheduled a while ago, and this is where I am now. So the background that you see, this is an island, and I'm really happy to speak to you. I saw it's a very impressive program. that you're going through, because the main theme of my talk will be how do we respond with good infrastructure building to the challenges that lie ahead for regulation, supervision, and the questions that are currently being asked about the adequacy of the post-financial crisis regulatory framework that we've put into place. So maybe just going a little bit back in history. So it was 17 years ago, roughly, when the global financial crisis struck, and we've done a lot collectively in the policy community, the supervisory community, to do institution building in terms of regulation, but in Europe also in terms of creating the banking union. So this is clearly something that has changed in the past 17 years. There's been a lot of digital innovation, and basically the conference here bears testimony to this. Lots of things changing in the financial sector, positive developments, but also, of course, more competition. And there's many emerging risks, so that I would say is the last element of the changing landscape in which banks and other financial institutions operate. And of course, we all agree that maintaining financial stability, what has been achieved since the crisis, that is really key. At the same time, the achievements of the post-crisis reform agenda are often being questioned. And I think our response should be, yes, to take also the questions that are being raised seriously, to become more efficient, more effective, more risk-based, but clearly no in terms of softening of standards, weakening resilience. I think this would really not be learning the lessons that we have from history, even further down, even further back in time. We all know the book by Reinhardt and Rogoff, This Time is Different. Typically, it's not different. So we tend to underestimate the vulnerabilities that build up in the system, and I think they're all still with us. So if we could go to the next slide, I could show you what I have in mind, what I would like to talk about in this next 20 minutes in terms of what we can do to respond to those that say we've gone too far, we're too intrusive with regard to supervision, with regards to regulation. I think our response as also technocratic institutions, central banks, should be to provide the best evidence. And the best evidence needs to take into account what has changed in the meantime. So basically what I'm talking about is something which you could call a policy cycle, evidence-based policy making, and I just roughly sketch it on this slide here. So it's basically starts from defining the broad policy objective. So for the post-crisis financial sector reforms, this is to make the sector more resilient, to reduce the probability and severity of financial crisis. Then we need to, of course, operationalize this like in monetary policy with some intermediate indicators. And then we need to define policy measures that can tilt the balance to get us closer to the policy objectives. And these are the post-crisis financial sector reforms. And then in the end, we need to evaluate what we have done, and we need to take confounding factors into account. So, for example, when we talk about resilience, we clearly have to acknowledge that over the past years, the shocks that have hit the real economy and the financial system have also been buffered by fiscal policy to a large extent. So we need to take this into account when assessing the evidence of the effects of the reforms. And any potential future changes of regulation should clearly also follow this evidence-based policy cycle. But all this requires a good infrastructure. So this just doesn't happen on itself. And I think here also the BIS has a key role to play to contribute to further building this infrastructure. So let's go to the next slide, and I explain a bit more what I mean with infrastructure. And then I will go into the elements of this slide. So the first is evaluation framework. So basically implementing this policy cycle that I've been talking about. Second, we need good repositories of all the studies that are there, that are conducted inside public sector institutions, but also by academia. We need to conduct meta-analysis. Third, we need good data centers and common data documentation, and seeing the program that you've gone through and that you're discussing. I don't need to bring this message to this audience. And clearly also we need to promote and harness innovation. And finally, a final element of this infrastructure is also network building, communication. So that's why it's also good to have this conference here. So, and the good news is all the elements of this infrastructure are there, but we still need to do more to really develop it and to use all these elements very actively. So let me describe on the next slide what is there and also what is the very important role that the BIS is playing. So first, evaluation frameworks. We need them to manage this policy process that I've been describing, to make sure that, for example, very practically, we have the data that we need in order to evaluate, to go through this policy cycle, that we have this data also readily available. That's reducing a lot the cost of policy evaluations. And policy evaluation, these frameworks also mean that we do outreach to external stakeholders who have interesting evidence to bring to the table in terms of effects of reforms, but also potential unintended effects of reforms. And this is essentially what the FSB framework for the evaluation of post-crisis financial sector reforms is doing, and I would say something about this in a minute. And also the BIS, the Basel Committee on Banking Supervision, of course, has a very clear evaluation agenda, evidence-based agenda, as the chair of the committee has recently also mentioned in a speech. So just to give an example, the FSB has done evaluations of post-financial crisis reforms, lending to SMEs, infrastructure finance, too big to fail policy, central clearing. And without, of course, doing justice to all the richness of these evaluations, they basically show that the benefits of the reforms outweigh potential unintended side effects. And we also know from a lot of work on the capital related reforms that stricter capital requirements do not constrain lending or growth. And this is also the result from a lot of these studies. And we need, as I said, to use them further to also address new issues that are arising. The second element of this infrastructure is that, that's on the next slide, all the evidence that is there that I've just sketched needs to be brought together. Of course, we can't just take one study and derive policy implications, but we need to look at the richness of evidence that is there. And this is basically what repositories can do. And there's a very concrete example here, which is FRAME, the Financial Regulation Assessment and Meta exercise, which is hosted by the BIS. It's a little bit similar to, I also put this example of the Cochrane Foundation, which is a repository of impact assessments in the field of medicine, so very different from what we typically deal with. But the idea is very similar, to bring all the evidence together, to make it easily accessible, searchable, to make sure that we base our evidence on our decision-making on the best available evidence. Why is this related to the BIS Innovation Conference? Well, because we can do a lot with AI tools to reduce the cost of putting together repositories, to do meta-analysis. I think there's a lot, and we have also tools developed within the ECB supervision to make this possible, to use AI tools for this purpose. For the sake of time, let me not go into the very details of the two additional initiatives that I have on the slide here. One is the International Banking Research Network, which is also a way to bring together analysts, researchers from central banks, from international organizations to work together to create more evidence that then also can be brought into repositories, and to basically conduct similar types of empirical studies across a large set of countries, and then share the codes, compare the results, but overcome the problem that very often we cannot share the underlying microdata that we need to do very careful impact assessments on, for example, how shocks are affecting internationally active banks. So this network, under the great leadership of Linda Goldberg, who's I think also somewhere in the audience, has been around for more than 10 years now, and I think it's a very useful example of how collaboration can be used to enhance our common knowledge. The Network for the Greening the Financial System is, of course, another very important example. All this, and this is on the next slide, is, of course, relying on good data inputs into the analytical work. And as I said, the International Banking Research Network, to give this example, was founded as a way to overcome the problem that the microdata that is needed for good policy evaluation can typically not be shared across countries or across institutions because of data confidentiality restrictions. At the same time, I think a lot has happened in the policy world with public sector institutions, central banks, to make data, microdata, accessible to external researchers. So this is happening within central banks, and also the BIS is contributing to this. And there's one network called Innexta, which is basically the granular data network. So all these providers of granular data coming together, exchanging experience, and how then data access can be made feasible. And for everybody who's worked in this field knows that how important it is to document data carefully, to have data dictionaries, to also manage access rights to microdata. And this is where, again, digital tools, subtech tools, so digital tools that are developed within supervision can help tremendously. So what we have, to give an example, in the ECB is Agora, which is a data lake, which is making supervisory data accessible to supervisors across the system. Of course, again, managing access rights very carefully, but making sure that the decisions we take are based on the best available data, and that we share whatever is feasible. A related project is Athena, which is a platform for managing and searching the data, also using large language models. And I should say that we're also very happy to share our experience here, and I'm sure some of the colleagues are also in the room, that we're very happy to share our experience with other institutions. And of course, to the extent that there's anything that's public, based on public data, we're also planning to make evidence available publicly. Of course, everything we do in supervision is also very subject to very strict data confidentiality arrangements. But whatever we can do, whatever we can share, we will also make it available. Let me mention a small initial project also of the ECB. So that's a pilot project for research, to give researchers access to confidential statistical data. You see this here as well. This is in collaboration with other central banks. So using the research data infrastructure in central banks, we also plan to make more data available in order for others to use this information. And I've mentioned already, and we can go to the next slide. I've mentioned already that all of this, putting depositories together, making data available, making the information that we have easily searchable, bringing people together. Of course, that these elements of this infrastructure are already there, and we can use them in a much better way and also build on these elements by using and promoting innovation. So we make very good experiences with internal in the ECB, but also again in the spirit of sharing our expertise with other institutions, with AI tools that allow us to better model our data and to enhance evidence-based policymaking. And I think in particular at the current juncture, this is important because we're dealing with an environment, as I've said at the beginning, where a lot of parameters are changing, where there's digitalization, new markets opening up, new competitors entering the market, and we need to understand what this means for the core financial system. At the same time, we have many structural breaks. So with emerging geopolitical risks, with changing also international institutional frameworks, we need to understand how this is affecting financial stability, the soundness of financial institutions. So when I'm saying we need to use and exploit innovation and the digitalization infrastructure, this is not an end in and of itself, but it's really there to also promote our understanding of what are the risks, what are the fragilities in the financial system. And again, as I've said, the BIS Innovation Hub can play a very important role in facilitating and sharing innovative solutions. Let me again quickly mention two tools that we are using. One is called Navi, and it's already a little bit in the name that it's about navigating us through the complexities of financial markets. We know that financial markets are very interlinked. We have actors on financial markets that have very complex organizational structures globally. So Navi is basically a tool to do network analysis and to also visualize financial system interlinkages. Another tool is called Gabi, a German first name. It's an acronym for actually something very, very interesting, which is the optimization of regression models, stress testing. So basically using AI tools to optimize the way we conduct our analysis of financial stability risks. And here I also see great potential for collaboration with externals, with researchers who are struggling basically with the same problems as we do in terms of how to best model the system, the financial system, and the interlinkages and the new structure of the system. And let's go to the next slide. And this already says how important it is that we develop these elements of the infrastructure by closely collaborating with researchers, with analysts, with academia outside of the supervisory/central banking world. So what the phenomenon that we often have, and I'm simplifying here, of course, a little bit, is that often the policy world is sometimes very, very quick. We sometimes don't have the time and also the resources to really do very refined analytical studies. We have a lot of evidence, we have a lot of information, we see a lot of questions, but often there's not the capacity to go into the detail that is needed to do good analytical work. The research community, on the other hand, has maybe more time and also the skills and the analytical tools to do the analysis that is needed to understand financial stability risks in the new environment, but then it's often difficult to really focus on the policy relevant issues, not because of a lack of interest, but because sometimes actually policy relevant work is not fully appreciated, let me say it this way, also in the academic process, the refereeing process. And there's one specific issue that I would like to mention here. In order to have good evidence on which to base policy decisions, supervisory decisions, we need a lot of replication studies, also to update the repositories that I've just been talking about. But replication studies are often not really rewarded in the academic field. So I think it's really important that we work together, that we try to understand how to bridge this gap, and we're certainly we have a lot of initiatives, probably not enough yet, to bring policymakers/supervisors and academia together. Just two examples here. One is a doctoral network on digital finance that we are supporting. So we will have also doctorate students coming to the ECB, working with us on developing these digital tools. And the second initiative that I would like to mention here is our annual ECB Banking Supervision Research Conference later this year, where we'll also talk in more detail how we want to further develop our networking, our exchange also with the academic community. And of course, I've mentioned the access to microdata that many central banks and also now increasingly the ECB is facilitating. So I come to the last slide, just 1 minute left, and I can be very quick here. So yes, we live in very challenging times. So the risk environment has changed. The financial sector is becoming more digitalized. The benefits of the post-crisis reform agenda, which is clearly there, the evidence speaks a very clear language here, is still often being questioned. I think the best response that we have is to really improve the elements that we have for a 21st century infrastructure to facilitate evidence-based policy, data-driven supervision. So I think this is what we can contribute, and where I hope I've given you some ideas of how this can be done, and I hope that we can also in the future collaborate on these initiatives. I don't read them out, you've seen the slide before, so I just leave it there. So thanks a lot again to the organizers. Thanks for listening, and I hope that we will stay in touch and maybe next time see you in person. Thanks a lot.
Thank you so much, Professor Buch. So, and thank you especially, actually, because that's another noble tradition of the Innovation Summit, which is promoting competing project agoras. I don't know if you noticed that. Anyway, so we welcome back, on that note, Morten and Benedict, and we introduce Per von Zellowitz, who is from the New York Innovation Center at the New York Fed. They are connecting more dots for us. So we've had dots before, but this time these dots are FMIs, financial market infrastructures. So Benedict and Per and Morten, over to you.
Thank you, Henry. Thank you for the kind introduction again. So for the BIS, tokenization, like AI, represent a transformative innovation or new technology to improve the old, but also enable the new. And we've seen it can pave the way for new arrangements for cross-border payments, security settlements, and bond markets and beyond. And I also think after many false starts, we are seeing tokenization initiatives more and more in the private sector, such as money market funds, bonds, ETFs, loans, and securitization, tokenized deposits, and of course, stable coins. So in this session, however, we will focus on public sector tokenization. We will explore 3 initiatives in the BIS Innovation Hub. And you can kind of see the things that we're doing really falls into 3 groups. So reimagining existing arrangement, exploring new arrangement, and upgrading financial instruments. And we'll focus on Genesis, Promissa, and Pine in this session. So Genesis is around tokenizing sovereign green bonds. Promissa is a platform that tokenizes paper-based instrument that the World Bank used to finance themselves. And Project Pine was looking at the role of tokenization in potentially enhancing open market operations by central banks. Benedict will kick us off, then I will speak on Project Genesis. I will speak a bit about Promissa, and then over to Per. And Per also have the very honorable role of tying it all together in the end, and maybe perhaps even look to the future. So over to you, Benedict.
So thank you very much. So I'm glad to present to you Project Genesis. In fact, Project Genesis was one of the Hub's first projects, and it was the first tokenization exploration focused on sovereign bonds. The project was framed and started in 2021, when tokenization, you could say, was still at its inception stages. In fact, the term tokenization of real-world assets that you hear a lot of people talk about now, in which bonds fall into, did not even exist, had not seen the light of day. However, the benefits of fractionalization were touted very early on in the days of crypto, as early as the birth, you could say, of Bitcoin, and later with the onset of ICOs on Ethereum. And somehow innovation takes root quite early in Asia. So to my surprise, when I looked in 2021, in fact, the Thai and the Philippine governments were already testing the implementation of tokenized sovereign bonds. So looking at this, we definitely thought that tokenization could improve fractionalization. But we saw the benefits beyond that. We thought that through the combination with smart contracts and programmability, we could also go a step further in terms of, for example, monitoring and end-to-end automation. And I'll come to this later. Our stakeholder group, as with the other project I presented, was very large, and it consisted at the time of what I call the tokenization and the green finance aficionados. So what did we learn? The first project, or the first iteration of Genesis, which we call Genesis 1.0, was focused on the retail use case, with the focus being on the fractionalization of the bonds. So in sum, you can do the placement in much smaller denominations. And we combined this with end-to-end digitization. So the first end-to-end digitization we looked at, a key friction in day-to-day finance is the onboarding process and the so-called KYC. We automated the KYC in two means. One, through connection to a new government database that was nascent in Hong Kong. Also in Singapore, there was a similar database. In Hong Kong, it is called IM Smart. And secondly, for those who do not want to be connected to a government database, those who treasure their privacy, we also offered a private sector automated KYC onboarding solution that was near instant, that had been piloted in the crypto sector, but in Hong Kong was already adopted by the neobanks, the online banks. In addition to that, while it was early days in 2021, we decided to not just look at permission-based ledgers, but also at public blockchains. And so the two prototypes that you can see if you look at the report, one of them was built on a public blockchain, and at the time, Stellar was chosen. Now, 5 years on, it's only taken 5 years, and a lot of the capital markets instruments are actually piloting being placed on public blockchains as opposed to on permission-based ledgers. I would note the other prototype was built on a permission-based ledger. And then finally, we also explored another element that even today is still highly topical. The question of whether payment could be done via an RTGS connection or whether it better be done in digital cash, which could be in the form of central bank digital cash or in the form of stable coins. And all were deemed possible. The second iteration of Genesis then went into an institutional direction, from the retail direction to an institutional direction. And this was as a result of our collaboration with the UN. And in particular, there was a challenge around funding for projects in the Global South by funds in the Global North. In this type of a context, there is often distrust, and in particular, a risk of greenwashing. So we saw the opportunity there of using blockchain to be an immutable ledger, in this case of carbon credits generated, that through smart contracts could be delivered as coupons for the bonds payments. 5 years on, we have seen this concept also come back in quite some of our endeavors. So Genesis was followed by an actual implementation by the HKMA, as Eddie has explained. In fact, the HKMA did several government green bonds. Some of them, as he said, were very early stage, and there were many challenges in the placement, but it enabled early learning. And as I mentioned, we also rekindled the concept of the interlinkage between IoT devices, blockchains, tokenization, and even AI in the context of at least two tech sprints that we run, one with the UAE in the context of COP27, and the other in the context of the Brazilian G20 presidency last year. In some, these were early stage use cases that eventually I think will come to market. And now I pass it to my colleagues to go through two more early use cases.
Thank you, Benedict. So Project Promissa. So what is Project Promissa, and why did we do it? So it turns out, I didn't know this a couple of years ago, but governments finance the World Bank and all other multilateral development banks via paper-based promissory notes. And the management of that and the recognition process is very time-consuming and even cumbersome. And so what did we build? Well, we're using DLT or blockchain technology. We tokenized these promissory notes and put them on a blockchain. And we built a prototype and we tested it with global partners. And how? Really, this thing, the interesting thing is really that what they don't have today is now they have a common shared source of truth where everybody can see what goes on. And then we were able to automate a lot of the workflows using so-called smart contracts. The project group was the BIS Innovation Hub, the World Bank, and the Swiss National Bank, and the IMF participated as an observer. Not that we need to go into very much detail around promissory notes, but I'd just like to just highlight a few points. So there's the promisor, that's usually the Minister of Finance. That's the one that issues the promissory notes, so promising to pay, say, the World Bank X billion over the next 3 years. The promisee would then be the World Bank, the receiver of the promissory note. The promissory note would be held in custody by the central bank in its role as the bank for the government. And the central bank often also serves as the payment agent, so the one that actually pays out the promises. And so when the World Bank needs money, they send an email, message, fax, whatever, to the Minister of Finance requesting payment. Another message then goes to the central bank that then actually takes out this paper-based instrument of its wall, flips it on the other side, updates the principal, a stamp, 2 signatures, stick it back into the wall, and then actually effects the payment to the World Bank. So the processes were very manual, paper-based, and we were able to put that into a digital format. So we went straight to blockchain, so we kind of skipped the step that many other dematerialization projects have done. So what did we build? So we built this prototype. We provided all the users with their own personalized user interface where they could see any recent activity. They could see either the promissory notes that they had issued, that they had in custody, or that they were the receivers of. And they could also click and see like the expected payment schedule, so on and so forth. So how did we test it? We tested it with a number of central banks all over the globe. And not only did we do it with the World Bank, we also did it with the Asian Development Bank. And we ran tests throughout all the manual cycles of the management of these promissory notes. What did we learn? DLT works, right? So tokenization can replace paper. Isn't that great? And it can actually cut reconciliation to just a matter of seconds. And we think something that we really enjoyed was really this co-design with the World Bank, the IMF, and also the Asian Development Bank, and the central banks to try and figure out how does these workflow work. And there's small differences across countries, but like trying to get a workflow that works for everyone. And then we figured out that we built it to scale. So once governance and standards are kind of like established, the platform could actually easily be expanded. So that's it, Project Promissa. I turn it over to Per.
Thank you, Morten. And we'll switch over to Project Pine next. And a common theme we've heard about over the past few days is the value of collaboration. And Project Pine is another example of that. Project Pine is a joint research study between the New York Fed's New York Innovation Center and the BIS Innovation Hub Swiss Center. Collaboration has been a principle of the way that the New York Innovation Center works since its inception, and also one of our key success factors. So with Project Pine, as we start all of our New York Innovation Center projects, we focus on what we believe is a high value and important problem or opportunity. So with Project Pine, we assumed that commercial banks and private sector financial institutions will implement tokenization at scale for wholesale payments and security settlement. And in that future state, central banks may need to also use tokenization and smart contracts in order to deliver their ability to deliver financial and monetary stability. So what did we build with Project Pine? We developed a prototype of a generic monetary policy toolkit, and using tokenization and smart contracts to execute different monetary policy operations. And I'll highlight 2 points in that description. One is this toolkit was generic, so it's not about Federal Reserve monetary policy setup or any other specific central bank, but was really designed to apply to a wide range of central banks around the world, depending on their specific monetary policy approach. I also reference operations. So Project Pine is not about implementing policy decisions. We still leave that up to the governors to decide what the policy should be. But once those decisions are made, we might have the ability to deliver operations in a different way using these new and emerging technologies. So our prototype was designed, among other things, with the ability to pay interest on reserves, and also, for example, create a number of facilities to deliver the operational aspects of monetary policy. So, for example, temporarily exchange reserves for collateral and vice versa, swap assets, and also execute sales and purchases of assets. In order to test Project Pine, we used 10 specific use cases that were based on former examples of hypothetical scenarios. These were all simulated, but you can imagine these were different events that happened in the past, such as scenarios including interest rate tightening and easing cycles, quantitative easing and tightening, and also periods of strained market liquidity and other types of disruptions in the financial system. This is a screenshot of the prototype that we built. And what's informative about the image that we have here is that, among other things, we tried to design the ability to visualize the financial system. So the circles and lines that you see there represent different aspects of the Pine prototype and the different capabilities of the prototype. So, for example, the little circles that you see there might represent individual smart contracts that could represent different institutions that are trying to execute some aspect of their role given the financial system. The lines that you see connecting the different circles there represent the financial flows that are taking place between the different institutions. So given the 10 scenarios that we tested against, we have the ability, again, to visualize how this might work given the specifics of the scenarios that we wanted to implement. And if you go from left to right on the slide, you'll see the different columns that represent things like the different institutions. So all the way on the left-hand side, you see the role of the central bank. Then moving over to the right, you have other commercial banks and also the institutions that the commercial banks ultimately serve, but also instruments and assets that might be available in this financial system. So if you're interested, we'd be happy to follow up with you and provide a demo of the prototype as well. So what did we learn from this exercise? Similar to what you heard from Genesis and Promissa, it can be done. So we tested the technology, and the technology works. Again, this is a prototype level of fidelity, so if there was an objective to progress this beyond that point, there's a lot more work to do, but within a research context, it can work. There also might be benefits. So we demonstrated the ability to create facilities in a much more agile and rapid way than is currently done across many central banks. So if there is a financial crisis, speed is often a success factor in trying to address the crisis. So using smart contracts and tokenization in this future state might allow us to move faster and in a more agile approach. It's still very early, so certainly tokenization is happening. There are many examples of that we've heard about over the past 2 days, but it's not at scale yet, and we don't know if it will ever reach scale. But it's still early, and it's appropriate to start to learn more about this, so in the event that it does reach a point of scale, that we're prepared. And finally, there's more to explore. So with Project Pine, we focused really on a domestic oriented use case, so a facility that would be available to a single central bank. And you can imagine there's a number of questions that weren't addressed during Pine that might be interesting to explore in the future. And then finally, why does this matter? Why does this research matter? Why is it important? So again, as we've heard about over the past 2 days, change happens. Things have never been moving faster than they are today, and it's likely it will only accelerate over time. And preparation helps. So we prefer to do the homework before the final exam. And this research really represents an attempt to try and do that. So again, in the event that tokenization really starts to be adopted at scale, some of the research that we're doing now might inform steps we can take in order to address the opportunities that are available to us with these emerging technologies. So with that, I will focus on wrapping up some of the themes that we've heard. So again, thank you, Benedict, for helping us understand more about Genesis, and Morten with regards to PROMISA. And some of these themes will sound familiar from what we've heard over the past 20 minutes. But with Genesis, PROMISA, and PINE, we heard about 3 use cases. But if you think back to the slide with the pie chart at the start of the presentation, there are a number of opportunities that weren't addressed just by these 3 projects or others that were represented there. So the 3 aspects of the pie chart, for example, focused on upgrading financial instruments, reimagining existing arrangements, and also exploring new arrangements. And while these 3 projects address some components within those areas, there's a lot more work potentially to do. On that slide also were referenced projects including Dunbar, Mariana, and Agora in some of those segments. And again, those are just a few examples of opportunities to explore different use cases. The BIS Innovation Hub has a robust portfolio of research. So these are just 6 projects out of many tens of projects that the Innovation Hub has either concluded or are currently working on. But even with this robust portfolio of research, there are many white spaces that still need to be addressed in order for us to have a more comprehensive understanding of the potential of these technologies and the potential of these new value propositions to be brought to market. So again, it's still early and there's lots more work to do. Second really is momentum is building. So stuff is happening. By no means are we at the starting line. We're past the starting line with much of this, but it's still early. We're starting to realize the true value in some of the technologies. So there are services and products that are coming to market at a production level of fidelity. There's real money being used relative to some of these products and services, real clients and customers using them who are capturing value from these. But it's still early days, and there's a lot more work to do to validate the value propositions that might be associated with the use cases that are being tested. And it also takes an ecosystem. So we've heard from Morten and Benedict about the value of collaboration, again, with Genesis and PROMISA. That was key with regards to PINE also, including the different central bank advisors that were involved in the project. And this is something that's common across almost every BIS Innovation Hub project. So it typically does not pay to conduct this kind of research in a vacuum, but there's tremendous value in working with like-minded partners who can help you understand how to address the problems and opportunities from a number of different perspectives. And then finally, what's next? So we've talked about the white spaces and opportunities to do more. And certainly this list of 3 is not comprehensive, but it's really a starting point. But it's clear that there are some areas where there's still tremendous value, large problems to solve, and large value propositions to validate, to understand, can we deliver the opportunities to the financial system that we think we might be able to deliver. Cross-border payments is a clear example. It's not to say that there isn't a lot of work going on in this area already. There is. Project Agora is another example of a project that's been referenced addressing opportunities in this space, but there's still more to do. We've also heard about multi-asset opportunities. So with PINE, PROMISA, and Genesis again, they were all addressing different types of instruments. And that's just a subset of the number of instruments that might be available ultimately with these new emerging technologies. So think about the opportunity to validate multi-asset infrastructures to deliver different types of value propositions. And then finally, a theme that is becoming more and more important, and again, Genesis is an example of a project that has done early work supporting this theme, is the convergence of traditional finance, TradFi, and decentralized finance, DeFi. So we really see opportunities for traditional financial institutions, including central banks, commercial banks, and others, to potentially benefit from some of the decentralized finance infrastructures that have been tested outside of the regulatory perimeter, but are now starting to come into that space. And I think that's clearly a trend that will continue to progress over the future. And again, an opportunity for us to learn a lot more, to understand where are these types of infrastructures relevant or appropriate for the regulated sector, and where might they help us deliver the opportunities to address the problems that we've identified so far. So with that, I will close, but I will also invite everyone who has more interest in these 3 projects and others that the BIS Innovation Hub has been involved with to come up and ask us questions during the coffee break. And we look forward to continuing the conversation with you all.
Thank you very much. So we had AI dots, we've had FMI, or tokenization, same thing, dots, and now it's time for some cyber dots. I don't know why anybody would leave for that. But anyway, sorry. So please welcome back Raphael. And joining him virtually is Beju, fantastic. Beju Shah, who is head of the Toronto Centre. So.
Hello, everyone. Again, it's great to share some insights, connecting the dots, new frontiers in cybersecurity. I'm joined by Beju, who's held in Canada because he just transitioned there, and I guess the passport is still, the visa is still being issued, right? Which keeps the passport.
I have it now.
Oh.
The other night, so it's all good.
Very good. So we'll see you soon here in Basel, but for now we still have to do with a virtual Beju, who will still do a great job. And what we really want to talk about is a specific aspect of cybersecurity, the threat that quantum computers could pose to the financial system. These are still in an experimental phase today, but once they will mature, they will be able to break a large part of the cryptography that is being used to secure financial transactions today. And obviously, this can potentially jeopardize the integrity and privacy of financial data. And in this context, what we want to discuss today is, first, what is the problem that we're addressing? Second, how are we at the Innovation Hub tackling it? And third, also, what are the necessary actions from a central bank and supervisory perspective, a bit more broader? I'll introduce to the topic, then Beju will present two projects, Polaris and Fuse. Then I'll present LEAP, and I'll conclude with these considerations from a broader systemic perspective. So, let's start with a bit of computing history. Here we see two early stage computers, 7 decades apart. On the left-hand side, you can see the ENIAC, which is a 1945 machine. It's a massive machine that had thousands of vacuum tubes that generated a lot of heat, and they were actually prone to frequent failures. And actually, there was considerable doubt whether this machine would ever be economically viable and find use cases. It was costly, it was complex, and there basically was also no market demand for it. But of course, today, we are using machines like this, and we have machines much more powerful in our pockets. Everybody has a smartphone. Maybe even our watch is 100 times more powerful than this computer. And if you take a look at the picture to the right, you see again an early stage machine. It's the IBM Q System 1, created in 2019. It's equally bulky and costly, just like the ENIAC was in the 1940s. So quantum computers have been a thing of the future for decades, and one may be forgiven for sort of thinking that their impact on cybersecurity does not need to be our top concern today. But I think if you take these two pictures side by side, you cannot ignore these developments. Let's be a bit more specific. When do we think that quantum computers will be ready to threaten today's encryption? Here, we see a graph of the evolution of various quantum technologies and not their processing power, but sort of the qubits that they work with. We see at the moment we're somewhere in the magnitude of 10 to the 4. People think that, and obviously there's a lot of uncertainty around this, Once we reach an order of magnitude of 1 million qubits, there might be quantum computers that are capable of encrypting today's RSA encryption. So there is still some time, but there are also developments that we cannot ignore. And there's one thing that needs to be said very clearly. Financial data has high longevity and is very sensitive. And there is the threat of harvest now, decrypt later, that would really undermine trust in financial systems. And that scenario is that internet traffic is intercepted today and stored and decrypted in the years to come once such computers are ready. And that means even if from a pure technology point we are not there yet, we need to start the transition to quantum safe encryption now. And that's what we do in the Innovation Hub with 3 projects. I'll now pass on to Beju from the Toronto Centre, who will present 2 exciting projects, Polaris and Fuse. Beju, over to you.
Move to the next slide, please. Before I get into the projects, I just wanted to give you a bit more of the landscape of the projects that we have in the Innovation Hub that help us better understand some of the implications of the quantum threat and applications of quantum safe approaches. Project Polaris, whilst focused on cybersecurity for CBDC systems and future monetary systems that would need to operate both online and offline, highlighted the importance of quantum readiness, crypto agility, and operational agility for central banks. Project Fuse explored a microservices-based architecture for a scalable settlement engine and experimented with post-quantum cryptography, exploring the interplay between scalability, flexibility, and future security needs when designing such systems. Project Leap looked directly at quantum-safe communication channels, testing whether central banks could exchange messages securely in a future where today's cryptography may be broken. And finally, Project Tourbillon centered on privacy-preserving CBDC prototypes and raised important questions about how quantum computing might undermine privacy guarantees, but also how new cryptographic approaches could address that. We move on to the next slide. Now, I want to discuss the threat landscape a little bit. Let's imagine the cyber threat landscape as an iceberg. What we see above the waterline is only a fraction of the danger. Above the surface are the visible attacks like ransomware, phishing, data breaches, and even supply chain compromises. And as I mentioned yesterday, these are increasingly converged with financial crime. Ransomware proceeds are laundered using cryptocurrencies. Cyber intrusions are used to enable data theft and fraud, with identity theft feeding into money laundering networks. What once were considered separate domains of cybercrime and financial crime are intertwined. Now, just below that lie the risks from rapid growth of digital payments. Instant transfers, mobile wallets, stable coins, cryptocurrencies. These innovations bring speed and efficiency, but also provide new channels that threat actors exploit to move illicit funds quickly and anonymously. Deeper still are the systemic vulnerabilities, reliance on common vendors, concentration in cloud services, and interdependencies across systems. And these create the risk that a single compromise could cascade across institutions and the financial system. Beneath that are our own cyber resilience frameworks, which provide the ability to identify, protect, detect, respond, and recover. And these frameworks are essential for prevention and limiting the damage of cyber incidents. But at the base of the iceberg lies the quantum threat. It may seem distant, but once realized, today's cryptographic protections could fail, undermine the security of digital systems, and as Raphael mentioned, also the integrity of our financial data, and therefore threatening trust in the financial system. Now, these visible threats are serious, but the layers beneath may prove even more consequential. So true resilience means preparing for all layers of the iceberg. I'll now move on to discussing 2 of the projects that we mentioned earlier. So if we move to the next slide. The first project I'll discuss is Project Polaris. Now, as we think about payments modernization, it's obvious that cybersecurity has to be at the core of system design from the outset. And this is particularly true when considering systems that involve offline payments. As part of this project, we conducted a survey of central banks, with 98% agreeing that offline functionality would be needed or beneficial for either inclusion or resilience needs primarily. The survey also raised many security and integrity concerns that would need to be better understood. So Polaris provides a body of work to central banks to navigate the range of complex interrelated topics covering the intersection of cybersecurity and the future of money and payments. Firstly, the handbook on offline payments asks, what does it mean to enable payments when there is no connectivity? It discussed the reasons for offline payments, the technologies available, the security aspects, and the trade-offs that would need to be considered between achieving resilience, inclusion, and privacy, but also what the possible security and integrity risks are and their mitigants. For example, new technologies, new types of devices, and the lack of real-time monitoring over those devices in offline payments exposes new attack surfaces and vulnerabilities. The handbook helps central banks considering offline payments to navigate some of these complexities. Secondly, a baseline 7-step cybersecurity framework asks, how should we think about cybersecurity prevention and defenses for CBDC systems, both offline and online? As security needs to be holistic. The framework, which can be further developed by others, identifies 7 steps: prepare, identify, protect, detect, respond, recover, and adapt. And each of these steps has control measures to consider, with a large number focused on prevention. It also highlights how response and readiness would need to adapt when operating offline payments. For example, in the case or perception of a compromised device in circulation, which could undermine trust. This would require very different response to incident management than central banks may be used to. The third output looks at threat modeling gaps and asks the question of where do our existing threat models fall short? A threat model is a structured approach to identifying, understanding, and mitigating potential security threats to a system. And it provides a security view, focused view of the system and its environment, helping organizations proactively address vulnerabilities and risks. But until recently, threat models didn't really cover DLT-based or tokenized systems. The analysis highlighted issues such as vulnerabilities in smart contracts and the increased exposures in software supply chains, which would need to be considered if central banks adopt these new technologies. The paper also had a call to action underscoring the need for a new baseline threat model. Next, we have a design guide for offline payments, which asked what design choices could apply to offline payments, and it illustrated that these design choices on 3 generic scenarios, which central banks can adapt for their own purposes. But one common denominator across all of those scenarios is underscored the importance of crypto agility, so building systems so that algorithms can be replaced in the future as needed. And this is particularly complex when considering offline payments functionality, given the potential proliferation of devices and endpoints that would need to be secured and updated. Now, based on the call to action in the paper, there is a forthcoming cyber threat model, which asks, what are the adversaries, attack paths, and systemic vulnerabilities that we should be thinking about? And finally, a sample of technical requirements and a test sandbox provides central banks that are interested in offline functionality with a starting point from which to explore questions and further refine their technical requirements. Now, looking across all of these outputs, 2 questions really stand out as we think about payment system modernization. How do we design for operational agility such that controls and processes can evolve with the threat landscape? And how do we ensure crypto agility such that systems can migrate to new cryptography, including quantum-resistant methods without heavy redesign? Which brings me to Project Fuse, if we move on to the next slide. So Project Fuse, which stands for the Fully Scalable Settlement Engine, experimented with post-quantum cryptography and explored the interplay between scalability, flexibility, and future security needs when designing such systems in a modular way. Fuse adopted what is known as a microservice-based architecture. And what this means is that instead of adopting one monolithic approach, the system is broken down into independent modules much like Lego blocks, connected together, but each carrying out a specific function. Now, this can have two benefits. The first is flexibility. Institutions can adapt or upgrade individual components without disrupting the whole system. And the second is scalability. When transaction volumes rise, only the modules under pressure need to be scaled and not the entire platform. But these benefits come with trade-offs. More modules means more boundaries to manage. If you imagine the lines between all the little Lego blocks, they all need to be managed. And the interdependencies between them means more to think about. And therefore, there is a wider surface area to secure. In practice, the flexibility and scalability of microservices would need to be balanced with tighter operational discipline, particularly when it comes to security processes. As I mentioned, the project also experimented with post-quantum cryptography, algorithms designed to resist the future threat posed by quantum computing. Fuse tested lattice-based schemes, including crystals dilithium for signatures and Falcon for verification. Both were chosen because one has been announced that it will be standardized following its draft publication in 2023, and one is in the standardization process, such as Falcon, but expected to be used in much niche, in niche specialized use cases. Now, the key lesson here was not that PQC is ready for deployment, but actually rather that crypto agility is essential. Systems must be able to swap algorithms in and out as standards evolve. And this is where the interplay between architecture and security becomes clearer. Microservices may make it easier to insert cryptographic modules without destabilizing the system. But PQC algorithms are heavier with larger keys and signatures, creating latency and potential throughput issues. Therefore, in a microservices architecture, the overhead can multiply every service boundary between modules. However, modular design and PQC could also reinforce each other, but only if we anticipate the costs and overhead of moving a large cryptographic payloads through such a system. Scalability could help offset these costs and overhead through more compute nodes or managing loads across servers, but choices would need to be made to decide where the balance between performance and security lies. Fuse underscored that security, scalability can pull in different directions. And it showed that flexibility and crypto agility can be engineered into the foundation of systems. However, this would, as I mentioned, come with operational complexity and performance trade-offs. A highly modular system allows easy upgrades, but more interfaces and dependencies accretes the attack surface. Scaling up to handle higher volumes is attractive and possible, but that scaling should not weaken operational resilience or introduce systemic fragilities. And we need to ask ourselves, how do we prepare for quantum risks and changing operational processes without compromising today's reliability and ultimately trust? Preparing systems to migrate to PQC is essential. The standards come into place. But doing so prematurely or without maturity and also with some readiness gaps as the operational ecosystem and certifications and oversight frameworks that need to also mature and become ready. And without that, could also disrupt current operations as well. So these things really need to be thought about in advance. Thank you very much, and I'll pass back to Raphael for the next slide.
Thank you very much, Bejo. I think you highlighted clearly how that already designing new systems to the quantum threat is a major task, right? There are many architecture trade-offs. We need to not only zoom in on one algorithm, but keep in mind that we're hitting a moving target. But we need to be cognizant that there is what I should state an even much more difficult problem, which is making sure that existing systems become resilient to the quantum threat. And that's what we do with LEAP. We've started LEAP actually 2 years ago. And in the first phase, what we did is we built a quantum secure VPN between a server in Paris, hosted by Banque de France, and another server in Frankfurt, hosted by Bundesbank. And we exchanged some payment messages through that VPN and documented operational issues and performance measurement. I'll get back to these in a second. We also held a conference to sort of bring together both public and private sector participants and start talking about sort of the alignment that is needed to get the transition going. And we published a set of papers, some looking at sort of the opportunities from quantum computers and the threat, and another one that I'll actually conclude with that lays out the quantum readiness for the financial system. Currently, what we're doing is we've started LEAP Phase 2. And LEAP Phase 2 aims at implementing quantum-safe cryptography to a payment system. We'll publish this report later this fall. And I want to give you a bit of a sneak preview into what we're going to be discussing in very detail in the report. So let me start by saying that LEAP 2 is a collaborative effort. In the second phase, we have Banca d'Italia, Banque de France, Deutsche Bundesbank, and we have Nexi and SWIFT. And we want to implement and validate quantum-safe cryptography in an existing test environment of a payment system. So the test environment's configuration really reflects a realistic operational scenario of a payment system, obviously while being an isolated space where we can test the integration of post-quantum cryptography. And we already ran some tests. Liquidity transfers were sent between Project LEAP's central bank partners using post-quantum digital signatures via the usual payment network led by the network service providers that participate in LEAP 2. And in order to achieve this, multiple components of the system needed reconfiguration and adaptation to the new cryptographic standards. The technical experiment required extensive planning, tight collaboration, and commitment from different departments across organization, obviously including payment system experts, cryptography experts, but also including many legal and procurement experts who sort of understand how business process changes will affect the overall operational setup. And the project is really a case in point. Migration to quantum-safe cryptography is not only a simple cryptographic protocol upgrade. It's a major transition that requires broad collaboration across the financial system. Let's actually start with the technical side. In both phases of Project LEAP, here we have the results from LEAP 2, but also for LEAP 1, there were similar findings. Performance measurements revealed significant differences between PQC and traditional cryptography. Here, you see the graph for processing a payment message signed with a PQC digital signature, and the average verification time was 210 milliseconds, whereas with classical encryption, the average time was just shy of 30 milliseconds. So a 7-fold difference in sort of time needed to perform the same operation. In addition to performance, there are some key learnings that again relate to cryptographic agility, what Bejo already mentioned before. This is a key success factor, and it's the ability to switch between cryptographic schemes and algorithms without affecting the application itself. And making central bank systems more agile takes time, as they were not built with this agility in mind, right? You have one fixed algorithm that is encoded somewhere in the system, and you need to go to a new system where you can flexibly change between algorithms according to each application. And because the system is highly interconnected, and because sort of we have these technical findings that document performance is going to be affected, and the transition is not trivial, we really need a proactive and coordinated approach. And that's where we come to sort of the overarching findings. To ensure quantum readiness of the financial system, we need to obtain engagement. This includes raising awareness among financial institutions and FMI actors. This is what we're doing today. This is what we're doing with our reports. But we also need to plan the implementation meticulously. So due to the interconnected nature, quantum-safe cryptography must be introduced in a coordinated manner. It doesn't help if I upgrade, but you don't. And stakeholders will need to align on the timeline and key technical choices of the transition. Once the priorities and requirements are set, key technical choices are made, and the overall time plan is agreed, actors of the financial system need to create really a detailed implementation plan that specify the steps of achieving quantum readiness. What exactly do we want to accomplish by when? And last, following the transition, the planning phase, we will need to execute this. This will be on the private side mostly, but central banks and supervisors may need to play a key role in monitoring this process. There needs to be a regular follow-up, continuous alignment, which will help to ensure that everything is executed in time. At the end of the migration journey, we must make sure that the financial system maintains a high level of protection against quantum computers. Let me close here. I think the key point is we see it's not trivial, it's a substantial undertaking. It's something that will need to happen in a very coordinated manner, and it's not a one-time sprint, but more of a continued marathon. Success will depend on seamless coordination, relentless testing, and unwavering commitment across the entire financial ecosystem, including central banks, supervisors, and the entire private sector. Let me stop here, and thank you very much.
Welcome back, everyone. So this is now the last section of the program. Okay, I didn't hear any groans, but so we begin with some cross-border perspectives on cross-border payments. And providing those perspectives are, in no particular order, Timothy D. Adams, President and CEO of the Institute of International Finance, Victoria Cleland, Chief Cashier and Executive Director for Payments at the Bank of England, Stefan Ingves, former governor of the Sveriges Riksbank and current member of the Bretton Woods Committee, and Yuen Loa, director of the Innovation Division of the Digital Currency Institute of the People's Bank of China. Moderating their discussion is Professor Rod Garrett. Professor Garrett is a professor of economics at the University of California, Santa Barbara. He is also a thoroughly international central banker. He's worked as a senior advisor at the BIS, a research advisor to the Bank of England, and is a former vice president of the Federal Reserve Bank of New York, and held visiting scholar positions at the Bank of Canada and the IMF. Rod, it's wonderful to see you on a panel. Over to you.
Thank you, and welcome everyone. It's a pleasure to be here, and it's an honor to host this panel with this distinguished list of panelists that has experience that spans a long periods of time and many different geographical regions. So it's my great pleasure to be here. So this session is on cross-border payments, and there's been considerable interest in this topic, particularly on the public sector side. Since the G20 report that was written by the FSB and CPMI back in 2020 highlighted this issue. And now at the time, there was a lot of interest in cross-border payments because cross-border payments were becoming increasingly difficult as the costs and the risks associated with liabilities from AML and sanctions violations had dramatically increased since the financial crisis. And as a consequence, there was a great reduction in the number of correspondents and in the number of correspondent banking chains. And so despite the fact that payment values were increasing globally, we were seeing increased costs and in some cases a complete withdrawal of the provision of correspondent banking services. So the G20 report outlined what was called a global roadmap for enhancing cross-border payments. And this included 19 building blocks. So anyone who's been working in central banks for the last 5 years knows that whenever you do research on this topic, you have to identify which building blocks you're addressing. And the goal was to improve, as people have mentioned several times, to improve reduce cost, improve speed or efficiency, reduce risk, and improve access with a goal of doing all this by 2027. Now, the FSB has carefully monitored the progress since the publication of the roadmap, and this panel will talk a little bit about it, but just let me say just a few words. So there was a progress report that was issued by the FSB in 2024, and they identified that there had been significant improvement in several areas, particularly with regards to cross-border data management and messaging standards, but that we weren't at the point of achieving all of the goals. In particular, a couple of areas, if we looked at retail payments, there was really no evidence of significant improvement. And in some cases, some categories of payments, there are even increases in costs if we looked at sort of the case of remittances. So not only are we not getting close to the 1% target, we may even be moving away from it. So this is why this issue is still such an important issue, and why we're talking about it today. And so fortunately, we have several people on this panel that are going to address this issue, and we're going to do it in a way with 2 rounds of questions. And so the first round of questions is going to, in some sense, do a stock taking. So we're going to try and look at, from the different perspectives, what's been done so far, what the successes are, and how we might be able to use those successes forward to continue to work towards the goals of the G20 report. And then we're going to talk a little bit about the idea of collaboration. This has also come up several times today. And so we're going to try and dig deeper into how important collaboration is in achieving these goals. So that's the goal of the session. And I really do hope that we do get into the second round of questions with collaboration, because this is, I think, one of the big reasons why cross-border payments are so hard. I mean, if we look at what's happened in domestic payments, we've had great successes. We'll hear about some of them. Why don't those successes immediately translate over into the cross-border scenario? And of course, one of the key reasons is that we're suddenly dealing with multiple different jurisdictions, different infrastructure systems, and so we need to figure out how to cooperate to make all that work. So Henry already went ahead and introduced the panelists, but I'll just say a couple words. We have Stefan Ingves here, who's the former governor of the Riksbank. He was the governor for 17 years. And he was also chair of multiple BIS committees, including banking and risk management and banking supervision. And he's now a member of the Bretton Woods Committee, and he's going to give us some perspectives on his participation in that committee. We have Victoria Cleland, who's the chief cashier and executive director for payments at the Bank of England. She also chairs the BOE's RTGS CHAPS board. And one of her many responsibilities at the bank, she now signs the money. And I can't think of any job that you could have as a central banker that would impress your parents more than that. And then we also have Tim Adams, who's the CEO of the Institute of International Finance, which is the institute that is the private sector lead for Project Agora, which we'll hear about. And then we have Yuan Liu, who is the director of Innovation Division, Digital Currency Institute at the People's Bank of China. So let's go ahead and just start with the questions. So we're going to start off with Victoria. And so, Victoria, you've been heavily involved in the G20 roadmap from the start, and you've been championing the modernization of cross-border payments for many years. And so I'll start by asking you to talk about the work that you've done in that regard, that the Bank of England has done, and how this translates to cross-border payments.
It sounds like a conference in its own right, actually. I'll try and take it as 3 parts. First of all, what the roadmap's been trying to achieve, a little bit about what we've done in the UK in terms of transforming our own RTGS system, but with an eye to cross-border, and then a bit about global progress. And I mean, I think the most important thing to say about the roadmap is it is there to support everyone, in particular end users, and I think that's why it's so important. It was important at the time, it's even more important now, so we need to really keep pushing ahead. There are almost 2 elements to those building blocks. One was enhancing the current system, another one was the more sort of future-looking, interlinking, multilateral payment systems and bigger use of technology. But I think it's really important that we don't think, well, enhancing the existing system that's old hat, and here today we're doing innovation. The 2 need to go hand in hand. Quite a lot of what we're doing in terms of enhancing the current correspondent banking model needs things such as ISO that are actually really important for those more future-looking things around interlinking, and also technology. Some of the ideas we've been hearing about today in AI, they can really be helpful in enhancing the the correspondent banking model. So we shouldn't think old and new. It's how we can bring all of this together. As you mentioned, in the UK, we've been enhancing our real-time gross settlement system, so a big transformational programme, which started off, we need to improve the resilience of our system, and then it's actually, if we're going to do open heart surgery on RTGS, let's think what more we can do. So we had ambitions around competition and innovation. And in April this year, the new system went live, and it is still live, still kicking. It will have settled billions and billions of pounds while we've been sitting here this afternoon. So I think what's great about that is it's something that is there, and we've been innovating, and it is now live. And resilience was key. Some of the things we were doing, and it was not what do we need. It wasn't what do we need domestically today. It's what do we need to do domestically and cross-border, and what might we want to do tomorrow. So thinking about sort of capability and capacity, we've built in the capacity for many, many multiples of the current number of participants. That's important because we think about who do we want to access our system. The number of different types of people who join the system can really help access. It can help cross-border payments. We're the first G7 central bank to enable non-bank payment service providers to join. The new system is increasing capacity for that. It is making it easier to onboard, but that technological change has also been complemented by policy change. So we'd actually changed our policy to enable us to do that. We've introduced ISO 20022 messaging. That interoperability that delivers is absolutely key to enhancing cross-border payment. The new system has the ability to open near 24/7. When you're talking about cross-border payments, you need to be open when other RTGS systems are open. We think that is absolutely key. And we're also thinking ahead around something called synchronization. So we're sort of tokenizing using our current RTGS ledger, having a synchronization operator who can then link, for example, to a real estate ledger in the UK. We've been doing some great work, Francesca and her team, BIS Innovation Hub London, on Project Meridian. We've taken that a step further with Project Meridian FX, so sort of linking our ledger to others. But again, it was building the system, what more do we want it to do? And thinking cross-border from the start. More generally, in terms of the global targets, as you say, we haven't met them yet. I can't pretend that they're easily within our grasp. It's an enormous challenge, but I think where we are seeing real progress is in around some of the priority actions around that. So really laying the foundations, so a greater push for ISO internationally. Lots of guidance has been written by FSB, CPMI, standard-setting bodies in terms of what is the best way to think about extending operating hours. IMF, World Bank, there's a lot of technical assistance going out. So the progress is there, but some of this just takes time to change. You can't turn a country to 24/7 overnight. And I think we're going to talk a bit later about collaboration. So there's more that we need to do, but we've got some of those sort of foundational elements there already.
Thank you, thank you. So I'll turn to Stefan, and so here I want, if I can leverage some of the work you did with the Bretton Woods Committee. So that committee was evaluating two strategies for transforming cross-border payments. One was the idea of like interconnecting instant payment systems. So we've heard a lot about Nexus today. So that was the model for doing that. And then one that involved using new technologies to build essentially an entirely new type of infrastructure, which is Project Agora. So I wonder if you can tell us what conclusions you drew from this work and any other insights you might have for how that work can be used going forward.
Well, first of all, thank you for inviting me. Different hat, same room. I've been here before, and it's a pleasure to be back today. I'm speaking on behalf of the Bretton Woods Working Group on cross-border payments, and as we've heard here earlier, it's an old issue. I lived with this issue for many years, and it's been on the agenda too many times actually in the past. And a good example, as we heard, is the G20 roadmap on cross-border payments. And I do think that if we talk about this in general terms, most people agree that we need to speed up cross-border payments, and we also need cross-currency payments, and we need to make them cheaper and we need to make them faster. So no problem there. The hard part is to go from general statements to actually getting things done. And to do this, we need cooperation, we need standardization, and we also actually need a sense of urgency and a willingness to get things done. And here, I think that the Bretton Woods Committee paper is a very, very nice summary of where we stand and what the choices are when it comes to achieving this and to achieving what I call transactional efficiency. Because if that is not there, then eventually people start using somebody else's money at the end of the day. And the conclusion of the committee was in this nice little piece of paper was that there is actually a premium on getting things done now. And it's not really harder than that, or at least in the near future. And to this end, we came down on the side of Project Nexus, which has been mentioned by many earlier today and also yesterday. And here, interoperability is, of course, absolutely necessary in order to make this work. This in no way at all diminishes the need to work on tokenization, the Finternet, or whatever other new niceties that are around the corner, and that's Project Agora and a bunch of other projects. But based on what happens in reality, I would say the following. To move things, it's actually better to build a Fiat 127 than to aim for a Rolls-Royce, because that actually ensures that it gets done. And this is why the committee came down in support of Agora, because it sounds more doable in the short run compared to doing something which is fancy. And if that proved to be wrong in the future, then we do the next system and the next system. So that's not a problem as such. In addition, I do think that global is a truly laudable goal, but in many, many cases, when it comes to getting things done, a regional approach is probably more realistic, because you have to start from somewhere. And it's not really harder than that. And let me take one example from my corner of the world, and that is the ECB Target Instant Payment System, the TIPS system. The Nordic and the Baltic countries, of course, those who use the euro, they already use the system. But a fact of the matter is that the system is also used by Sweden for the Swedish krona. And in the course of the fall, if I'm informed correctly, there will be an introduction of a cross-border, cross-currency version of it. And that means that you can sort of move back and forth between euros and the Swedish kroner. And that kind of means, and at the same time, Denmark, Norway, and Iceland are actually looking into the same thing. And that means that in the fairly near future, this is fully doable. This is not a technical constraint anymore. This can be done, and it's a system that runs 24/7. Now, having said that, given that something similar is going on in Singapore, Thailand, and in Asia, then of course you don't have to be Einstein's brother to draw the conclusion that eventually you can hook up these systems and run them together in one form or the other. Let me finally say that in small open economies, it's not realistic actually to build these systems on your own. Eventually, at the end of the day, you're going to have to share with somebody to get these things done. And that's because the IMF has 191 member countries. And that means that you just have to find ways of cooperating, and you have to find ways of sharing, because it's just going to be too expensive and too overwhelming to do it on your own. So in summary, the Bretton Woods Committee paper is a call to get things done. And here the technology as such is not a constraint. The central banks, they just need to get on with it.
Thanks. Those are great insights, and I think the word you were alluding to was scale. that these systems need to scale to be profitable, and in the smaller countries, the only way to scale is to cooperate. So we'll jump to Yuan. So there have been significant developments in retail payments in China. Of course, we all know about the successes of WeChat Pay and Alipay, and then the People's Bank of China was, of course, an early mover on the CBD front. CBDC front with the introduction of the eCNY or Digital Yuan. And so I'm wondering if you can tell us a little bit about what your experiences are and what the implications are for cross-border payments. Thank you.
Thank you very much, Rod, and thanks a lot also for the BIS to give us this opportunity to join you and just to share some of our experiences. And I think really this session is very insightful and meaningful, especially in this, in this transforming world. And actually, PBC has been, actively endorsing the G20 cross-border payment enhancement roadmap, all over these years. And we are just fully back, all the initiatives that has been proposed by BIS. And I know you mentioned retail payment, so maybe later on I could, what I'm answering may be covering both retail and wholesale, and I just want to introduce a little bit, give you such a certain kind of bird's eye view on the whole cross-border, probably thinking and working pattern and roadmap from the PBC angle, and hope you don't mind about that. And of course, right now, PBC, really, we have many different service providers, and we have, you could say, a very, very large payment service market, of course. And over these years, we have explored in many different angles. So, here in summary, I just want to, address from two layers. And first of all, of course, the PBOC always follows all those common practices and the standards, and like what we have proposed from the roadmap, like adopting ISO 222 and extending the operating hours of the systems. I mean, across all those payment systems, operated or overseen by PBC. For example, like HVPS right now is 21 hours plus 12 hours every week. And for example, the SIPS is 24 plus 4 to cover all the working hours of the different time zone. And for example, like eCNY system, which is the most recent system that has been developed by, co-developed by PBOC and the banks under two-tier model. This is since it's a new system, so right now we have just renovated it to accommodate 724. So and also all those systems actually can adopt this new ISO 222 standards, and that is from the common part. And of course, also in the retail side, you have mentioned, we are also just promoting the interoperability across for the cross-border QR code payment, of course, especially across those regions, probably in Asia, which QR code is mostly used. And of course, we this year we also launched a pilot, with Hong Kong MA about Payment Connect, which is a connect between two different fast payment systems. So I guess all this layer actually just touches everybody are very familiar with. And the second layer, actually, I would like to touch, maybe just mostly focusing on what we have been doing, leveraging the innovation part. Because over these past few years, we have been just deep diving and just keep retrospecting on what is a real problem and bottleneck, and from the pain points of the cross-border payment. Though I know that G20, the BIS report actually has given us a very, very good summary about the 4 pain points regarding the cost, the efficiency, transparency, and the access. But behind that, we just cannot help but thinking that what is behind this? What is the real logic behind this? So why this is happening? So, and also what kind of new technology could add value, or what kind of new governance and what kind of model could be added to, apart from what we are already doing and what we are familiar with. So that's what I'm saying, and all kinds of new technology actually has been in the stock take. For example, like the AR and AI, big data analysis, and of course you have said the CBDC and the DLT and smart contract and as such, because we know that in this digital world, just whether we want to embrace it or not, we will be pushed to embrace it. So that's why we are thinking it's also very, very important, and to say these CB's services shall evolve. And for those, as what I said, for those 4 pinpoints about the behind the scene logic, actually, personally, I just summarized as such. I don't know, this is representing maybe my own opinions. I would say it may not represent the institution I'm working for. And first, I guess, behind all those 4 pinpoints is, the most important one, utmost one, is probably lack of trust across different, as the cross-border payments actually goes through many different jurisdictions, and traditionally it will go through different correspondent banking, right? And the whole chain actually is, especially the authorities actually just have to probably wait for the reporting, the post-event reporting from all the banks. So every jurisdiction, the transaction touches, there will be certain secret and whatever, and also maybe many jurisdictions actually will be afraid of certain kind of like currency substitution and things like that. So I guess building trust probably would be the most important one to address all those problems. And the second actually is about the public sector involvement. Because traditionally, what you have mentioned, in the mobile payment area, mostly actually are the purely scheme from the private sector without any involvement of the public sector. So I guess, from our experience that we just feel that public sector involvement would be important to address all those pain points as well. And also, thirdly is about the liquidity result is very important, because it is very important actually to solve those settlement issues using the traditional Nostra account. And also, fourth one probably would be, this one would be a new one, because traditionally when we are thinking about payment, actually we are thinking about the channel we use. For example, payment system, actually it's a channel. And nowadays we have the tokenization, and we have the CBDC, and we have the new systems. So maybe we could think of how to harmonize the value and the system together, and in our solution designing. And also, last but not least, is that we feel that the access from the non-residents would be very important. So bear all this in mind, actually, we have been exploring several solutions to echo this roadmap. And of course, we are doing this from 2 angles, 2 legs. And one leg is multilateral cooperation, and the second leg actually is mostly based on the bilateral cooperation. But no matter what kind of leg we are using for the walking, the principles of no disruption, compliance, and interoperability will always be in our mind. And firstly, for the multilateral cooperation, which I think most of you would think of, one important project that PBC has been engaging in ever since 2021, which is Project Enbridge. I guess everybody would be very familiar with. Yeah, and actually we have to feel very grateful for BIS actually for this project, because this one actually has been proposed by the BIS ever since 3 years ago, or maybe 4 years ago. Sorry, 2021, yes. And at that time, the 4 jurisdictions, the PBC, HKMA, BOT, and the CBUE actually have together started this project. And ever since last June, this project has been transacting real value transactions. And I'm happy to inform that right now it is continuously operating, and actually the transaction value is just growing on a maybe 2-digit growth rate, just month by month right now. And this year, this May, actually, this project has been very successfully graduated from BIS. And again, we have to say thank you very much, really. And now this Enbridge actually has become the first of its kind as a DLT-based multi-currency, platforming operation backed by central bank money. And now I just want to touch a little bit about how this project actually addressed all those pain points just very quickly. And first of all, how to enhance trust? Well, this governance of mBridge is very unique. It's because it has been based on a central bank cooperating model. But central bank cooperating doesn't mean central bank is taking the role of the banks, but rather actually central bank is building a multilateral international payment system, and you could also say a currency cooperation platform together, just to help them provide easier liquidity solution, and also to provide a higher efficiency. And on top of that, all the commercial banks and the payment institutions can use this platform for the peer-to-peer payment. And also for the access point is that, all those different banks, of course, and the non-resident banks can get access, can get on board. And according to the statistics we have been receiving, well, the cost and has been from the empirical data is the cost could be cut by half, and the efficiency could be enhanced, from hours to 6 or 9 seconds. And also for the interoperability side is that this platform can just connect those payment systems and also for the CBDC system together. Yes.
We have to. Maybe
yes.
we can.
And just to quickly summarize So sorry for that. Maybe it's a very long time no see, just speak too much. Yeah, okay. And all in all, okay, that is, I guess, mostly about the mBridge. That is the multilateral one. And for the bilateral link, actually is similar. Based on the same principle is that PBC has just built the ECNY cross-border digital payment platform and another DLT service platform to support the cross-border bilateral payment to provide more agile and flexible choices for different partners. So generally speaking, just to summarize what we have learned from this practice is that, first of all, we think the PPP model would be a very feasible one. And also is that we think the hands-on experience and agile involvement is very important. Third one is we think the risk-based principle and the substance over form would be very practical. And last but not least is we feel that the cooperation and the solution for cross-border regime has to respect every counterparty and the partners. Thank you.
Thank you. So we're going to jump straight to Tim, who's been very patient. No, thank you. So Tim, the conclusions of the Bretton Woods report were I think that from a practical point of view at least, improving the old with a project like Nexus is the way to go, but that the potential for transformative change is in enabling the new, and so Project Agora would probably fall into that category. So could you comment on how you see incentives like Project Agora reshaping the cross-border landscape?
Sure, and again, thanks for having me here today. Every time I come into this building, I always feel like I leave a little bit smarter, and just the quality of the crowd of people who work here, but also participate in this event. So thank you for inviting me here today and seeing an old friend. We're very excited about Project Agora. It's 7 central banks, 42 private sector institutions. We've been at it now for a few months. The idea was actually born in this building. Augustine and others launched this idea. It called me. I thought it was a fabulous opportunity for us to bring the private sector to bear with the public sector. It's a tremendous amount of work. There's a little bit of cat herding involved in this process, but we think it is indeed transformative. We've committed a tremendous amount of time, attention, and resources to this. And the words that have already been kicked around: faster, cheaper, scale, urgency, interoperability, all the things that guide us. These are our North Stars as we think through this system. It really is about building the base layer. We believe in tokenization. We believe in tokenized central bank and commercial bank money. We think you've got to build the infrastructure. We think that's what we're doing in terms of cross-border payments. And then on top of that, you'll get private tokenized retail payments that's also developing. So we're very excited. There's a tremendous amount of work to do. But we think we're going to pull this off. And whenever you think, how can you do something of this scale? And I come from the school of skepticism. You're a part of that we can do this. But on the ride over here, just from the airport, I thought, well, there's the Global Vaccine Alliance, which vaccinated 1 billion children and saved 20 million lives. Operation Warp Speed, COVAX, 120 different countries. The Global Fund for fighting AIDS, tuberculosis, and malaria. GPS, Galileo, Airbus, Paris Climate Initiative, the European 5G project, the Battery Alliance. I mean, there's so many examples of where the public and private sectors have come together to do big transformative things. And I think this is what we're doing, and we're determined to make sure that happens. And we love our partnership with the BIS. It's not going to happen tomorrow, but we think we're making real progress. And we're not the only game in town. Running parallel to this, and it's not or, but an and, is public blockchains and stablecoins. As you know, the United States has passed sweeping legislation and put in place a regulatory structure which is very pro-stablecoin. You have an administration which is cheerleading for this innovation, this technology. We've had a number of different countries and delegations traipsing through Washington over the last 3 or 4 months, from Asia, from South America, from Europe, better understanding what does the stablecoin world look like. We think both of these are going to develop in parallel. But for us right now, we're focused on the wholesale level, the base foundation, tokenization, and we think that we're going to make real progress.
Great. Thanks, Tim. That was actually going to be my follow-up question, so you answered it already. So that's wonderful. So now we'll move on to the second round. So we're going to talk a little bit about issues related to cross-border collaboration. And so I'll return to Victoria. And so you've reflected on the progress made in modernizing cross-border payments. And so I just ask you what you see as the key challenges moving forward and how collaboration can help solve those challenges.
I think collaboration's absolutely the answer to this. I mean, the roadmap was ambitious. It needed to be ambitious. And what was important about it was holistic. It wasn't just saying, oh, it's a technology problem, oh, it's the private sector. It was looking at all of these elements, and it's got regulation, it's got data. And to address this, we need to be acting collaboratively across a number of different sort of groupings. One is public sector, so lots of work's been done by FSB and CPMI, sort of, again, from this building, but also working with other standard-setting bodies, really closely working with IMF, World Bank, FATF. So that sort of public sector piece is key. We need to cooperate with each other, but the private sector is absolutely crucial for this. I think what you'll find looking at the roadmap is a lot of the work has been done now by the policy setters in terms of this is the guidance on how to do this, this is what good looks like for ISO. We now need the private sector to sort of take the tools that have been created and to make the most of them. ISO 20022 is an example of that. Lots of countries have now introduced it, but it's only useful if the private sector use that enhanced data. That's a tool for them. Extended hours, yeah, we can deliver them as central banks. We need the private sector to take that up. So I think that's a key part of collaboration. It also is a chance for me to use one of my favourite acronyms, which is PI, which is around the payment systems interoperability and extension, which is sort of, it was set up under the sort of auspices of FSB, bringing together public and private sector to understand what can be done in the world of the cross-border roadmap. Another of these groups is actually bringing together central banks with a community of practice, so COP, so that's central banks sharing ideas. And some of this we can do together. Some of it needs to be done on a jurisdiction basis. I think we're now at the stage of the roadmap where we need to implement. The tools are there. We need to go and use them to look at our own jurisdictions and think, okay, where are we? Where do we need to get to? Some of those changes will need to be made by a jurisdiction, but learning from others the best way to do it and getting industry involved, that collaboration, but also thinking about things such as harmonisation. That is going to be key. It's key for ISO. We're doing some work looking at actually, can you have greater harmonisation around APIs so that if an API works in the UK, it can also work somewhere else. So that piece and collaborating on ideas is key, but also I think collaborating with things such as this in terms of what can technology do. I mean, we've been learning a lot this morning about AI and how it can use data. ISO 2082, that is going to give shed loads of data. That can give insights into sort of customers to help banks. It can help their straight-through processing. You can learn a lot for economics from what's going on there. So using AI to understand some of this is key. So I think collaboration across the board is going to be key to deliver the change that we all need.
Thank you, thank you. Stefan, turning to you, I'd like to hear any thoughts that you also have on collaboration, but also if we think about if the Bretton Woods Committee was to write its paper today, then it would probably have to consider this third option that Tim raised, this idea of using public blockchains. So if you have any thoughts on that third option, I'd also be interested to hear those.
Well, on that, the issue is always time to market and when to do things. And when you add A, B, C, and D, it becomes sort of waiting for Godot. It will never happen because it gets so complicated and the whole system is kind of redesigned over and over and over again. And having been in this business now for a long time, I've been through various sort of episodes. Then I started something and it got so complicated and it took so long to finish it. So you aren't even happy when it actually is finished because you have forgotten that you started the thing. And now I was happy when Basel III finished. Actually, but the issue is there are so many elements of learning by doing in this. So once in a while one has to sort of scale back a bit when it comes to the ambition, because if you're sort of if it gets too ambitious, it gets too complicated, and it never gets done. And one of the risks, and now I think I'm sort of talking on behalf of both, I call them the fiat money team. And the fiat money team, that is essentially central banks and the old banks. Now, all these new IT companies and whatnot. And either we sort of are able to gradually improve on these things, or we are not because things never ever get done and it gets too complicated and then it will be handled by somebody else. And that's a sort of a very, very sort of delicate thing to find the proper balance to gradually improve. And that's, I think, really the key to it, to gradually improve, because if it gets too complicated, it ends up being what I call a shelf warmer. And that's a memo written by a central banker, and a bunch of central bankers read it, and nothing ever happens because it just sits there on the shelf. I don't have the answer to this, but this is sort of very, very delicate. I do think, though, that, and this is really a word from a biased old central banker, that when it comes to payments and cross-border payments, nothing beats central bank money. But to prove our case, we need to move with the times and get things done. But that, of course, also means that we have to embrace new technologies. And some of those new technologies might not be any good, but then when that day comes, we will try to do something else. And here, and this is perhaps an oxymoron, basically to do these things, and when it comes to cooperation, you have to be what I call a public sector entrepreneur. And that's the hardest thing there is. And particularly if you are a risk-averse central banker. And still you have to find that beautiful combination to make things happen. And basically what the Bretton Woods Committee said was that time is up. Don't kick the can down the road. Don't make it too complicated. Lean heavily on the BIS Innovation Hub and get on with it.
That's a good answer. All right, Tim, I'll go to you next. Just a quick, any other additional comments? I mean, Project Agora is, of course, the definition of collaboration. So any quick comments on what went right and how the lessons of Project Agora can be extended to other applications of improving cross-border payments?
Well, it's key. You get all the stakeholders together in the same room, and you're transparent and you're honest, and you admit when you're falling behind, and you try to fix it quickly. But I think that the challenge for all of us is the private sector is moving at lightning speed. And I see it firsthand from Seoul to Abu Dhabi to London to New York, to the West Coast. The amount of the speed and the amount of resources going into innovation, whether it's JPM's 15 billion or just the tech companies, that valuations are going up every day, the tens, if not hundreds of billions that are going into innovation. And if the public sector, if the central bankers, if others don't keep up, they're going to get left behind. And I remind everyone, this whole conversation got started because of Libra, which then became Diem, and that was the wake-up call. And we need to wake up. The private sector is moving at lightning speed. And so our biggest challenge with collaboration is trying to keep the private sector, hold them back a little bit, let us catch up, let us keep going. They've got an array of different projects they're working on. The C-suite's saying invest everything, and if we don't see a quick ROI, year out, year in, we're moving here. It's just moving while also staying sensitive to security and trust, right? Scams and fraud, we have to make sure this is a safe and secure system. So it's balancing the need for time to market, urgency, which I most certainly push, but also make sure we have a secure system that has the trust so that you don't build a system that then people abandon because they don't trust it. But the collaboration is key, and I feel good about where we are, and I think we're going to continue to improve.
Thank you. And then, so Yuan, then we can finish up with you. So any additional thoughts that you have on the importance of collaboration in cross-border payments and any thoughts with respect to the Chinese systems?
Yeah, thank you very much, Rod. And this time I will just try my best to keep in brief. Yeah, and actually...
Thanks for your patience. I was referring to the fact that you were the fourth speaker.
And actually, this question just brings me, when hearing about this question, the first sentence that comes into my mind actually is a Chinese old saying, which is the harmony in diversity and progress through reciprocity. And actually, I think, Victoria also mentioned about the harmonization here. And I believe actually this would be very important for the promotion of cross-border payment collaboration here as well. And yet, although the harmony is maybe a common dream of all human beings, but actually the dream is beautiful, but the road to the dream may not be be smooth. I guess there would be a lot of work to do and a lot of things to keep in our mind. And just want to maybe share some just 2 or 3 very quick points here about how to achieve this. First of all, from our experience, that we feel that we have to just think about the inclusiveness here. I just want to take an example for the CBDC world itself, actually, because now from the Chinese experience right now, we are actually just thinking a lot about the ECNY pilot and also theoretical things about ECNY actually ever since last year, because we have been undergone several years pilot already, and we have, like what I said, some hands-on data and also a lot of feedback from the market already. So now, many people, when we are talking about CBDC, we always think, okay, it must be the direct liability of the central bank, and it might influence and we are just worried about the motivation from the private sector, etc. But can we just, let's look back to the history. At the very beginning, in the ancient times, the only currency is probably shell or stone. And then we have maybe the metals, and then we have paper money, and then we have the electronic payment, and now we have the electronic central bank money. And behind all those evolvement actually is driven from several elements. First of all, like the economic growth and the market needs and also technology together have actually shaped what we have been knowing from the book about what is currency, what is finance, and what the central bank is. So now in this new era, and all those new things is happening, so like Stefan actually just said, which actually touches me a lot. Now, working in the ECNY sector, I just, I feel like I'm really just a public sector entrepreneur. because I'm just facing all those uncertainties, and we are just obliged to turn all those uncertainties into certainty, and we have to keep exploring. Because before this, I work in the payment sector, and now I just feel actually every day, okay, everything is new, especially even for the theory itself. So and also another one is because there's so much different understanding about what CBDC is or what cross-border payment path is. So there would need a certain kind of mechanism and maybe certain kind of regime or the common universal standards, or maybe a task force to bring everybody together, just as what BIS is doing right now. And last but not least is, I think, all the central banks together could have more exchange of views and and also set up more, substantial working mechanism together to solve this problem and to coordinate on the policy side. Thank you.
Great. Well, so I want to thank all the panelists for participating. I hope this discussion has encouraged everyone to go out and be a better public sector entrepreneur. Thank you.
Thank you very much indeed. And we stay on cross-border payments. So, here to tell us how to correctly pronounce Agora, is Morten. Thank you. Give him a clap.
Well, thank you, Henry. For those that have been paying attention, you would know that I head up the Swiss Center of the BIS Innovation Hub. So that's my day job. My night job is being the BIS lead on Project Agora. So the hardest thing about a BIS innovation project is actually coming up with the name. The second hardest is remembering the name. So I was quite pleased when my team came up with the name Agora, which means marketplace in Greek. Because I think it's a key tenet of the project, really bringing people together, maybe not buyers and sellers, but commercial banks and central banks. However, I should also admit that I'm a simple economist. I never took any marketing classes, and a marketing guru told me that the best brand names are easy to pronounce.
So is the U.S. then still involved in Project Agora? Is this, you don't, and that's
Agora,
not a whole...
or Agora, however you say the word.
BIS always corrects me one
I know,
way or
me
the
too.
other. So I feel like I do it one way and then they say it's the other. However you pronounce it, I'll pronounce it, so.
So in case there was any doubt, so this was Josh Lipsky from the Atlantic Council and Federal Reserve Governor Chris Waller having a laugh at my expense. I clearly failed Marketing 101, but now with the name out of the way, let me try and explain what Agora is trying to do. It's a lot, so buckle up. So when we started the project, we articulated the following hypothesis. So by implementing the corresponding banking model on a programmable platform, we can increase efficiency, lower costs, and reduce risk associated with cross-border wholesale payments. Let me try and unpack this for you. First, what are wholesale cross-border payments? According to a definition by the Bank of England, it's a cross-border transaction between banks, but also certain large corporates. Let's look at some numbers. We have borrowed these from Gottfried Leibrand. And so in like other payments, it's useful to categorize cross-border payments into retail and wholesale payments. So retail payments in this space mostly consist of card payments and remittances, and they are generally high volume but low average value, okay? And so according to Gottfried, it's about $1 trillion per year. And then we have the wholesale component, and a lot of that is actually these corresponding banking payments that we will be talking about. And together it's $195 trillion. 125 trillion of that is like regular, strictly payments that are flowing between banks and corporates, and then 70 trillion of that is actually the net amounts that are being settled arising from foreign exchange markets. And just because I used to work on that, foreign exchange markets, just look at the number, like it's 1,500 trillion per year, okay? Remember, US GDP is 30 trillion per year. So it's like 50 times, and that all gets netted down into about 70 trillion worth of payments every year via CLS and other facilities. But we'll focus on the corresponding banking part of the wholesale cross-border payments. So the next thing, and this was discussed extensively in the last panel, but I'll just try and highlight some of these things, right? So why is it we want to increase efficiency, lower cost, and actually also reduce risk? What are we talking about? Well, so one of the main problems in wholesale cross-border payments for corporates is that they are slow. Transactions can actually take days to settle. They're costly. There's a multitude of fees that kind of reduces attractiveness, I guess. And then they can also be opaque. Not always, but sometimes. And limited transparency just makes it hard to track and understand where your money is. For the banks, there are similar challenges. They are also slow, costly, and opaque, but they're also risky. And so payments, as we will discuss and Rod also mentioned, is that there are different issues ranging from compliance and settlement failures that make cross-border payments risky for banks. And as Rod also mentioned in the previous panels, this has led banks and a lot of corresponding banks to actually retreating from this market. And as this graph shows, it's borrowed from some research by some of our economists in the Monetary and Economics Department, but it basically shows that values and volumes are increasing, but the number of active correspondents in this market and also the number of corridors, so those are like countries where you can send payments directly, is kind of decreasing over time. So that's part of the challenge that we are facing. And some of these efficiencies, where do they come from? Some of them actually come from the very sequential nature of cross-border payments. So how it works is that the payer instructs its bank. This payer's bank might send money to another bank in the jurisdiction, say via the central bank payment system, and then use its respondent bank in the other jurisdiction then to facilitate the rest of the transaction. Again, it might or might not go via the central bank. But at each step, there's several information checks that needs to be done. And if everything goes through, it actually runs pretty smoothly. The problem is if something does not work, there's a spelling error, there's some kind of other complication, then the whole transaction kind of have to be unwind. And there's a lot of messaging that needs to go back and forth and to unwind this entire transaction. So the happy path is good. The unhappy path is very costly and often involves a lot of manual labor. And so that's really what makes it costly. So as we heard in the previous panel, improving cross-border payments is hard. I'm not going to delve into much. It was discussed a lot in the previous panel, but really the G20 has these very, very good targets around cross-border payments, around speed, access, transparency, and cost. And as you can see, they have differentiated the target according to pretty much the different types of cross-border payments that we discussed in one of the previous slides. So remittances, retail, and wholesale have their own specific targets. We're not going to go into the targets themselves in any detail, but it's available. So by implementing the corresponding banking model on this programmable platform, we think we can achieve these things. But what do we actually mean by a programmable platform? And so a programmable platform, what we mean there is that we are thinking about the unified ledger concept that the BIS announced its annual economic report in 2023. And what is a unified ledger? What is it actually unifying? So what it's unifying is central bank money, commercial bank money, and also potentially digital assets. And as we think of programmable platform, we often think about DLT. So we often use the word tokenized deposit, tokenized assets, and tokenized central bank money. And so how would cross-border payments work in Agora? There's two things. Let's start with the unified ledger. What we're trying to achieve is that instead of doing it very sequentially, we want to do it all at the same time, right? So basically the same updates to ledgers and balance sheets and tokens would happen, but we will do it all or not at the same time, right? So this is the idea of trying to achieve what is known as atomic settlement. And so you would avoid these rolling back of transactions that were already in process. That I think we can definitely achieve. Another is there's a vision that some of these information checks that banks need to do along the way, that we can actually do them in a collective effort. That requires potentially changes to legal and regulatory structures, but that would be a big benefit of a platform such as Agora, that you actually would have the data and the information that might convince regulators and others that this is a way forward. So those are kind of like the two key things that we think where Agora would provide value. And the idea is that for the users, you know, the atomic settlement, yeah, that's nice, but it would be seamless, right? The users wouldn't see any of all the things that are happening behind the scenes. Let me talk a little bit about the project itself. So as it's mentioned, it's a global project. We have 7 jurisdictions, 7 central banks involved, all the 5 international currencies as defined by the BIS. We have participants in 5 time zones. There's 5 time zones, but there's a 15-hour difference. So apologies to the participants. We know that you're either up late or up very early, so we really appreciate that. As Tim mentioned, we have more than 40 regulated financial institutions, and it's very important for me to say that it is a private-public sector collaboration. The IIF is convening the private sector, and the BIS is convening the public sector. If we look at the participants, we have geographical diversity, I would argue. About half of them are in Europe, some are EU, some are non-EU, and then about a quarter in Asia and the Americas. We also have diversity in terms of the business model. A big chunk are the global systemically important banks. These are also the large correspondent banks, so no surprise there. There's also a number of domestic systemically important banks. Also some more, smaller banks, which we are very quite keen to have on, because they really do provide different perspectives. A couple of FMI wanted to join, which we also thought was great, and as well as some of the card networks. So we have a very big diversity in terms of business model. If we look a little bit on the working structure, as I mentioned, it's the BIS and the IIF that are convening the project. We have the Project Agora committee, that's kind of like the steering body or the decision-making body for the project. And there's a senior official for each project participant. And then we have 4 different work streams. It is fairly standard, but we have business, legal, tech, and also communication. And I just want to impress on you that actually we have a common IT infrastructure, and more than 600 people are involved in the project. Not full-time, obviously, but involved. And so one of the strengths, I think, of Project Agora, and it maybe comes back to also some of the issues that were raised in the previous panel, is I think the strength is that we both have the commercial banks, the FMIs, the card networks, together with the central bank around the same table, okay? And I think that actually allows us maybe not to move fast, but then once we move, we know that we can achieve something. And the other pictures, I just like to say that when BIS gets involved, I like to say that what we do is structurally sound, and I think this picture of the entire Project Agora committee on our staircase kind of shows that, okay? And we're actually having another in-person meeting here in Basel at the end of this week. Where are we now? This is a very standard kind of also BIS Innovation Hub innovation process. We have a design phase, we have a build phase, we test it, and then we publish a report. And where we are now is that we're kind of transitioning from the design phase to the building phase. So this is really very, very exciting time for us. And then along the way, and I think that I don't want to underestimate that, we're actually doing legal analysis. As like the design change, we asked the legal subgroup, a working stream, how would that work? And then with their feedback, maybe the tech design changes a little bit. So there's very agile communication between both the legal analysis and the technical, but also the business work stream. So now comes the part of the presentation that I've been dreaded the most. I'm supposed to give you like a little bit of a technical glimpse into the unified ledger technology stack. I didn't go to computer school, so you will bear with me, but some of our technical experts are here and they can provide you with more detail. But the Agora platform will consist of a number of different components. One is like an accessible user interface. Then there's the middleware. Those are things that a business logic that really doesn't need to be on the DLT, so the blockchain. That could be some of the things that we talked about on the validation or the information checks that needs to be done. Then there's some connectivity to other payments platforms and messaging system. So that's the number 3. And then you have to deploy it somewhere. That's where all these things around cloud computing and other things come in. But as I'm supposed to impress on you here that it's a modular design, okay? So just to, I think I'm being told there was a reference that this was like a car. So the idea is kind of like that you can take the DLT is the engine of it, okay? So whether we are a Fiat or we are Rolls-Royce, I think we are Rolls-Royce, right? I think so. So this is whether we can take a V8 or V12 engine and replace it with another engine, okay? So that's the idea. Anyway, back to the unified ledger DLT. What does that comprise of? I think at the base layer is like the ledger protocol. So this is where the record keeping, what is known as state management, and this is where the recording of the transactions are done. And also some of the execution of the logic that we'll discuss in a little bit. And it's key to say that this is what we like about it is that if you build on these infrastructure, achieving this 24/7 is relatively easy. And then on top of that, we have 2 types of smart contracts. One are the kind of like the token smart contracts. So those are the ones that holds the information that allows us to work with tokenized commercial bank money and tokenized central bank money. And then there's another set of smart contracts on top of that potentially that would be, for example, the atomic settlement, some of the compliance features. So these would be calling other smart contracts, including the token smart contracts. Here we go. So what is a token? This is the way that the BIS explains it. The token really consists of 2 things. It consists of the token core. So that's where we define the asset, where does it come from, who owns it, etc. And then around that, there's another layer, which is the token services. So this is basically the things you can use the token to. So I'm always told that the token core is the noun of the token, and the token services are the verbs, okay, what you can do with it. So this is taken from a box that we have in our annual economic report for this year, so you should go and look that up if you can't sleep later today. But it's a really good box. It kind of try and explain at a high level what the kind of like the architectures that we're looking at. And I think when we started the project, we really wanted it. We thought the best solution would be to have a single ledger upon which we would put everything. And then I think we ran into reality. And so what we have come to appreciate is that there's a lot of jurisdictional requirements around these kind of things. So now we are exploring either subnet architectures or layer architectures. I'm not going to get into that in any detail, but just say that the first one is like a cake where there's different slices reflecting the different jurisdictions. And the layered architecture is more like a cake that is a wedding cake, where there's like different layers, and then there's different things going on in those layers. So that was my non-technical explanation on this. And the last thing we're not even going to get into. So I actually think, yes, this is actually the last slide. So I hope I made it through the last part without making too much a fool of myself, but I appreciate your attention and thank you very much.
Thank you very much, Morten. Definitely Rolls-Royce. So stay with us, please, because Benedict Nolans, head of the Hong Kong Centre, she's returning, and she's joined by Francesca Hopwood-Road, head of the London Centre. They are both talking about how competitions mean collaborations. Absolutely. At least in innovation challenges. So Benedict and Francesca, over to you.
Thank you very much, Henry. And Benedict and I will try and keep us to time so that we don't eat too much into the final, very exciting panel of the day. So today we're talking about kind of the role of competition in collaborative innovation. And if you've been keeping track, collaboration has almost certainly come up at least a dozen times in every session across the last few days, and rightly so. And what we want to talk about today is how to start making that concrete. We've heard a lot, haven't we, about our projects. We've just heard about Rolls-Royce Agora and the huge breadth and realms of collaboration that take place there. But today, what Benedict and I will do is we're going to highlight two BIS Innovation Hub initiatives, which are competitions, but they are not competitions for their own sake. What they seek to really do is, as practical ways, identify trends, bring public and private expertise together, often at much more nascent and early stages, pre-project, if you like, and really turn some of those signals that we are seeing in those environments into substantive action. And the formats we use around for these are the challenge formats, most notably the G20 Tech Sprint and the BIS Analytics Challenge, which we hosted earlier this year. And they help us really identify and spot what's new. And these formats are part of our toolkit for horizon scanning. I mean, I've had a few conversations in the breaks that we've had where people have come to me and said, well, how do your projects come about? Where do you get the ideas from? How do you bring the different parties together? How can we get involved? All really, really important questions, and questions that perhaps this session will seek to unpack. So these formats for us are part of our horizon scanning, they're part of our engagement, our convening, our dissemination. And what they seek to do is they turn these sort of open questions into kind of time-boxed, real-world test beds where we can come together and explore. What they also do, and I think this is also about this turning collaboration into more concrete, realizable action, is that they help us, certainly in the central banking community, build relationships beyond. And maybe build relationships with stakeholders for whom we might not know so well, and might not have those well-worn spaces for conversation and collaboration. So what they really do is they expose new relationships for us. They expose a broad range of stakeholders to emerging technology. And they do that to help us shape our understanding, quite selfishly, but also help us determine their application to what are the most pertinent use cases that we really need to focus on and engage with. In short, they make that collaboration really concrete. And they really help us as central banks to start future-proofing our capabilities. And we've talked about the urgency for the need to get going and to work it out and move through. So today, as I said, we're looking at two challenge formats. We are looking at the G20 Tech Sprint. So Benedict, if as kind of leading on the G20 Tech Sprints in the Hub for us over the last few years, they convene an enormous range of participants. They're long form. So from your perspective, what are some of your observations about the G20 Tech Sprint model? And what do you think some of the strengths and limits are of that model?
Thank you so much. I think it's only one box, yeah. So for context, in fact, the G20 Tech Sprint started around 6 years ago now, and the first iterations of the Tech Sprint were run between by the Singapore Center initially, and in the last 3 years have been run with the help of the Hong Kong Center. So the way we run these tech sprints is we work with the G20 presidency and we decide on the area of focus that they have that year. So to give you a bit of an overview, in 2020, the presidency was the Saudi presidency, and the priority was chosen to be regulatory compliance and supervision. And if you go back to this tech sprint, you will actually find it interesting even today, because it explored a lot of compliance technologies for crypto that, of course, are now in use for stable coins, right? So a lot of what was explored there, be it 5 years ahead, is actually relevant probably today. The 2021 presidency was the Italian one, and it was decided to focus on sustainable finance. And this topic came back under the Brazilian presidency, no surprise, because COP this year is in Brazil, so a year after this tech sprint. Under both the Indonesian presidency and the Indian presidency, the focus was placed on cross-border payments and quite some of the topics that were discussed by Martin just now in the Agora context. And this year, the focus is on trust and integrity in payments, with a focus, amongst others, on digital identity, a still unresolved issue, as well as on fraud in faster payment systems. And maybe to set things in context there, a lot of these topics are relevant to our projects and can be indeed bolted onto our project. So I'll come back to this. For each of these tech sprints, we normally define 3 problem statements. That is 3 issues that we think have not been resolved, and that, if resolved, could be beneficial and create certain public good or beneficial outcomes. In terms of the strengths of this tech sprint, first of all, it convenes the public and private side, and obviously, as everybody has reiterated, public-private side collaboration is essential. So this is definitely achieved in these tech sprints. Secondly, it is collaboration through competition. So obviously, the private sector is competing to win these tech sprints. The third is we build bridges with new judges. Through this tech sprint, in fact, we have come across a lot of people with specializations in the topic of that year that later actually also help us in our project suite. And then I would say, in terms of the last and important strength, is success is not measured only in terms of what is won, because what is won is actually a fairly small amount of money, to be frank with you. It is more about whether any of these ideas live on afterwards. And currently, we're actually doing a retrospective on whether any of the ideas have lived on afterwards, and in fact, most have. So that's actually a positive development. I'll give you some examples of things that lived on. So one of the participants in the Indonesia 2022 tech sprint ended up also working on Project Tourbillon of the Swiss Center. One of the participants of the India 2023 tech sprint is also a collaborator on Project Aperta. 2 others of the shortlisted of the India 2023 tech sprints are focused on areas that are actually complementary to some of the Agora-related challenges. One of them is also in discussions on another project, which is Project Aurum. As for the Brazilian tech sprint, the private sector actually brought back some of the ideas that I presented earlier on Genesis. So we saw these ideas of combining blockchain and IoT put into practice for the preservation of the Amazon. which I think is actually quite significant to see these kinds of applications. Now, in terms of the limits, the obvious limit is that the public sector tends to move slower than the private sector. So even though we sometimes see these developments and can work with them, to a large extent, when they move alone, they can still move faster. And I think we've seen some examples of this recently. So with that, I'll pass it to you, Francesca, to talk through the analytics showcase and let us know some of your main takeaways from that.
Yeah, so the analytics showcase was a different beast to the G20 Tech Sprint. It was, you heard Maha, Beju and I talk yesterday about the work that we have been doing on Hertha, Mandela and Aurora. And the analytics challenge, which we ran earlier this year in London, really kind of built off the work that we had been doing across those three projects and asked innovators across the public and private sector to propose collaborative tech solutions to combat financial crime and to simplify compliance. And we wanted them to really focus on three key questions. And I think that's where the point you make about the G20 Tech Sprint is really important, which is that real specificity and focus to really kind of drill into what is the space that we really want to focus on. So in the analytics challenge, we focused around how AI can be used to improve the detection of illicit financial activity, the role of privacy preserving technology in sharing data and intelligence, and how we can, and finally, how we can collaborate on innovative tech solutions to enable compliance with diverse regulations across diverse jurisdictions. And we used some of the components from our work to help support that. And a couple of observations from that, and I want to kind of pick up on some of the things that we heard in the panel a little while ago, was the challenge brought together 200 participants from over 25 jurisdictions. A lot of those were central banks and financial authorities. It offered a way, it opened a window to understand both the art of the possible, but also what was applicable, what was useful. And in doing so, it was quite an efficient way of enabling central banks to come together and examine what they could utilize and what they could learn from. Because it started to strip away any duplicative effort. It removed this sense of kind of, I'll be working in my silo over here and I'm not necessarily picking up the learnings from elsewhere. So in that sense, it was highly efficient to enable central banks and financial authorities to understand each other and understand what was going on. The second point was around the diversity of participants and innovators who were showcasing solutions. There was a huge amount of interest, and that interest was from academia, was from the private sector, was from the public sector. And for me, in terms of actually how that enabled a really diverse range of people to come together and have an entry point to start to showcase their innovation, have that innovation challenged and engaged with and examined and explored, and to hopefully, and I think maybe I can sort of acknowledge kind of the importance of the reciprocity there, which is how those solutions can then be were engaged with and challenged and refined and kind of hardened when they were exposed to the realities of how central banks and financial authorities might use them. And I think there's also a piece which is hugely valuable, and I think this conversation over the last 2 days exemplifies that as well. It's the importance, and we talk about it enough, but I think it's worth underscoring, of creating those spaces for dialogue and conversation. So that, you know, when we talk about emerging technologies, we can go to that level deeper and say, so what exactly do we mean and how might we apply it? And I think these challenge-based solutions enable that kind of real deep level of conversation. The final point I would make, and I would borrow this actually from a conversation I was having yesterday, but I think is really pertinent here as well, is what it does for us, I think, in the kind of public sector entrepreneurship world, is it helps us identify the delta. What is the next generation of questions that we need to examine and answer in order to make sure that the innovation that we are applying our thinking, our resources to, are the right spaces that are really going to be additive for our community in the central banking world.
Thank you, Francesca. So as we mentioned, we're keeping this one short and sweet. So let's move to the final slide. Yes. So in terms of, again, what are the key takeaways? First of all, we think these tech sprints, they go beyond problem solving. They are not just competitions, but in some they help us build bridges with new people, with new solutions, and with really the evolution of the private sector. They enable international coordination and cooperation. So they really fit very well in the mandate of the BIS IH. They provide a public-private bridge. The IP actually for this remains with the private sector. We leave that IP with them because there is no collaboration beyond participation in a competition. And this in turn allows for quite an open collaboration. They provide a very low friction and I would say low effort entry point more than low friction. It's not a lot of work on our side to organize these tech sprints, yet they are beneficial to us and they're beneficial to the private sector. That's actually the last point. They do generate a mutual benefit for both parties involved. Maybe just to close, I think every one of you would have also taken that away from the last few days, is that to be ready for the future, we have to build it together with through public-private sector collaboration and also with academic collaboration. I think that was rather clear from some of what we learned from the professors on AI specifically. I think they're so definitely ahead of my curve. Let's face that reality. And then secondly, the public and private sector, they do not live in isolation, and ideally they should form a symbiotic relationship. And this is what we try to achieve through these tech sprints. So with that, I think we are efficient and we hand it back to the moderator. Thank you. Thank you.
Thank you very much indeed. And yeah, especially thank you for the efficiency. So last item on the agenda. So it has been a very long day, necessarily. So if you'd forgotten, the theme of this year's summit was future-proofing central banks. So what are we ending on? We're ending on future-proofing the financial system. Which innovation will matter most? So Maha El-Demachi, head of the Singapore Center, is talking to Neha Narula, director of the Digital Currency Initiative at MIT's Media Lab, and Thierry Chilossi, chief business and strategy officer at Swift. Maha, please, all yours.
Thank you very much. I am given the unfair task of moderating the very last panel, and I say unfair for a number of reasons. One is, it's the last panel of the second day. You all started at 8 a.m. You're all tired. Some people actually just quit. Seems like they just I've had it. And my competition is the panel that Sarah Breeden moderated yesterday, which apparently you all loved, and you were laughing and clapping, so help me out here, please. We need some energy in the room. But the good news is that actually this panel is going to answer all of your questions. My panelists are going to answer the killer question: which innovation will matter most? Now we've spent a couple of days listening to academics, policymakers, industry talking about innovation, different technologies. What it means, and we've been inspired, we've been optimistic, we've been scared, quite frankly. So this panel is really, we've got someone at the cutting edge of technology and someone who's actually running sort of a very scaled, entrenched network, two sort of ends of the spectrum. I can let you guess who's who, by the way. Two ends of the spectrum to talk to us about, what does it mean? What do all these technologies mean from their perspectives? So let me introduce the panelists. We've got Neha Narula, and I'm talking about pronouncing names. It's Neha, isn't it? Neha Narula, the director of the MIT Digital Currency Initiatives, where she leads MIT's research digital currencies and crypto. Her work explores the future of money and the design of secure, scalable, and inclusive digital currencies. We like secure, scalable. She's been a trusted advisor to central banks and policymakers and is a member of the Federal Reserve Bank of New York's Innovation Advisory Council. So a wonderful CV, and this is just a snapshot of it. Thank you. Thank you for being here, Neha. Terry Colosi, or is it Thierry Colosi?
Thierry Colosi.
Thierry Colosi is Chief Business and Strategy. I mean, after the Agora thing, I had to make sure that the names are right. Chief Business and Strategy Officer at SWIFT, responsible for business development, corporate strategy, and client engagement across SWIFT is one of the, as you all know, one of the most critical financial infrastructures, enabling cross-border payments, connects over 11,000 institutions around the world. And so Terry's leadership ensures SWIFT stays ahead of the game, applying in sort of innovation from AI interoperability and developing sort of infrastructure for the future. So together we're going to explore which technology is going to matter the most. And this is where I'm going to start. I think, is that the right question to ask? Which technology it matters the most? Or should we think about the combination of technology, what would be most impactful, and where is it taking us? Where is it taking us? So can you pick one, or Neha, what do you think?
Shall I start? Okay, first of all, it's a pleasure to be here with you all today. So thank you so much to the BIS Innovation Hub for hosting this incredible event. So I think, when we started talking about this question, I immediately said, it's not about one winning technology. They might all come to pass and be quite profound, or they might not. We don't know. We cannot predict the future as much as we might try. And actually, they might all be combined in very interesting ways. So to me, this isn't really about a binary choice per se. Pick a technology, yes or no. Will it be profound? Will it not be profound? But instead, it's about being prepared for multiple potential outcomes. So being prepared, what is the downside of being prepared? Well, it takes a lot of energy. It takes a lot of investment. There's a lot of technology out there. It's very difficult to become an expert in all of them, obviously. You have to pick and choose. But I think this is the right approach, is to try to think expansively, to try to think about how these technologies might work together, to move away from binary thinking and move towards many possible outcomes and assigning probabilities to those outcomes and being prepared for how those different outcomes might influence what you were trying to do in your goals. So that's my way of sort of avoiding the question. Yeah.
You've done well. But Terry's going to answer it, aren't you?
Yes, I'll take a different spin. So hello, good afternoon, everyone. And I have to thank the BIS as well. So I'll go, this is fireside chat, so I'll go quick. I'm going to say quantum. And I'll tell you a bit why. Because for us, we operate a network, 11,000 financial institutions. I love those numbers. It's about 30 trillion a day of exchange that we facilitate. That's about the world's GDP every 2 to 3 days. So when you operate an infrastructure like this, there are disruptive technologies. We can talk about AI. We can talk about tokenization. But there's one that could disrupt these other technologies in the ways of accelerating them or doing things, and that's quantum. So for us, we have a lot of people looking at that. How do we make sure we collaborate? How do we make sure we stay ahead of the game? Because mission number one for what we do is keeping the system running and safe and trusted. And then, of course, that's nothing to diminish the other technologies, but depending where you are on the ecosystem, there are some of the technologies you have to watch out a lot more carefully for. And then there's other ones, obviously, that are going to help you stay ahead of the game and help you evolve and capture. But
quantum.
I'm sure
it's interesting you say that, because when I go to different forums, conferences, quantum is not always mentioned, actually. No. And given that your network is 11,000 or so, institutions, are you having that conversation on quantum with them?
Of course, and with colleagues from the BIS as well. I mean, there's many. The experts are having the conversation, because that's not an easy topic. I mean, I can't speak about what it is really about. There's a lot of much more clever people in the company that are looking after that. But it's just so that you understand from a strategy perspective, depending on what you serve in the ecosystem, you have a role, and you got to do that role very well. So we do speak about it, but it's not perhaps more in the business. Certainly less than stable coins.
So I mean, you know, quantum, potentially more than quantum, potentially things that we don't even know exist. And with that rapid technological change, we talk a lot about how things are moving so quickly. And we've heard actually just now the private sector is moving really quickly. How should central banks respond to that? What should they do now?
So I think it's really a mindset. So central banks are probably not going to be bleeding edge innovators on the technology frontier, nor should they be. So I really think it's about a mindset where you're preparing to handle the risks and the benefits. You're preparing to handle the risks, and you're preparing to benefit from the opportunities of what a technology might provide. So it's a way of thinking. It's a form of thinking that's asking yourself, what will become possible that was not possible before, right? So we take so many things for granted and how they work. And I think the key with technological change is, okay, how are my assumptions going to change? Let's look at all of those assumptions that I'm making that you might not even articulate to yourself every day, and question, can this technology change that assumption? Can this technology change that assumption? So it's about thinking expansively and creatively and gaming out these possibilities. And of course, it's super important to experiment with the technologies. Otherwise, you don't really know what they are. You can't just read papers about these things. You have to actually get your hands dirty. You have to try things. I think that's such an important thing about what the hubs and their projects are doing. You have to actually try them and move away from trying to predict the future towards being prepared for multiple futures. So even with something like quantum, I would not have picked quantum. I think that's so interesting. And I think that's really great too to hear that from someone who's a practitioner. You know, I think you have to ask yourself, well, okay, what if there's a quantum computer in 5 years, 10 years, 20 years, 30 years, 50 years? What are the effects of that going to be? What, you know, how do, you know, breaks some cryptographic assumptions. We have other forms of cryptography. Really interesting questions there. So. Yeah.
Do you want to go back and answer the first question? Because quantum, and now you said you wouldn't have picked quantum.
With my answer. I'll stick with
my
yeah.
Fair enough.
I won't succumb to the pressure to pick one. Yeah.
So Terry Swift.
Yes.
I mean, let's be honest. When we think innovation and cutting edge, we don't think Swift, right?
Oops.
Yikes. But there's a message in here, isn't there?
Yeah. There's a message.
I mean, you know, it's a large organization. It's entrenched. It's a network that we all rely on. But you have to think about innovation.
Did I just thank the BIS for inviting me? No,
give us some concrete examples,
I'll give you concrete
of what
examples.
Swift is doing, because I think it's really interesting.
Because we're very happy to be challenged in this space. And like you said, when you run an existing network, your first part of attention is making sure that it works day in and day out. And I'll challenge what he said, because a lot of what we do, it's sometimes like changing the airplane engine while the engine is flying, right? And so you don't have the same liberty of that other parties would have, which is to completely disrupt and start greenfield. So the way we think about innovation is really with that, you know, that airplane analogy in mind. And that obviously makes you a lot more cautious in the way that you approach innovation. But I hope that what I'll tell you will show you that it doesn't mean that we don't innovate. So the way we innovate is definitely a lot more incremental, responsible, we call it, in the way we do. Let me give you a concrete example. We're facing all the industry right now a migration of data standards. I was looking at my numbers right now, 11,000 institutions that you have to move on one day to a new data standard. And that data standard is the foundation of all the new systems. And if you don't get that right, well, sorry, forget tokenization, forget everything else, because you're not going to build these new systems on poor data quality. So you're going to need to start making sure that the system and what feeds whatever the future system is of good quality. I'll take the use of data right now. And so we're in the middle of a migration process. We're tracking where the community is about 60% in terms of volume migration. We got to get to 100% by November. What is an incumbent innovator do? You really make sure that that happens. And so you have backup systems, you make sure that not all participants will be ready, you prepare for the scenarios of making sure you can accompany the whole community. And that's a bit what we're laser focused on. And then you build innovation on the side of the core systems. You build layers because you can, I love the analogy of modules and cars, because you have some systems that are less critical than others, and then you innovate with this layer of services. So the type of innovation, for example, the tracking of payment end-to-end, problem with we innovate, and then once the thing is out, it's no longer an innovation, but you got to worry about making sure it is used. So I saw a lot of conversation here on collaboration. Collaboration, it's very good. We need to move collaboration now to commitment, to actually doing something. And that's where it is really hard, because you're trying to change, establish technologies, establish business models, and you need commitment to get to the next phase. So the way we do innovation is in two ways. We continuously increment the existing, what we call now the fiat rails, and then we're looking how do we prepare the world for what could be the DLT rails of tomorrow, right? But it has to be a dual approach, and I think Victoria said the same on how the Bank of England was looking at things, which was also improving the current system while you prepare for the new system.
And I think that's, it's a great analogy for central banks, because they do need to think of, this infrastructure that is already there, that's running, that's deeply entrenched, and how do we think of innovation within that? So that's a great example. So let's think about the future. We've got a crystal ball. We've been hearing a lot about what AI can do for us. Potentially this conference isn't going to exist because all of our bots are going to come and we're just going to be home and not really participate anymore. Or maybe tokenization is going to take over the world. What do we think the future financial system would look like? Would it be the same players? Would it be the same dynamics? So let's start with that. If we don't intervene, we let things happen. What would the future financial system, do you think, look like?
Well, I think the only constant is change. So I think it's not going to look the way it looks today. We're talking about innovation, and we're talking about organizations both trying to preserve and move forward. I think there's an inherent tension and conflict there that needs to be acknowledged, and that it's very hard to do both of those things at the same time. It's hard to do both of those things within one organization. I think one is going to win out over the other. It's just really, really hard to do both of those things at the same time. And so what we've seen historically is that a new set of organizations emerges. Maybe those new organizations start to rhyme with the old organizations. So it doesn't mean that they and old organizations can absolutely evolve and can move forward. I'm teaching a class this semester at MIT called Cryptocurrency Design and Engineering. And in addition to that, I've been doing a lot of reading about money and the history of money. I'm a computer scientist, so this isn't something I learned in undergrad or in graduate school. And I was in the talking to economists and talking to central bankers today, it feels like central banking has been around forever, and it hasn't. It has not been around that long in the grand scheme of things. Humans have been transacting and moving money for millennia, and central banking is only a few hundred years old. And yet we take it as just for granted. The United States was on the gold standard 54 years ago. Things change. And I'm not sure that even if we are in the optimal design for a monetary system right now, even if we are in that optimal design, which I think we could have an argument about that, technology is changing. People are changing. What we know to be possible is changing. And that will affect the architecture of a monetary system. I don't know how, but it is going to affect it. There's some things there's going to be more automation, there's going to be more speed, there is going to be more people participating in different ways. I don't know exactly what kind of future that's going to create, but to me, it seems inevitable that there will be a different future.
Terry?
You really picked us well. First, I need to come to your course. Because I spent the past 3 months really with a team looking at tokenization and all the potential that, and you said the constant is change. What I tell the team is, whenever you're faced with change, also think about everything that doesn't change.
True.
Okay? So trust, security, the way that you actually give certainty, whether you're using, well, I know, central bank money or commercial bank money. Those principles, the compliance controls, those will not change, right?
Maybe should not change.
But should not, at least in our vision, the way that we want to see the next 3 years. I cannot predict a bit longer than that. It should not change, probably. And the way we're looking, and back to the question of innovation, is how do you preserve those same assets that you have? Because you want to believe there's a new way, there's better ways to do things, and that's what the new models show us. And so how do you transition to those models while you keep the same, if you will, assets and controls you have? And some of those may not be the right ones. I'll give you an example. Because we're doing a large-scale study to see how do we improve cross-border payments everywhere, to show you that it has nothing to do with technology. And in some destinations, so we rank the countries in terms of difficulty on what we call the last mile. Because when you look at that chain that Morten showed with the banks, 80% of the friction is on the last mile, right? So if you want to solve cross-border payments, you got to fix this. First mile and last mile, I'll come back to it. And then so we went to 40 markets, and we interviewed the biggest clearing banks that are in these markets. We interviewed the market infrastructures. We interviewed the policymakers, and we came up with the list of friction points. And you have some markets where cross-border payments arrive, and the banks pick up a phone and call the customer and said, you receive a payment. Do you want to receive it? Now, tokenization is not going to solve for that. And there's a reason why these rules are there, very sound reason. Or another example, the money arrives, it's in a different currency. The regulation requires you to call up the customer to see, when can I execute the FX? So you have to execute the FX, it's 2 days later, and you get the payment. So when I explain this to you, some of you have said, well, these are very strange, right? But these are not technology-oriented. These can be solved exactly with the same system. These are policy level or market practice level. The benefit of the new system is they show you what is possible. And they put a mirror in front of you and they say, why are you actually doing this when you could do it differently, right? And this is where we all have to learn from the disruptors, but also whatever new is coming in needs to make sure that it accounts for the processes that are in existence so that they can be sustainable. So those are some of the, of the information I wanted to share a bit to give the perspective on that it is not just only about the technology layer, and I think it was said, it was the process layer. So our view on how best we go forward is really to try to combine the best of both worlds. You have the experts that are working on all these working groups. They have this competency, the screening. And where I see the challenge that we need to do differently, there are so many layers to be tackled. And if we try to tackle all of them in one go, it's going to be very difficult.
Well, so, I mean, a lot of your answers are around how we respond and the action that we're taking. Is there a future that is uncomfortable if we don't take action? This is a question that central banks ask themselves, What action do we take? Where do we take it? Do we take it? And I think it's already been agreed that not taking action, not doing something is a risk in and of itself. But is there a world that scares us, that makes us uncomfortable, that we need to be thinking about?
Yeah, I have many that keep me. The one word I would say is fragmentation. Mm-hmm. That's the one that comes to my mind. Because everybody's well-intended, everybody's doing project in the same direction. However, when it comes to collaborate, they collaborate, but when it comes to commit, we don't commit. Right? We have to move to the action stage. It's not just about sitting, designing, having great ideas and say we support. At a certain moment, we need to take the position to do that. And so that's one thing that is there. If you add geopolitics to that equation, it becomes even more complex. But there is a positive, right? There is a positive. And I think all the innovation that is happening, the fact that this is top of the agenda in many institutions, I'm pretty positive that we're going to be moving forward. It's just that we got to do it in a way that is a bit more rational. If you're looking at it from an ecosystem perspective, it's very rational when you're looking at it within your initiative.
What about you, Neha? What world makes you uncomfortable that we might get to if we don't take action?
I do think that we are at the precipice of a big change with AI. I do think we are at the beginnings of that. This is part of a longer arc of technology change that happened with the internet, with large-scale computing, with data analysis. This is many things feeding into each other that is sort of materializing now in a way that we can kind of see, oh, this is getting better, a lot faster than it was before. And I think as humans, we're not necessarily very good at predicting exactly what kinds of changes will result from these large technology changes. So I find it helpful to look at the past. So we did not necessarily predict that social media would sway entire political elections. We didn't necessarily predict that nation states would be using social media and disinformation campaigns as a form of cyber warfare. We didn't predict that people would be addicted to endless scrolling on their phones, the endless river of information on TikTok and Instagram and Facebook and Blue Sky and X, and exactly. And the way that advertising and user behavior modification would kind of evolve and work. And I don't necessarily bring these things up because I think that central banks need to work on those problems exactly, but I think they're examples of how technology has already changed and surprised us, and it will continue to do so in very hard to predict and hard to understand ways. So that's what I worry about is, that's going to happen faster and faster, and how do we even begin to get our heads around it and to create the appropriate public sector levels of accountability to manage it.
So do you think that there's some sort of technology that we're not aware of that's emerging that we should be aware of? Because you're right. We're not very good at predicting the future. We always look at it from the lens of our current world. Do you think there's something that we should be aware of?
I wish I could predict the future.
We all do.
No, but the point Neha made on, I like the way you framed the technology. It's not like none of them are certain, right? They have a continuum, and they might accelerate very quickly. And our job, at least our professional jobs, if you were to ask me on my private life, I'd say AI. On your professional jobs, you got to make sure you assess where you are in that continuum and what's your appetite for being bold or for just waiting and see how it happens. So there are many different technologies coming at our frontier. Mm-hmm. They kind of build on each other. I was quite impressed with what is possible with confidential compute in the environment where we are, because in the environment of geopolitics where nobody trusts us, nobody else, having a technology that allows you to share something without really sharing anything that's my simple definition. Sorry. So it's really powerful. It has value, right? So I think there's a lot of collections of when you really look at the expertise of everyone of technologies that can disrupt. But we had like a grand plan here to say how we future-proof the whole financial system. So I think we're trying to stay a bit more at the elevator level.
Well, I think we need to move now into the actual, steps and actions that we should be taking. So, given that, some technologies are much more immediate, we're seeing that we're moving from proof of concepts to actual implementations and pilots and things. Some perhaps are more sort of more future technologies that will hit us in the future. What steps should we be taking to be prepared in the short term, the medium term, and long term? And both of you, maybe a call to action is what I would ask in the last few minutes. So both of you will need to answer the question. So who wants to go first?
You go first, because I need to think about it.
Okay. So short term, I think, and I've heard this echoed throughout the day, I think there's a real potential to act as coordinators, to coordinate stakeholders. So thinking about that, creating that Schelling point, thinking expansively about how to use your great power as coordinators. Medium term, a pet peeve of mine, I think that they're going to need to be way more technologists involved at the highest levels of central banks. I think technology is too important to discount. I think there will be central bank governors who have backgrounds in computer science. I think that's going to happen. So think about what that might look at. Oh, thank you. And then longer term, again, just do not be afraid to imagine a different future. Don't take things for granted. I think that these institutions are so privileged and so powerful. You really have the ability to question whether something is the best way to do things. And you don't have to assume just because we've always done them that way, that that's the best way. I'm not saying you have to act on that, but at least ask the question, at least understand that. And I think a great example is compliance. I 100% agree with Thierry that there are certain things that will not change. Physics, math, human nature. I think these are things that at least do not change very frequently. Okay, it takes a lot for them to change. So we can kind of take them for granted. Gravity, probably not going anywhere for a while. But AML and KYC, no, 100% no. It's not clear to me that things have to work this way, that they are the best way to work. I think we should question the underlying assumptions we have there, and we should ask ourselves whether we can design something better. Yeah. That's a better point in the trade-off space.
I like this last point.
Okay.
That's the benefit of going after, is I don't have to say too much. But I'd go on the talent, on the knowledge space as a call to action, because I'm now reflecting my recent journey and trying to understand everything's happening in the tokenization landscape. And it's amazing the amount of skills that you need to put these things together, right? You need to understand the technology, you need to understand liquidity management, you need to understand compliance. For God's sake, we're rediscovering money right now. I mean, nobody thought about, on the SWIFT network, whether it was a euro or a GBP or a Japanese yen flying or any currency, we didn't know. It was just flying through the network. Now we're re-questioning what is this definition of how a transaction is moved across borders. And that's a bit of a skill set. You got to go back and really make sure you understand your basics. So my call to action is, for us that sometimes are expert, it's really important to widen our knowledge, because we're going to need, central bankers are going to need to know a bit more about the technology or about how the world operates from a participant's point of view, and so do we. So my call to action will be that, really make sure that the more you can see the full picture, the better you'll be able to serve your institutions.
Well, look, to summarize this, I think I won't be giving it justice, but I heard things like be prepared, think expansively, the mindset, preparing to benefit from the tech and challenge the assumptions that you have today. Try new things. There's going to be change, but we need to think about what shouldn't change. Maybe it doesn't change, but the method in which it's done might need to be different. I love collaborate, but also commit. So it's collaboration has to have that commitment to it. Coordinating stakeholders in the short term. More tech at the highest level, and that talent management that we're talking about. Everybody needs to be fluent in this language. And imagine a different future. So I'm very privileged to have moderated this last panel for the day. Thank you so much for coming and being here. Thank you very much for sticking with me. And I think we're done. Everyone done.